right, hey everyone. I see we've got a couple people in the chat. Hi Chives, hi Bob, and welcome to the stream. Welcome to annual meeting of stakeholders, and I call into action the annual meeting of BlockTran Syndicate. Looks like everything on my end says the audio is going through just fine, and excited to get the start on a recap for a pivotal year in the company and future growth prospects, based on a lot of the excellent questions that came through from the community. So thanks so much for being here. Now, one thing that I think everyone can agree has been core to the entirety of the last few years, and at least myself this last year personally, has been that there's just been so much to do in every regard, as there always is. But it's been, I think, a big one in that it was probably the first big year that everything really made sense on what needed to be worked on, and I had the operational capacity to exclusively focus on building out the technology without some of the legacy distractions that exist in just the society that everyone, at least where we are, just the world around us that sort of forces you. Myself, I was very directly, and I started this project, this company, and everything around it in college. And so I think it's certainly a meaningful part of the story, in the sense that, I never really super duper wanted to go to college, but it was just this thing that was sort of given as the next step after high school. And it was the default that you, at least, for myself, my family, is like, we're going to do this and this will be what happens, which I think we'll see work its way into some of the stories as we get into some of the questions about the time and the origins of the syndicate. But all that to say that for the first couple of years, obviously I was still a full-time student with over 20 credit hours every semester, and we'll see that work its way into some of the tech developments and how it shifted once all that was over and I was really able to start working on everything full time and commit entirely to it, which is what we were finally able to achieve last year, which is awesome, and start to see some of the benefits of building in the way that everything's been designed. This is my first meeting of any stakeholders. Obviously, the first company I did in high school didn't have any investors and never really got its feet off the ground, so to speak. I've learned that I'm not an especially awesome central manager, and definitely don't have a whole ton of experience with that, which is, I think, what uniquely positions me, in the egotistic way that I get to talk about myself, to lead this more decentralized effort that really is grounded first and foremost in the community and the technology, rather than subservient private interests. Because over the years, learning more and more about DTC, it just became very, very clear that those private interests could have very negative externalities and costs on the market as a whole. And, I'm just very thankful that we have the opportunity to right these decades of wrongs, is putting it very, very nicely, what has happened, because it is something so crucial. So I do have a brief agenda. It's interesting. Part of the inspiration for this meeting in general, since it is sort of the first time we've done it, and it's not the, I don't, at least I've seen my fair share of corporate annual meetings for public companies, and it's definitely not going to be in the same style that anyone might be used to on that front, because it's just not the path that the company went down. It would have been, and surely we'll get into this history in the past, but just at a high level, there could have always been this route, this alternate path where, we raised money from venture and just hired people, and perhaps we'll dive more into it, but just at a high level, the early days of trying to centrally organize all of the work and efforts, which in itself is its own task. And I see so clearly how people managers sort of have that as encompassing their whole day, just because it is quite the material effort to figure out what it is others need to do to collectively come together towards this comprehensive vision. And part of the exciting work, I think, for this next year will be more public documentation of that vision and the objectives and the goals, and aligning it with the same values and missions that a lot of everyone in the community has, and putting it all together into a cohesive picture that we're all working towards together. I think we're already pretty much there for the most committed members. Just getting it down in black and white will be, I think, the most exciting work this year in taking it to the next level, because new people can come in, especially new people that are already familiar with the efforts, but maybe they don't have the time to sit down with, first of all, meet some of the more dedicated members of the community, and then, have those in-depth conversations just to learn and understand what it is that's going on. I found that just putting things in writing makes it easier, and also it gives people an avenue, especially the more dedicated amongst them. It gives them an avenue to go and explore. Like, for instance, I recall all those first videos on my personal YouTube of the stock lecture series, and all the time commitment that was put into that, and even just directing people towards that today as an educational resource. It being, someone can look at it and say, oh, this is 10 hours of content, and on the low end, and seeing it as that hurdle of time that is more. And I like the difference that we achieve in writing, and I like writing more as a creative outlook and expression, in the sense that you can sort of skim through things. You can ask AI to summarize things. You can get the high level while still having all of the granular details that I think matters so much in comprehensive disclosure writings. This, for instance, will go on for as long as it takes to answer all of the questions from credible viewers like yourself, and that can be quite the effort. And I'm so happy that everything is working well on the stream. And it's a stream that just keeps going. I mean, it's like the sessions of Congress, the far too many sessions of Congress that I've watched over the years. It's interesting. It was only a couple of years ago that I really went back through all of the GameStop hearings, because for me the most interesting thing has always been the development of the digital asset space, what they're doing on crypto, and indeed their approach to financial services and technologies. Financial services is definitely something that I think will come up in broad sense often as we discuss some of the more the nuances of whether or not these really should be services or not. So it's interesting. I do see a comment here in the YouTube chat from James. I think YouTube is pretty interesting. Obviously it's got a lot of precedent on so many fronts because of its steadfast reliance on advertising as a business model. A business model which, for as I understand it, was over a decade that YouTube was in the red. And thank you, Charles. I just really appreciate what they've been able to put together, so that anybody can. It took me 5 minutes to set up the stream. I barely even configured OBS. I don't even think I've set up the desktop screen sharing for some of the later agenda items based on the questions. But it's just clicking the couple of buttons and being able to put things out there is that's the definition of permissionless, I think. And there's a little bit of gatekeeping. Like, I know it's like upload your ID if you want to do more than 15 minutes, or have a channel history to do more than such and such, because there are like these bandwidth and compute costs and things like that. So in a perfect world, I think it would be awesome if things like this were able to be self-hosted and put on like a streaming service controlled by the community. And I say that in the context of the annual meetings for the issuers that eventually use the system. The system being tab 3, all the work that's going on, I will assume basic familiarity with these concepts unless the questions lead otherwise. And if they lead otherwise, then I'm happy to expand on absolutely anything that comes up. But I think it would be really useful to have a new place, because right now the way that these meetings work in terms of just company shareholders coming together, it's just unfortunate the way that it's branded. A lot of the times it's done in a very centralized manner, where the replays a lot of times are not often distributed, and through maybe a proprietary portal. There are some, I'm not going to name platforms, but there are some platforms where it feels like I'm using a 2004 terminal interface to the web to try to pull up some very old style stream. And I do like how the encoding onto YouTube is really simple. Using like a free OBS instance, you can get it set up. really easily, especially if you have like the syndicate as a tabulator, the person, you have like a representative in there just reading off the blockchain votes and also screen sharing over to the public stream on what's happening. One thing that I always thought of is that this would be very deeply ingrained into issuers.info, the disclosure platform, which is so deeply embedded into a lot of the GitHub where for block transfer, there are questions on the repositories, intermittently on the repositories later. And I definitely think the main ones that were the most effort over the years was the original Python TAD3 Horizon instantiation, bar none, as the one that will have more stories as it goes on. But then the issuer disclosures, I think, is also just such a key part. Talked about it quite a bit. Something that just needs to be done properly, because it's just like how the accounting is something that every company needs, and making sure everyone has the right shares. It's the same thing for these annual meetings, and I noticed that early on in reading through all of the regulations for transfer agents, because so much of it is based around that annual meeting. It's like all these very statutory definitional procedures that presumably came out of some of the original exchange regulatory, like self-regulation. And it's something that I think it's really exciting to have that now. If we can get that control of those rules back into the hands of investors and make sure that they're done on systems that are actually accessible to everyone. You don't need to put in your meeting password. I think it's so silly that there are instances where you want to learn information about public companies and you can't really interact with the management, and you can't actually look at some of the, not the financials, thankfully the regulation very strictly says the financials need to be public, but some of the past meeting materials, things like this, that maybe sometimes having an audio conference call, it would take some reasonable cost to make that available, and so there would be some gatekeeping behind it. It's just not necessary anymore. It's just not necessary now that we have this digital abundance. And to the extent that it's reasonable for the amount of shareholders in a company, I also really like the concept of just taking general public questions in a meeting instead of going through rigid shareholder verification. And then the verification is all very centralized too. I'm sure there's a way you could spoof some of the existing meeting sites, but just in general being accountable to the public, because the public is your prospective investor for any company, right? If the systems are efficient enough to attract and record any investor anywhere at any time, then for these companies at any moment, they could say the right thing and that could make a click in someone's mind, and then they go and decide to invest a certain percent of their portfolio into the shares, and it just seems so much more efficient. The capital would be allocated based off of all factors available at the time, and instead of only the people that are in the rooms where things are happening, only the ones that have that back end influence or insights or stories. It's just, we've seen the vast swath of history around insider trading. It's just, I don't think, a great way to establish a securities market. So, like I said, I will go, though, as the YouTube ones come in live, just because I have it right in front of me, and the other ones I have also up in the flow of things. What feedback, James asked what feedback we received from our early clients. Funny enough, just got an email this morning. It is sort of a syndicate email, right? So it's something internal, back and forth between a block transfer address. For a little bit of transparency as to how things like that work, I'll discuss briefly what communications look like inside the syndicate. The goal of these strategies is to just promote compliance and to ensure transparency in the case that anything is audited by the SEC. We have not been audited yet, same as a couple of years ago when that question was asked in a private form. And eventually, though, that will happen, and just want to make sure all the ducks are in a row for something like that. So the way that communications work, just first and foremost, top of my mind, is that nowadays all of the meetings that we have, you think of it like a Zoom instance, but we have sort of this custom Zoho integration that deals with everything that we need, at least that I think would be necessary for the syndicate. So it's got the emails, the meetings, the bookings, the shared file drive, CRM for everyone, and a whole bunch of other apps. It's a cool software company out of India. It's proprietary. But I think that's part of the deal that you make when you decide that some things need to be private, some things need to be just held at the company. I think it's a very, very fine line between things that are open source and free and things that are more designed to allow for a central organization to take place. The goal for me has always been from day one that the syndicate be the smallest possible central organization. And that's one of the large reasons that we never took on outside capital, because the moment you do, now you have a fiduciary responsibility to shareholders. Even though technically there is a fiduciary responsibility intrinsic in me having all the shares in the syndicate, that will soon, the plan is to soon do away with that. On that note, we just issued, did not just issue, but I am now here in this meeting bringing up voting item 1 for the discussion, and I will need to share my screen for this. This is to move forward on having the syndicate's shares represented on the Stellar blockchain, using block transfer as its own, acting as our own transfer agent. In this instance, I will, if you'll hold with me for just a sec, I will add the display here. I'm not sure what it is that didn't let this one work, but it's completely okay. And here we are on the display. Alrighty, there we go. Alright. So moving forth on approving transaction starting with 9404 FAD6 ending in ED794BB. This transaction puts the shares for the syndicate on Stellar, and in approving it, I am hence authorizing us to act in all full terms and conditions of block transfers, standard issue arrangements, which will be documented and signed offline in post-amendment. I also need to amend the corporate bylaws to deal with some of the nonprofit relationships that we will most likely get into later in the meeting. But just for now, I wanted to bring this up, put it on the record here in the meeting minutes, and now we have that documented, and we have this hereby formally approved by all members of the board, which is myself. Great. So that will be submitted soon enough, and then we will have the syndicate shares on chain. It will be recorded in ownership under my name, so that we have that under my account, so that we do have that public record of ownership. It's something that I haven't done up to this point because of that discussion that I just had on raising capital. So the whole point of the platform of TAD3 and also everything built around it is raising capital by and large. It's about connecting companies with investors. And so from day one, I never put the syndicate on that platform, that disclosure platform, just because I knew that we weren't going to be out there selling shares. And that's sort of the main thing with it, is to comply with Section C211, which implicates some of the other regulatory work in 144, which we came up. Yes, Chives is, excuse me, Bob is right. It's unanimous, and it sounds logical. Thank you. But now I think I've got the confidence to do that, knowing that it's not there for fundraising anymore and it's just for public transparency. Happy to do that, and then it'll make more sense, I think, once the YDRS wallets start getting set up. I've been trying to generate a public key that starts with DRS and ends in Chives for like almost 8 months now, and it's a hard one to crack on my CPU. Midway through the generation, my old computer, which is under the desk, can't see it, it sort of got bricked in a lightning storm. So then I got this other old one that I built and brought it in, and now it's got a slower processor, and I haven't been able to do it yet. So Definitely on the way path, but just another example of something that is sort of myself. I've seen myself quite often in this last year as the bottleneck. Now that things are really starting to open up, I look back over the early years of work, and I certainly see how things didn't work because of certain management, certain incentives. But now all the incentives are right, which is super. It's awesome. I love it. And it's very clear that I've become the bottleneck for progress. And that's the whole point of all the work this year and making things a lot more public, documented, and decentralized is that, everything just keeps moving forward. And so, anyway, to get back, now that we have that taken care of, to get back to the feedback from early clients, yes, so obviously on issuers info there is a second issuer, and that is Laylor. They've been there for about 2 years now. They're a company that reached out, and I've gotten this in writing, so I'm happy to get it in an explicit form here. I want to check if it was $60 or $80, so I can give everybody the right number here. They are, and this is just public information that is on the site. Public information that's either on the site or this is in other public information. So none of this is MNPI, but they're a minority-owned business out of South Carolina, and as a transfer agent, there isn't much more that I feel comfortable publicly saying about any particular issuer, just because, again, very explicitly. Okay, so there it is. Great, I've got that message from March 21st last year. Every client, right, of the transfer agent, you can't show preference for it, and I think everyone's sort of chatted about this before, and so I can only I try to only speak very broadly. I've never had anyone at the commission talk to me about this particularity. They have been very helpful, especially on 144. They had a staff lawyer chat in that was November of 22 that they're very helpful. You can ask them specific questions. They'll get back to you. There's like a public forum. Most of the questions that I've gone so far are through the, if I remember, the Division of Corporate Finance. I found that the trading and markets guys are a little more tight-lipped because it's just there's a lot more regulation around trading and markets than corporate finance. And there are a lot more quite nuanced implications for anything that staff do say on trading and markets, especially given decentralized exchanges, versus the corporate finance guys are pretty awesome. And they've helped on the 144 part, which I cannot express enough how big of a problem that was back in late 2022. Personally interviewed 50 public American CFOs or equivalents. Sometimes it was CEOs, but by and large, from the finance side, there were a couple of calls where the heads of the stock admin joined in as well, so we had a couple people on board, and I just can't express enough the real ongoing material problems with how Rule 144 is handled today in American securities markets. It is hardcore legal paperwork every single time that they want to divest a share and put it out in the market for an executive, even though there are very cut and dry rules documented for exactly what needs to happen. And so just as perhaps a humorous aside, I will go into tab 3 and see just how many times 144 is mentioned, because I know it is something over the years as I was building it that became very apparent. So I've got it 11 times, and of course, yes, most of the time it's mentioned in global variables because it is very deeply ingrained in a lot of the work there. And that's another reason that I am excited to open source. First of all, open sourcing has been awesome, a great experience, and I will dive into that in a moment. I want to address all of James' comment, and then I'll come back to that. But one of the big things is that there are, I've done all this work on one country's regulations, and there are how many dozens, hundreds of other countries that have their own little peculiarities for local investors. And so I remember the first Stellar Community Fund round, which I'll refer to here as SCF. There's like one question that I think sort of brought a lot of question and pause to some of the reviewers that were reviewing that grant application, and it was the international investor compliance. And this was very early on when I'd really only mostly done American securities laws work, and there was a question about some French regulation for investor protections. And I mean, these are things that I think should be solved by French developers. They care about the system, they care about the investor protections, and they can incorporate all of these different jurisdictions into this comprehensive universal protocol that works for all stock transfers, and then allows us to then build governance on top of that. Because, I don't have explicit evidence or cases to support this, aside from some of the extra jurisdictional cases involving offerings of American securities on foreign exchanges that led to, like, there are some examples of pension funds not having the proper investor protections because they bought through Swiss exchange, and that's a really big problem. But there's also this whole swath of completely unknown regulation for the millions, billions of people that live in quote-unquote third world countries that just don't have securities laws because they don't have very good capital formation. And so I think we have this incredible opportunity to finally give them capital formation, give them access to a financial system that allows investment in their own projects. And with that being a new thing for a lot of these environments, then it will need to come with that new protection that I think it is our responsibility to put into place as part of the operating ethos of the underlying protocol here. And then on top of that, as a trusted authority, in the sense that the syndicate, while it doesn't actually do any of the record keeping, right? That's all on Stellar. It doesn't actually track, once you claim it, once you claim from an old transfer agent or an offline offering, once you actually get it on chain, that's all in the hands of the blockchain. But there's still sort of this brand that I believe is almost inescapable that will form around block transfer, in the sense that a lot of people will not understand the nuances of TAD3, and they will just see the brand logo there and say, oh, okay, this is trustworthy, this is good, this is and that's something that we'll need to have. You want to give the investors, I think, the experience that is good for everyone. And that's exactly what I've tried to do here, James, with this first client. Because as I understand it, this is really the first shot of a truly decentralized stock market that anyone's ever done. And I just, without naming names, I can think of so many things like that had a rocky start in history, that were sort of new technologies, and that has an impact on, I mean, there's not a person you can talk to who I won't name names, but when there are negative associations with the early days of technology, it's just not a good recipe. And so with this first client, I have done everything to really put forth exactly the kind of relationship that I think we should maintain with issuers. And that relationship is as follows. So, first of all, the way that we came about this client was from an $80 spent on a Google Ads campaign over the course of like a week and a half. It was just a cold lead that showed up on our website, and they opted in for an email form, emailed them, a couple emails back and forth, got the phone number, we had a call, and after that first call, everything was pretty well in vibe. The thing that hooked them initially was just the low pricing. The comparison here of what they would normally do for just a private company cap table is very, very easily thousands of dollars a year, and mid-thousands of dollars a year at that, and only goes up. It's just not efficient. For a central company to keep a record, and they're not even oftentimes regulated as transfer agents. They don't even have the investor protections that are built into the work that we do. I will say that the laws are not entirely clear, and this is part of the TAR work. They're not entirely clear about the delineation that SEC registered transfer agents need to make between private and public companies. And you'll notice we filed Form TA2 along with our taxes about a couple weeks ago, end of the week. And all of the numbers on that SEC filing include Laylor. They've included Laylor since they were brought on. And it is my interpretation that the transfer agents who have private clients that have not done registered offerings, because what is being public except having a registered Section 13 or 15G offering with the commission? They count under the broad umbrella of all of the investors, all of the clients, all the issuers. And so I treat them like they're one and the same. I don't see a very material difference between a private company and a public company. And in the context of what it looks like from a corporate sales cycle side, I really see every new startup that comes into the ecosystem as just a company waiting to be public. And it might be a decade before that happens, but with the right support networks, which I'm happy to touch on later, but it's more on the community side. So a community separate from the regulation, separate from the DRS, a community. This is like a common thing, and I'll do a sidebar here, and if there are more questions, we'll go more into it. But there are like plenty of startup accelerators, so to speak, where founders come together and they work together online and they chat back and forth and bounce questions and work, on things together and just have a community around it. A lot of that today is very gate kept. You can only get in if you know somebody or a central group of investors decides that they want to have a stake in your company, and then you can meet their other companies, and people are free to do that, but I think there definitely needs to be one that's a little bit more permissionless and more open and accessible to everyone. I haven't thought through too much the branding on that or the approach on that, but it's always been the back of the mind since I started a Discord server for the syndicate, which has since migrated a little bit more towards Tab 3 development. There's more to that, there's more thoughts to that there, but just to get back to the main point here with that first issuer, I really do just see a very clear path of growth for every company that uses TAD 3, in the sense that if they succeed and if they can get the capital they need, and they do have the right ideas and the right founders and the right backgrounds as a group of central actors, if you just give them what they need to succeed in terms of capital and they go out and make their projects into a reality, then it's pretty much a cycle. I don't think that it's very rare, in my understanding, that a company raises a small round from initial very, very early investors and then never raises any more money, unless, of course, they fail. If they're doing well, they want to keep growing, it's a pretty natural inclination to keep raising capital. To raise that from that next group of investor, you start with private placements, maybe you go up from private placements to general solicitation private placements, and then maybe from there you go to a Reg A or a Reg CF offering for the American dictions. I know that those are not well established in other jurisdictions, but I do appreciate the thought behind how they're designed. I like the disclosure requirements that sort of gradually step up a little bit more and a little bit more. One thing with the secondary market side of things on the issuer disclosure platform is that there's always been this very important adherence to having a public profit and loss statement and a balance sheet, two requirements for the release of shares under 144, and just generally I think good public information to have released on a regular basis for investors to understand the value of a company instead of just sort of guessing off of what news they can piece together from the world around them. In the original agreement with this first client, there were, in the contract we have with them, a clause about having quarterly P&Ls and annual balance sheets submitted, and they got that in line and they were super on board with it when we overlined the terms, and they got in line that P&L, which is public on the disclosure platform, but they never really, just like as I've said publicly, they haven't, we haven't really had compensation. You can see in the financial statements that we don't have revenue from anyone, including them. They weren't able to keep up with publishing those financials. Largely, and this is something I've seen too, just running everything myself these last few years, largely I think because it's a lot of work to do a startup. It's a lot to happen, and a lot of times even just getting the taxes done can be a big drain out of the year, and it's a lot of the same information that's in taxes, like is what's in a P&L and a balance sheet. So I think it's like a reasonable thing to want to have, and pretty simple to do. And I appreciated them with that initial release that they did, and ongoingly. It's just something that anyone who wants to invest in a company would naturally want to know, this kind of basic information, which is outlined by the commission. And it's always been a core piece of it that made me think a little bit more about the nature of these services, because this first issuer I just talked about some of the nitpicks, so to speak. It's just an early stage company. They've always been an early stage company, and well, at least for now, and that's just based on the public information. You can look at how their website has changed over time on Wayback Machine, and it's really inspirational. I've had really great conversations with them, which I would consider to be MNPI, and so I can't. I try to avoid discussing any direct relationships like that specifically, but just since it is that first client, I'll talk a little bit about why it was so meaningful. So we've been having conversations back and forth from that initial Google ad campaign for really about a year and a half. And I'll tell you, I see if I have the time frame. I don't have the time frame here, but it was definitely when I was still in college that we did this particular Google ad campaign. And it was, again, just to prove to myself, I think, that this was something that was easy to sell if you just priced it right. Because part of my thesis from very early on is that this was a commodity service that just needed a real change, a real innovation. It doesn't have to be a commodity service, right? We can build all this incredible technology, blockchain, security, authentication, everything on top of it and make it way better. But the way it exists today, it's largely a commodity service. Everyone offers the same kind of record keeping compliance. And that's, I think, part of my own bottlenecking of our sales efforts. I was on a call not a few days ago when we were discussing a meaningful offer for a different issuer. And I keep kind of backing myself into the wall of compliance because so much of the front end interfaces are not existent yet, which we'll get into with some of the questions. And so just need it's the sales process of piecing everything together that I just want so deeply the technology to enable, and something that we'll get into. But the point being was I wanted to verify that thesis early on, that it was really similar across all boards, because I just offered them the bare bones of what you would expect on a cap table management, with setting things up, and we had a free, back then Persona had a free tier, and we were just plugging it into the website where there was an investor form to fill out their wallet, and they would download, and they still, the everything I'm talking about is presently on the website for the syndicate. It's on the investor page. If you want to go and open an account, it's just the basic personal information of just to keep track of the investor, and then their wallet and their instructions on how to open up a Stellar wallet and kind of copy that information over and set that up as not only what you're holding it as, but then that's what the shares get sent to. So there is a public record. You can go to Stellar Expert. You can look up issuer asterisk blocktransfer.com and search bar. It'll come up with all our assets, one of which is Laylor, and soon to be it will also have the syndicate shares, and you can actually look at the movement of those shares directly on chain. This has been linked plenty of times in community discussions, and this is really important early on because as soon as 2023 hit, I wanted real data for a lot of reasons. The most important of which was to have a precursor and a backtext to give to the commission and to show them that this is how things work, especially because Rule 144 for private companies takes a year to mature into something that's tradable on a secondary market. And so I knew that to evoke change, we had to have this set up, and we had to have a 1-year waiting period thereafter for the shares to convert to unrestricted, which has happened now for some of the investors, which is really exciting. We haven't done any outreach to any of these investors to be like, go claim your shares and here's how to trade them. I just haven't gotten around to making the documentation of how to trade on this particular, we recommend on the website a particular Stellar wallet application. They're all relatively similar. It's all non-custodial wallet. This one, it like does some server-side encrypting of your key, which is like interesting. Not my favorite approach to it. Rather, it just be fully non-custodial, and that's always been the ethos of the investor app, which is designed. You can kind of walk through a Figma of it on the investor app repo on block transfer, and there's some boiler code from the college days that was built, but not really built to maturity, and certainly not built with an open source license with it. So that was some of the main inspiration. We proved that it was pretty trivial to sell. I think if I put a couple $1,000 in Google Ads, we could have 10 or 15 new private companies in a matter of a few weeks. That's not like a quandary. I don't think a roadblock at all. And then we got that initial data for the commission, showed them, this is how it works, and I can now reference these transactions in our regulatory filings. And then the third thing that was super useful was on the tail end of 2023, was taking this now on-chain data and rolling it into a lot of the production systems on the AWS API on the block transfer, that repo for the syndicates, hot wallets to interface with the network and to manage some of the day-to-day transactions that keep all the investor wallets set up, because the back end is so crucial for allowing any front-end Stellar wallet to hold these assets as long as the wallets integrate with the public Stellar standards. And at the end of the day, decentralization, I want to have a reference implementation of block transfer app, 100%, zero question. But we're also building a whole new financial system here on Stellar, and so making sure that everything on the back end works no matter what wallet interface you're building on. Not only is that just I think principally a good thing, because it's then backwards compatible with everything that already exists in the network and in the Stellar community, but also just making sure that if, one of the big things with the design of everything, like I just talked about some of the trivialities of new clients, and one thing with that, as soon as I realized how simple it was, and the return, because they were originally agreeing to pay us $100 a month off of, you break even on ad spend in a month, and then it's a pretty good ARR, and it's a very sticky product, because how are you going to cancel your transfer agent and then not have record keeping for shareholders, especially if they're used to trading? It's I think it's a pretty easy lock in there, and it's a lock in that at least I have seen on other entities. It's on the private cap table side, rare to shift around unless there's something that's a really big problem. There was that one particular scandal at that one particular cap table provider that was the inspiration for quite a bit of regulatory work. Gosh, was that last year? It was last year. I remember it was last year because a particular event, which I believe is, I will give you the exact citation here because this is a meaningful part of the history. The citation is note 130 in the syndicate comment letter on the, we all know, SROCC 2024-001, the one where that we won, which was awesome. I mean, I don't know if we chatted about this a lot in the community, but getting a monopolistic mammoth SIMFU, SIFMU, excuse me. I put SIMFU in the comment, and I'm looking back at it, and I'm like, oh my gosh, it's SIFMU, not SIMFU. But getting the OCC to withdraw that petition to potentially cause cascading clearing member failures by adjusting their margining, which I think very directly led to some of the extremely important CCP rulemaking from the commission at the end of last year, which is the basis for a lot of the TAR work. It's awesome. It was an incredible achievement that everybody together brought. It was so many thousands of people that commented and brought that to an end. And that, for me, is that's really incredible, and that's a case in point example of why this decentralization matters so much. Because standing alone for the years that I was working to make all this happen myself, and in the very short periods of time that I had others working with me, it was so clear that this is just something that is a massive task that will take all of our actions together to really fix and cement change with. And so it was so exciting to really see that materialize from everyone, and such an inspiring proof that showed me very clearly that the decentralized route here is the answer. It's not just one person that's going to cause all this change. It really is everyone coming together and agreeing on this horrible problem in today's markets. And now I'm introducing this avenue of a means to really fix it. And that's why that first client, James, was quite, I think, structurally significant, because it gave us, for the first time, a way to show the shares on chain, to definitively put a real legal entity to it. And then when I was building out additional back and forths on the back end, I cannot express how helpful it was to no longer be dealing with that demo stock that's been associated with the account that I've been working on since day one, but instead to be associated with a real company that has real investors, to be working with real data. I noticed this in college, and it's just like a little personal thing of mine. It's that I'm really not good at doing theoreticals. I get bored out of my mind in theoretical math, and I just cannot bring myself to do. I could not bring myself to do coding projects for, hypothesized challenges that needed to be solved in some pretend academic environment. But the moment that I was messing with any API related to stock trading, my eyes lit up, my body was happy, everything was incredible. And that's how I felt in the very early years working with false data that was on mainnet, but it was not a real company. It was like, this is sort of this academic routine, not really making any progress here. But as soon as we had that first issuer, it was so much progress, so quick. Just messing around with the data, seeing it work in real time, and building out the PII backend infrastructure with actual investors instead of two accounts that are myself and the syndicate, and I put 500 parameters on each of them in simulation of what a real person might look like. I'm so thankful that with that particular entity, within the first couple of months, not only did we have a very diverse array of holders, from individuals to corporates, and then the corporates have a different account reconciliation structure internally, and I was able to really build all that out and double check this data matches the cap table that they gave me, and everything's working on both sides here. But I was also quite meaningfully able to actually file some of the state level and the legal requirements, which were just impossible to do beforehand, because how do you run a lost investor search when you have no investors? It's just not possible. And so it actually gave me a route to now go and build out these other compliance aspects that are so crucial. How do you take care of state good standing compliance and check everything there, and deal with the filing fees for private placements on the Nassau level if you don't actually have a private company doing filings? And I always had I was so hard, it's how am I going to do this, because I don't want to raise money for the syndicate, and so I couldn't do it for ourselves. And so having this first client that actually went through that process, seeing that back and forth between the investors, back and forth, which was largely facilitated by the email marketing tools built into the internal syndicate work, that back and forth was awesome. I built out so many document templates for private placement subscriptions, and then testing out and building and deploying the secure signing email service that we actually used to configure the articles of association is the only word I can think of, but I know that there's a different legal term for when we put together the DUNA. Funnily enough, there's a very glaring typo that I accidentally made on those articles for the DUNA. It's a very mute and minor thing, but I definitely was reviewing some of the scanned filings, and I was like, oh my gosh, I think I spelled the word that wrong with this. But that's the whole point. And that's what I got to have with this first client, which has really shaped block transfers, getting that experience, for first-hand experience. One thing I noticed more recently is that I look back at a lot of the prior year's work, and it's work that a lot of it was started but not finished. And I really mean not finished in a material sense, even though it's like 90% of the way there. I would just, I was always such a perfectionist, such a harping, it had to be absolutely perfect. I remember working, first of all, I worked for years on the yellow paper, and it was like literally months just trying to format some of the final images that were already like completely done, and I just, it was, I'll pull up the repository so I can get you the exact date, because the yellow paper is on GitHub. I archived it midway through, so towards the end of, I think I changed some of the about section, and that's why it says October 2024, but I do know that I did the final commit to it in August, and that's when it was originally archived. Because eventually I just said, look, I've just, you gotta just take what's here and just be done with it. And I kept committing over and over, trying to make the communication of the problem, because that's what the yellow paper was supposed to do, to very technically communicate exactly what's happening here with very substantial proof and legal precedent. And eventually I just had to move on from tinkering around to get everything perfect and just go down to implementing and making things happen, which is what the tail end of last year has been for me, and what the start of this year certainly has been for me. Even though I haven't gotten Taran on time, it's for like a personal strategic reason, in the sense that I really want to have a substantial change. And I don't know, I do know, because normally it takes until May, but again, we're still sitting here and we have no news on here. I can give you my sources now that I have this set up. There we go. And we're sitting here today, and there's still no action on the nomination of Atkins to the commission. And I just get the feeling that he's a really great free markets guy that's going to understand a lot of the material work that's happening here. I also want to get a little bit more of a feel for the new leadership in the House Financial Services Committee, because that's been a committee that I've always very deeply thought would be meaningful to our development, and sort of been thinking about how that would work when we do get there. And so I want to kind of align it with that. That's always been the plan, and that's why there was that original earlier in the year work, and then I realized what they did on some of the last year's tail end CCP reworking, and it's like, wow, this is really good, because there are some very mammoth risks that I personally see. I'm like scared out of my pants every day that the market will collapse before we are able to bring this to scale, and provide a suitable alternative to what I think is just not a sustainable central custodial structure, which is why work like this with these early clients is so important, and it's been going very well. Even though maybe we don't have the financial results, and maybe they still have not raised a material amount of funding. You can see on chain they haven't raised funding. The bases are public. I suppose offline deals are hashed memos, so you don't see the investment money. The ideal situation, and the point of all of it, right, is that a company, they can file a Form, for instance, we'll do this private company. They can file a Form D with the commission that's made public, it's added to issuers.info, and then they get an account on, and this is in the TAD3 docs, the actual account structure. I guess I can just go ahead and pull it up. Here it is. So this is just the existing. There's still a lot of work to do on the TAD3 documentation, so you'll have to forgive me on that front. But yeah, so the idea is that after they file the let me move my face. After they file the regulatory documents, it becomes relatively trivial to just have a wallet that gets generated, and then they have the signing authority over it. and you send the shares there. They get excluded from the float because they're authorized but not issued, and they have plenty of all the authorized and issued things for Layla are public information. It's on their page. But then they can go and they can either send directly from that account in the case of if it's an offline private subscription, or they can literally put like a sell offer in an order book if there's an actual market, if there's an actual secondary market for some of these things. There's a little bit of nuance to that, especially if it's a non-public, non-solicitation offering, and you need to have the exemptions for the original subscription that a lot of times will precurse them to accredited investors because of the back end, right? The personal information will track the investor's accreditation status, and they can still participate in the SDEX and the order book on the secondary market because there's nothing that stops a normal non-accredited investor from trading with other investors after that 144 statutory period winds up. So the secondary side can still take place outside of that origination. But the origination itself might actually need to sell either offline or through smart contracts on Sorbonne to verify. We'll have to do like a little a ping back and forth or an account attestation that something's accredited. That's all relatively trivial to do. The implementation there, relatively trivial. It gets a little bit more interesting with the CF offerings because now there needs to be sort of an integration with a funding portal that also goes back and forth because like the PII tracks things that you need for the CF offering, like first of all collective CF allocations and what you've invested in over the year, and this is what came up last week, and then it also tracks the incomes because of course that particular exemption is it's done with an understanding of income. So there's a lot of self-reporting that happens here. Self-reporting that is a little bit clunky right now just because we don't have our own app yet, and so it's not like you just fill in a field with your income or you fill in check a box if you're accredited or click this button to upload an income statement, for instance, if you need to prove it on some of these offering types. It's a little more back and forth just on that web form, and honestly it's been just emailing back and forth with investors that submit through the web form, which is another reason that I thought it was really important that we got the internal tooling set up early on, because of the email verification, DKIM and there are these acronyms around it, but one thing that really stood out with that particular provider was that they offer all of the email authentication security. There's even they have really good email systems because email is such a meaningful part of a professional organization like this, as I understand it. And so from the start, it's always been designed to make sure that it is simple to go through direct communication channels with investors. Communication channels that do not require physical mail, and at least on the cap table side, it's much more standardized to just have that email as an account representation. But of course, the final account representation are public keys in every sense, and the wallets themselves. And that's another reason why just the app is so thoughtful on any large-scale deployment with a public client, because you do really want the ability for them to attest to their information directly with a signature from their public key instead of relying on a signature from like an email account, which can be compromised, or a physical address, which can be compromised. All of these things are just so much less secure than a non-custodial wallet. But anyway, all of this design that you're looking at right here really wouldn't have happened without that first client that they didn't really do anything, but them just being there was very material for the work that we do, and being able to frame out some of these concepts that are now publicly documented on the tad3.dev site. And so that was pretty awesome. And I'm happy to report that they are really happy. I mean, we've had so many calls over the years, and to answer the question of how we received, like, they've been super satisfied, to put it, without disclosing, without disclosing. They've been really, really happy with everything. It's been a great relationship. It's developed very, very well. They've been extremely professional, and we've done everything to the letter of the law on compliance and made sure that every conversation that we have is extremely documented, whether that's notes from an impromptu phone call, or whether it is just the actual meeting recordings, which are the default standard for all communications. In general, from the first day of having that particular client, I set the ground rules is not having phone calls. And because we had some phone calls back and forth just during the sales cycle, answering questions, helping them walk through what it looks like to put the stock on chain, which wasn't too big of a deal. They were pretty blockchain forward. They sort of understood what was going on, but they had some simple questions on, like, corporate finance and accounting, like what's a par value, and how do we need these certificates or not, which they didn't really have. And so it was just just some basic rudimentary corporate formation stuff it was really nothing. They didn't need to amend their bylaws or their articles, although those were documents that we reviewed, and I think we should always review for every issuer, right? The corporate standing in the real world, the organization of its individuals, the directors and the officers, as part of that public information. There's a question as to how much diligence we should put into directors and officers, because presently I've just sort of not. My intent for the disclosure platform is not to be an auditor, and I think that's even disclosed in the footnote. It's not like we ever audit any of the financial statements that they make, that they send to us right now, but I mean, eventually they'll just be able to directly upload them. And ideally, right, it'll actually go through IPFS and it won't be a local host anymore. But there's that. There's the summary of the business. There's the directors and officers. And the intent has always been that they just put whatever they want there. We're just a neutral publisher. We're not really verifying any of that. The only thing that we would verify, and that we have verified, and that we continue to verify, is just like the articles of incorporation, the standard things that you would think of when you're opening up just like a corporate bank account, right? Just the basic info that affirms that this is like not a scam. That's always sort of been my thought process for what the bar should be for issuers to use TAD3. It's just that this is like not an obvious scam, because as I said earlier, and I've always believed, is these are with the idea of permissionless, right? Which is, I think, the closest you can get to the forefront of innovation. That works when the bar to start is nil, right? Permissionless on a GitHub repo means that you can click 3 buttons and you've opened up an issue and you're now starting a conversation. And I think I try to keep it as close to that as we can for companies that are putting their ideas out there, sharing what they care and so deeply about and have worked so diligently on over the years. And it's not like our job as essential intermediary to dictate this is a good thing, this is a bad thing. It's just to make sure they cross that bare legal bar, and they're always complying with the ongoing legal requirements that are already very, very, very well established for when you're raising money from investors and especially the public at large. And that framework that exists in American securities markets really protects investors. It protects investors more than any intermediary on its own could, in my opinion, because it gives you the exact framework for raising capital and tells you precisely what to do as an issuer. And if you follow the letter of the law, then it's a lot harder to have obvious scams, or at least obvious scams. Well, obviously a scam's not obvious until it's too late, but at least it requires the full and complete disclosure that this is going to be something that's very risky. And that was something that was evident in all of the templates and subscription agreements that we were working through, was that this is an early stage company, it's very risky, all these things, which are completely true and need to be fully disclosed to the investor. And then it's the investor's choice. By and large, it's the investor's choice if they want to participate in that environment, which is something else that we got to see with that early client. There were companies in the early days that were asking us, that were reaching out right around their IPO time. And none of those really went through. One of them I missed, funnily enough, because I slept in past the meeting and it was like, oh my God, I'm an idiot. Again, central bottleneck. But having this different experience where we're starting off with the private companies really gave me a very deep appreciation for small business capital formation that I would not have had if we just followed the plan, which was originally just to go with the public companies, start off with a small public company and then work our way up, because the public companies are already past this stage of early innovation, especially on the small central front, and they're sort of more towards a sustainable, growing, and investor-ready business model. And at least selfishly, I got to see the economics of the startups firsthand and understand the meaningful impact that access to capital has to a vast swath of, the vast majority of the economy, right? It's small businesses. It's not the S&P 500. Vast majority of the jobs, the incomes, and so it was really a massive net benefit to have that smaller, slower start where you got to see quite intimately. It was really interesting for me, and I'll move on, but it was just so interesting to see that original cap table and go through the couple dozen investors and have some back and forth between some of them as to why they were investing and what they thought about the company, just in discussions with the board and such. It was a perspective that I'd never really seen. Never chatted with a minority-owned business trying to do some innovative financial things, and then encountering all of these very material challenges from the legacy banking providers, and it was really cool. It was an awesome experience. Approved by all board members, which is me. Thank you, Seth. I appreciate the comments here because it just makes it so much easier to cover these things. Chive says, access to capital and community investment without the hidden and personal agendas of traditional middlemen. Yeah, it's unbelievable that the only alternative things that even offer something close to this today will not only often charge over a 7% fee, which is like, oh my gosh, unbelievable. Imagine you put all your heart and soul and efforts into a small corporation, and then just because of the nature of market structure, you have to give up 10% of that to an intermediary. It's crazy. It's something that I saw with Laylor, because out of the blue, when we were closing the original contract for the transfer agent agreement, they were like, hey, also we want to give you 7% of the stock. And it just hit me out of the blue. It's like 2-sentence response to back and forth, and then that was it, and it worked its way into the final deal. And that's something that the commission in the TAR comment, request for comment, very explicitly mentioned is whether or not there should be these conflicts of interest, which are very common in other certain crowdfunding middlemen, where they'll not only take a 7% stake, but they'll also quite often negotiate rights to purchase additional shares, kind of like an underwriter, right? They'll negotiate a green shoe, which is I'm debating how much I should curse here because it really pisses me off. The way that traditional underwriting works. It's just so extractive and such a vast disconnection from a free market where people bid what they want to pay for something, and then that's what you can kind of do a second order viceroy auction where everyone just gets the aggregate price that fills up the demand, and you can just let the market determine the value of something instead of we have to have a corporate intermediary do it in the middle, and they have to charge this massive take rate from it because they're the only experts that can ascertain exactly what the market is willing to pay. Well, how about instead of ascertaining what the market's willing to pay per share, we just let the market bid per share and we sell it it's like, I got into this rabbit hole when we were looking at pricing strategies for the per share basis of that crowdfunding thing, and it's just it's something that is so persistent in, I mean, like, that's most of investment banking. Like, I can't, I mean, it's a very large swath of investment banking that's just the underwriting stuff, and it's just a ridiculous amount of central control over what's supposed to be a free democratic process of determining valuation, which gets cut off sometimes, oftentimes, by the nature of a business that only works when when you're sort of the arbiter and the one who decides what it is everyone pays, and not only what everyone pays, but really everyone's relationship in the market. Because that's the legacy system that we're up against. We're up against a system where all of the money's on Wall Street. The only way to raise it is to convince the intermediaries of Wall Street that they should convince their clients in a very indirect and relationship-driven money-raising environment, and that's just not efficient. It's just not efficient. Play a game of telephone and pass the message down the line, because that's what these guys are doing when they go on road shows. They're not really speaking to the market, and the only way I see to speak to the market is to have a permissionless platform like this where anybody can come on at any time and directly listen to what the issuer themselves has to say. And that doesn't happen when you don't have public pitch decks, public financial statements, public recordings like this. One thing that I realized, last year we started the Main Street Markets podcast, which is on this channel, but it's really devoid and nothing, and it just worked its way into a lot of community work that has grown and blossomed into something incredible. And I was thinking we could kind of revamp that going forward into being much more of a platform for issuers to kind of give their business pitch on a public forum, because so often the only time that you'll see a business pitch is when it's being done in a backdoor deal to a private select group of investors that are sort of in the know, so to speak, and they get the first shot at everything. They get the first round, the lowest valuation, the best deal on company, all these things. And it's like super weird and inefficient, because now you have to do so much just to even speak with, it's unbelievable the amount of work just to even speak with those that have capital. And then just such a horrible, I can't overexpress the dynamic for raising capital from these private institutions. Is just horrible from the company's point of view. It's such a disadvantage because you have this one central group that has everything and that controls all of the rules and procedures, and then you come in and you're practically begging for handouts. It's a lot of times, and it's very challenging to change those dynamics if you don't have extremely significant business traction. And that's the opportunity that I see here, to have a real conversation directly between the issuer and the potential investors in the corporate case or the community when we're doing a live stream like this. Just a live back and forth, or a back and forth that's generally made available to all investors at the same time. And that provides a very public forum for everything that's happening with a corporate. And it's a different way of doing business, and I understand that. And I've had so many conversations with more proprietary startup founders, the vast majority of which are in the Silicon Valley, that have great pause and very, it's like, we don't want to release financial statements. Why would we do that? Competitors will buy a share of our stock, and they'll look at everything we're doing, and it's very competitive, and in the central framework of central banking, I understand where they're coming from. I just very vehemently disagree, and this is why there's like that blog post on private capital that dives into a lot more of these specifics. And I guess since it came up, I'll go off on this one last thing, and then I'll get back to the chat. But I did want to just answer this because the question came up, or the comment came up about agendas. Agendas which are far too common across a lot of these intermediaries. So I will go back to my corner here. And yeah, I really appreciate everyone's feedback on the blog posts and why I have way too many emojis in all the blog posts. I do not have the effort in my mind to go back and like revamp all of the old posts that were so latent with emojis. Basically, what happened is like I was first discovering writing things with GPT, and in particular, there are certain things I work with that it's just, how you say, not my 100% best use of my time. And so, especially in some of the earlier posts, when we were documenting, the first 3 posts are really the ones that set up this style. It was the problem with medallion signatures, the problem with proxy voting, and then there was kind of this like news thing that I did. That wasn't really the big one. This was probably the big one. It was like talking about what the TAD concept was. But I guess these two made me more so. Explaining, for instance, the problem with the proxy that we all know so deeply. We all completely understand. Like, it was just putting together a couple of these examples, mostly taking from the yellow paper. The yellow paper is much more my traditional professional writing style, in the sense that it is really straightforward, just goes through exactly what it is that's happening and how we can change it. But I just didn't see any traction from this yellow paper. I've been sharing it around as much as I could, everywhere I could make a stand. And it's my more traditional writing style with explicit footnotes that back up the large claims, and quite a direct array of sources. They're not href sources, which was another thing that I tried to keep perfecting over. But some of these documents, like this one in particular, has been just such a bitch to find again. Excuse me. So just a lot of things I read over the years that, anyway, definitely more my writing style here, but I was just trying to make it more accessible and available to a wider audience. Because for some reason, despite the vast amount of activity and activists that have been chatting about the very real problems here for literal decades, nobody seems to really want to step up to the bat and actually solve this thing with a transfer agent or a more direct holding system that sort of obviates the custodial structure of yesterday. And in over the years up to writing these couple of posts, these first blog posts, I've got so many blog posts that are drafts that are like, they're like done, and I just haven't published them, or I haven't. They're like pretty like 80% done. I just need to polish them off, and I'm happy to pull some of those up. Honestly, I've got the internal data on it, and I can do those things. But I definitely want to rework it to just be a little bit more professional. These I put out in the time when I was trying to figure out how to really market not our services, but the problem at large. How to make people help people understand just how flawed the existing public stock market is. And so that was the reason why it's a little bit more emoji heavy. I was just trying to make it like a little bit more of a general audience. Like head exploding shares are not actually being voted properly. And you can kind of see, like, for me, like, I'm not very good at writing things in dumbed down formats. Like, it's just, I just want to kind of communicate exactly how I feel with all the technical nuances, which I've, thankfully I've learned how to do a lot better with footnotes, and I'll kind of write a little more simply with that traditional text, and then I'll put the details in the footnotes. But these blog posts, it was like, I didn't know how to do footnotes with it, and it was kind of hard to do footnotes with it. So you can tell, like, at least for me, a lot of this came based on like a GPT summary of telling it all of the problems and asking it to distill it down to something a little bit more simple. And so that's where a lot of the emojis came from, which, I think part of it was just speed. It was just trying to get something out there, because about the time that I made these posts, I had finished, and you can look at unfortunately you can't look at the Git history of the Syndicate API, because all of that was originally it was all developed in just explicit Lambda functions within AWS. And so it wasn't tied to a Git repo, just because I didn't know how to tie it to a Git repo back then. I still haven't even freaking gone through the process of tying it to a Git repo for a CI/CD flow. just something I've never done before, and I wanted to make sure I got the security and authentication right, and I knew I could do that right when I just deployed it directly through AWS. But you have my word here that it was, and I think actually we can. I don't want to go too deep into this, but you can verify this by looking at the transaction history of the demo asset, which was sort of the live endgame of a lot of the work on some of the syndicate testing. So you can see the activity really popped up as we put everything there into production, did final testings around the start of November. And then, of course, we had these posts coming out in at the end of October, so right around that same time frame, to get to a production launch of test transactions. It usually takes months of work, so this was just verification of things that have been happening for many months on building out the syndicate API side, which interacts with a lot of the network standards that we talked about earlier. So I really tried to make it a little bit more generally popular. And I'm sorry, I've got the chat scrolled up, so I still got to answer the original questions before I can get down to the bottom and feedback on this. But that was the main thought process here, and I appreciate everyone telling me to keep it a little more professional. I think going forward, I want to change sort of what happens on the Syndicate blog, especially because a big part of it was just the Syndicate updates and the more I thought about it, the more I realized that maybe that's all that we really need here on the blog. You know, maybe we don't need articles that are trying to like directly market things. Although none of them are really doing that. Oh, excuse me, this was the third one that was important, the SDEX. And that was the start of November, yeah, right around the same time frame. Just because these are very deep concepts that have had like years of work on my end. And so it's just trying to summarize them. Like I tell a story of a farmer's market in here, I know, and that was like just kind of AI ideas, AI writing things. You can tell because freaking period after the emoji, it just is the most disgusting thing I've ever seen. But yeah, I just want to make that a little bit simpler, and I'm glad that got it out there just to share the agenda, so to speak, of what it is that everything was working on, but definitely more of a place that going forward want to have based a lot more around just explaining what is happening, so that everyone's up to date instead of meetings like these, because there's a lot of activity over the past year, for instance, that happened just between syndicate work, because it's just me right now, right? So between that work and the DRS work, and you know, some of that should be formally announced on the public site and through like a blog post, and it just hasn't happened yet. So, yeah, definitely with you, everyone, on keeping it all transparent, and more disclosure just means a little more time to write things up, which is certainly on the agenda. I'm going to move a lot of those drafts into into open source repos, depending on where they fall, because they're more aligned with some of the educational repos in like the Wealth DAO that is a GitHub org, or something like the community for the founders to go and to work with each other on, then they are something that needs to directly be on the syndicate, so to speak. All right. Simplifying paperwork through universality, says Chives, and yeah, completely agree. And that's the whole point. That's why I love these regulations, because the regulations apply to everyone universally, and it really is the same process that everyone should go through. I remember in high school reading through dozens and dozens of annual reports and seeing the same general structure enforced by the public company reporting standards. And, you know, that's how companies in general, historically and going forward, it's just how you compare apples to apples, EBITDA to EBITDA, and it makes sense from a central accounting point of view to put everyone through the same process and let the market determine the price and the value and what they see in the raw information and the numbers that are there. And of course, a large swath of that is automated through different analysis tools that already exist for stock trading. And so it's just letting all that continue to function as it does and just changing that baseline accounting to something that is actually accurate. Bob says get lime green in here with the tax experience. It's been awesome to chat with everyone in the community and see different perspectives, learn different things. You can see discussions between us on different books that we've been reading back and forth. Books on capitalism itself. And because asset allocation or capital formation, I mean, both of them are very deeply interlinked, and all of that results in the society that we see today. I mean, why is it that we have NVIDIA but not, four other graphics card manufacturers that didn't get that round of funding, or, didn't make the follow-on offering, or didn't have, it's like, there's a lot of chance in capitalism as to whether or not you gain that traction and succeed. But there's also a lot that you can fairly directly influence if you kind of control the allocation system. You decide who it is that gets funding it because you control or have a vested interest or have influence in the 5 firms that fund half, if not more, of all of the public companies in their early rounds in certain geographic regions. I mean, this is real power through the means of allocating money. And it's power that should sit in the hands of people who decide where they want to invest their funds or who they want to trust to invest their funds with, which is just a system that doesn't exist today. That infrastructure just is not there for vast segments of the market. Private companies being just one example. This idea of pooling capital, which is made so much easier on a transparent distributed blockchain ledger. Now, one thing that I wanted to do was set up like a little water screen. I did not have a chance to do that, as you can see by me just now setting up this camera. But I am just going to run to the bathroom for just a second, and then we will be right back. Great. Thanks. All right. Yeah, all right. Yes, I was thinking, appreciate the clarification there, Bob. I was just thinking, did I spell out MNPI or not? It's like, it's so natural and something I think of all the time, but thank you for spelling it out. You are all good. You're doing a great job. We are, yes. Okay. Altair asks if we have any lobbyists on payroll. I think that gets back to some of the earlier conversation about agendas. It's really interesting whether or not lobbying should exist. One way I look at it is it's a form of markets sort of applying themselves to government in the sense that we have this representative democracy, which everyone gets their own one stake in to put the party in power or the individuals in power. And after that, there's not a whole lot you can do. Like, we can kind of bombard congressmen with letters, but a much more direct version of that, if you're in an industry and want to see a certain change, is that direct lobbying of really putting money into the equation. And it's not awesome. It's not awesome, but it's one of the only ways that we have today to express material concern over a potential policy, because of course most people are not bringing their agenda forth to some of the leading voices, and hence they're not really able to instill change, especially on their own. I really don't like that the only other option that I see is to hire people and go directly lobby and try to influence legislation. Influence legislation is such an interesting action for me, because a very large part of the regulation and compliance work going on now is making sure that everyone has fair and best investor protections, and that for a transfer agent system you have the same safety, reliability, and ideal caution and transparency, but maybe not that last one but to make sure that you have the same set of protections that you have on the old custodial structure. And so a lot of the work transitions into what the community see as the best form of regulation for everyone's protection, rather than maybe the more traditional sense, of course, here is getting laws passed to booster corporate profits. Because if we had, for instance, taking on venture capital and had this very natural desire of maximizing shareholder returns, then it would be like a complete no-brainer to get a lobbyist on payroll and try to get some special carve-out exemption, particularly around the self-regulatory organization side, because right now the SRO laws don't allow a transfer agent to be an SRO. It only specifies, it carves out a specific subsection. I could pull up the exact docs. I know it's in the OCC comment at note 16, if I am remembering precisely. But it's like only national exchanges and such that are, availed of that. Yeah, so here it is, note 16. Let me look up what this is, and I'll give you a full list. Great. All right. So we're looking at section A26. Oh, no. I like LII. It's a little bit nicer. Yes, here it is. So yeah, it can only be national exchanges. Registered Securities Association is like this big what is this, because it's not really something you normally apply for. Like, this is sort of this back deal thing that was sort of grandfathered in with NASD, and then NASD became FINRA. But it's only really that, or a registered clearing agency. And then the MSRB. The MSRB is nothing. It's irrelevant. It's like a completely separate thing. But also similar story being grandfathered in. And so if you have a transfer agent depository system that sort of acts like a clearing agency, but it's very, very explicitly not acting as a central clearing party, it's not acting as a central counterparty, and all of the trading actually happens on chain. So it's all through DEXs, and there's no custody or no fungible risk of insolvencies. It's something very different from the present definition of what can be an SRO, but I think it's also something that really fits into what an SRO is. I remember in the early days of these ideas, I ended off one of my last posts on LinkedIn just explaining what it is that we were doing. That was in within a month of uncovering the community. Made this chat summing up some of the SCF work. That's what that's from, and some of the community work there, which was awesome. Really great work. I don't know. I mean, I know we might not have had direct influence here, but this was great. And then let me just spotlight search SRO. Yeah, right here. So, that was my early understanding of SROs without diving into a lot of the history of the very, very material conflicts of interest that we've seen over the years from SROs. And here we have the same emoji style that I was talking about. But the challenge, of course, is that you can't sue them, and there's no legal precedence. And that, I think it was probably necessary in the early days of clearing agencies, of national securities exchanges, and the Registered Securities Association bit. That much is still in the air. That much is still in the air because obviously Alpine just got to the Supreme Court, and if things go right, Alpine's gonna really cause some change there. I think they have a very strong antitrust case. But that early perspective I had, 'cause this is the first time that I was sort of formalizing my thoughts on what the regulation should look like, and seeing it originally as like we can just have a transfer agent as the SRO, and everybody can just trust us, and we'll be the central person. Because I think this ties deeply into another point I wanted to bring up, so I will share it now. This is on the public ydrs.org Discord server, and it's this message that is a reflection of a previous chat that came up on a public dialogue of when TAD3's main primary Horizon interface, it was always public. From day one, it was a public repository on GitHub. It didn't have any license ever, just because I didn't understand the licensing implications early on. It was a whole process learning about all the quandaries of software licensing, which led to, of course, that software licensing post. This guy right here, which was the summation of a little over a month and a half of understanding into exactly how all that worked. But it was always a public repo until about August of 2023. So just before a lot of the development on the AWS API, a lot of that proprietary development I was talking about that occurred outside of being in a public repository and was done just for block transfer zone AWS instance. So it wasn't, just for explicit clarity here, I'll syndicate. Yeah. Just for explicit clarity, it's the work that's in this repository. This work that is all done proprietarily, so that because the way I saw it at this point, around August, September of that year, everything was pretty much done on the back end for TAD3 to work. Everything was done for block transfer to scale exclusively on the back end. And the only thing that was limiting the growth was the front end work. Front end work, which, I think if we got like $3 million from venture, it would have been pretty trivial to make it happen. And so after I finished, first of all, after TAD3 matured and I realized it was pretty much ready for production and done, I made it private because of the very big regulatory challenges that manifest in this idea of having an SRO, this idea that we want to have a central arbiter of, because basically you're making a court system on chain for the stock claims from investors between companies, which is no small feat. I mean, it is, it's a very big task that takes a lot of effort. And I was a little distraught because at the time I'd done this was ready, and then I built the syndicate APIs. I pretty much built all the back-end things that were done, and that matured in this set of transactions for the demo stock, because these claimable balances are the implementation of Rule 144, and once you implement 144, everything else is like done by the blockchain itself, because you claim it and then bam, you've got secondary markets, and all you need to do is enforce the insider restrictions that are built into issuer.link, which is another repository here that has some of the insider regulations encoded into code. And so at that point, everything was pretty much ready, and it was just this regulatory challenge that was really concerning me, because at the time I knew that anybody could take this TAD3 work combined with these APIs, file form TA1 with the commission, which automatically gets approved in a month, and you could be off to the races running a transfer agent if you just raised a couple million from venture and built an app interface on top of it all. And that's what got me into a really deep pit of not feeling great, because I knew that I wasn't going to raise that venture for the governance reasons here, and making sure that everything actually serves investors instead of the interests of Sand Hill. And it was a really challenging time, that 3 or 4 months until I discovered the community, because everything was there. It was all technically there on the back end and ready to be deployed. And the only thing that was missing was this one little trivial piece of having an interface that works kind of well, and maybe the fiat ramps are an important piece that doesn't need to be done by the syndicate. It can be done by anyone on Stellar, and maybe we'll get into, I know there's some questions that specifically address scaling and what's needed, and I'll dive more into it then. But the biggest thing really was that I always knew this would need to be governed by a DAO or a DUNA. DUNA is so much better because it fixes all the problems with DAOs. It's like awesome. And I tried to express that point in this tweet, which is to say that, a complex system like the entire stock market requires, it requires complex regulation. And unfortunately, it's just very difficult for a central regulator to be all-knowing of every, it's just not even a reasonable thing to ask somebody. For the central regulators are sort of like intermediaries. The court system is kind of accountable to the public, and then there's sort of like this process that everyone goes through with cases. But, unfortunately, I think we saw pretty well. I think I've actually got a good primary citation on this. It was F3, right? The Goldman, yes, it was F3. So we all remember the Goldman case, where they were literally across the street from an SEC regional office, and for years, as I recall, right, they were just generating shares out of thin air by pressing F3 on the keyboard. And that's the kind of thing that can happen when there's just a very big gap between what it is industry wants, or like a transfer agent would want to maximize profits for shareholders if they're a public company, and what we would all agree to be like the best public policy. Because clearly they were acting here to promote the interests of the partners of this particular financial institution, rather than rather than the interests of investors at large, because you're just selling them things that don't exist. Come on, seriously. And that's what we're going up against here, because that is all of DTZ as a whole. And so I say here we get rolling FTDs because the proficiency falls below. It's unfortunate. And so if we have a more transparent system where now everybody actually can be a proficient, and anybody that wants to can go in and look at exactly what's happening with the shares, then it's pretty trite and pretty obvious in my mind that we need a decentralized governance framework to uphold the rules that everyone collectively decides, because that's what laws are, right? They are just collectively deciding. And it's about a year after this crisis happened, personally for me, kind of had this setting the groundwork for the community. It was quite meaningful to finally have a system that could actually work for something like this, because it is so important. And I think one of the reasons why, I lightly touched on it earlier, but there are a lot of people over the years, I wouldn't say a lot, but definitely a handful, like half of a handful, that have put a serious stake into trying to do, tokenized stock, so to speak. Although I think we have a question specifically on tokenized stock and what the differences are. They've tried to do it through this perspective that Altair highlights of getting the lobbyists and just making sure it maximizes profit, and forcing it into the rule sets so that everything works best for the company itself, and the intermediary, the shareholders, everything you can think of with that. And that's I want to build a stock market that works for the next 500 years. I don't want to have these damned problems that we see so clearly in DTC again another 5 decades down the line, because it's just stupid that we're so far into human civilization, and yet financial systems, which are the core of all basic capitalist trade, a system that we've all agreed for so long is how societies best organize themselves. Maybe it needs help here and there on the tail ends, but it's by and large the system we've all used for so long. And yet it's a system that still makes it nearly impossible for billions of people to trade or to even send representations of value between each other. And that's something that needs a solution that's going to stand. It needs a solid foundation. A metaphor I gave on a chat the other week was like, we're building the skyscraper of the world here, and it needs to be built with frames built down into the bedrock, not a quicksand base of venture capital interests that somehow topple it over when 5 months into being public. I mean, these are things that would happen decades down the line, but if you think about like us having private interests and going the lobbying round and maximizing profit, then the natural extension of that is it becomes a public company like ICE. And then you look at the stock, I will not pull it up, but it's just a stock chart that goes up and to the right forever, and that's the growth that all the shareholders expect, and then the whole operations have to align with that. And of course the only way to do that is the way that banks make money, right? It's taking what should be everyone's system and contorting it to their own central profit. And in the money lending side, it's like a whole worse another frame. That's a whole different conversation. But on the stock market side, at least in theory, you're supposed to only have so many shares that the company ever issued, and so you're supposed to not lend into infinity and create a ton of income that way. And if we assert that that's possible, and that we have a system where the investors are the only ones that receive lending income because it's on chain, then it leaves us with a situation where the only way to increase revenues and keep the number going up on revenues is to charge higher trading fees, or just charge trading fees in general, or charge like a stock transfer fee or stock transfer. I've looked for a very, very long time. I looked at I guess I would be remiss if I didn't give Christy one last shout out. Just this old book from the 1929, and it just an incredible perspective. Somehow I ordered this and it came from some libraries. It was kind of heralded in the New York Times as the definitive guide on corporate stock transfers, the transfer of stock. And the thing's falling apart. Like it's really weird. Oh, and it's so heavy. But there's so many works like this that detail some of how, like what you would think of today as a financial transaction tax, affect capital allocation, capital formation, and secondary markets, which I care so deeply about, because the secondary markets are where things get real and interesting, incredible, and it's where capitalism really works its magic, are these secondary markets. And all of that really gets crippled when you introduce trading fees, which historically took place in the form of a transfer tax that was largely instantiated by New York. And it was kind of like really interesting going through in the early days of the syndicate after we'd registered with the SEC, but and after we got the DTC fins, I was looking at doing the reporting for stock transfers to the transfer tax department that still exists in New York, even though it's been $0 forever, and it's only been an informational reporting mechanism for transfer agents that have security holders to process medallion stamps in, and then you've got to get like physical stamps for them. It's like, but they'll rebate you whatever you pay. It's a really convoluted program. but the core of it is this question of whether or not we have free transactions. And one thing I've seen so deeply as an investor over the years is that free transactions mean a hell of a lot more than whether or not mom and pop pay a brokerage commission on their monthly ETF purchases or whatever, or an expense ratio on something like that. It really means a whole lot more, because as soon as you get into active trading, which is the definition of capital allocation in efficient markets, as soon as you get into any kind of leveraged products, these fees, they go exponential, they go geometric, and they really affect market activity. And I've seen personally over the years, I remember when I started day trading, the brokers were still charging commissions. And so you would have to sort of wait, because I was making very small trades, which would be considered large. I mean, a $400, $500 trade is like years of income for a lot of third world countries. And of course, to risk something like that, you need to have like to start off, normally you have like a 5% weighting. So you have to have a much larger portfolio to even make a trade like that. The vast majority of the trades that I envision in TAD3, especially in these foreign nations with these investors that just don't have access to quality investment markets or assets or equities, are these very small, a couple of pennies going into a bunch of different stocks, and they add up to like a couple of bucks. And that's something that's uniquely possible at scale with blockchain systems that are actually really good, like Stellar. And that don't have to have a central financial interest in the state. An interest which very clearly presents itself, rears its head, the moment that you even consider the financial tax as a way to extract a social net benefit to society, so to speak. But it's like there's like a lot of evidence that shows that the capital formation costs highly outweigh any central allocation of value that you're going to get from the government bureaucracy that collects those transaction taxes. Or the more common case, of course, being actual trading fees. Because I was weighing every single trade I made against the idea in the back of my head of, largely it was the idea in the back of my head when I started trading. Thankfully, I was under my mom's account. So because of like her other holdings in different accounts, as I recall, at the start with the paper account, I didn't have to deal with the PDT rule. It was only thinking about the effect of the commissions and whether or not I can make more than the commissions. And so oftentimes you'll miss a trade because you didn't think you could make more than the commissions, but then it'll go like really far in the direction you thought it would go and not touch your stop loss. And you're like, dang. And then other times you'll make a trade and it'll be a good trade, but not a perfect trade, and it'll go your way, but it'll kind of reverse and you'll try to get out, and you will get out, and you'll get out at a profit. But then when you subtract the commission, then it's a loss. And now, God, I remember paying like hundreds of dollars in commissions on a weekly, at least on a monthly basis. And it was always like such an impediment. It's like the first time I'd ever started trading, and just such mammoth access fees. I know that those theoretically don't exist because of the competition that we've had in later years. But principally, the business of intermediation, and especially if it's for profit, and especially if this is a natural monopoly industry where there's going to be one winner, just like there was one winner on the clearing and settlement side, where there were all these different regional clearing houses and they got merged together into DTC over decades. They all sort of consolidated, and then it was a monopoly, and it's like publicly declared it's a monopoly. I was just reading, what was it? I was just reading, we were having a conversation about, with Shroomy, who had a question, so we'll get to that question. And part of it it came back to this particular conversation I had with my good friend. I really appreciate AI because it's helped me move a lot faster. Just doing research like this is something. Uh, like I remember when I was writing the. Not to get too. I don't want to get off on a tangent here, but just in general, it's been helpful for figuring out some more nuanced coding things and database designs, for instance. Although I did go through a very large amount of the free AWS. They have like free videos that teach you how to use their services and things, and that was really helpful. I remember, but what I remember is I was writing the Edgar Next comment, and it was really helpful in finding out some like ancillary points to point to as citations for like cyber breaches, things like that. Really useful tool. I don't know. This is my plug for using AI. I haven't experimented with the other ones because it's like not the thing that I really focus on. I just want to use the one that works and is the best and it does its thing. I know people might be like privacy, thing, and I'm like, okay, sure, give me a better one. I'll use it. It's like fine. It's not ideal. But anyway, first mover, right? So it's got natural things, and it's not the thing that I want to just die on a fence for. I'd rather just get the thing that I can get. And that's a consideration too that went into using GitHub more for things instead of some of the more free open things that would just be harder, I think, for a lot of new community members to wrap the interfaces. I mean, it's just such a pivotal point of all this. But I remember I did download Llama and run different models, and it's like the local compute that I have, especially on this new computer, which is the worst computer because the other one and all that we talked about earlier, it was just so slow and just not specialized versus the compute cards that certainly make up the backends for things like this. And anyway, it was crazy that there was, I guess, an SEC comment from the STA that, excuse me, and this is, yes, of course, this is a comment on TAR that specifically frames them out as a monopoly, just to give you, we've got 10 mentions of monopoly here in this comment on TAR, and I've gone through all the comments on TAR and internalized a lot of this in my own work. And if we think about something like that, it's quite quandrous, I think, if that's sort of in the hands of a for-profit company and their own board of shareholders that has a natural incentive to just get the entire stock market on TAD3 and then somehow implement some kind of front-end trading fee. A trading fee which I didn't get to the point on scaling, but it's so crucial for derivatives and anything you want to build on top of it, like with Sorbonne, because now if you have like 100, what I've seen is with 100x leverage trade, now you're paying 100 times the fee, and that's what led, the biggest trade I ever made, a third of it went to the broker in commissions and fees. And that was literally like a year of rent I could have had that just poof disappear because the only way to make the trade was this particular middleman because no one else would give me an account, and it's just horrible. And it's something that to finish out, because I wanted to get this last story across, and then I'll end on the story. I'll end the conversation about lobbying. I don't think we're at that point yet. Yeah, got that. I've got here my agenda of what I wanted this to be about generally from last year. I was thinking that it would be a chat we would have in April of 2024 to go through 2023, and it was just a really fun year, breezing forward with the community with so much progress. And so I've got quite a bit of old notes that I'll just go through as soon as best way I can think of in response to the questions, which are so helpful again. But there was one event where it was the Trader's Way account, which is a leveraged forex broker, and I started trading with them largely. This was that transitioning college when I started doing Uberman and was trading 100x leveraged Bitcoin futures and 1000x leveraged Forex. And it was, first of all, just the best time ever because currency markets are like, with Bitcoin, I always had to, I had to kind of factor in the Wall Street influence BS. There was always more volatility than there was before the CME futures, and you could kind of feel that you had to make your trades a lot looser because of the sentiment that affected the price action. But with currencies, I love trading currencies because it's just technical analysis. There is zero other things. The news, like, mostly does not matter one tidbit. And if you know how to trade, it's like so much fun. And you need a lot of leverage because it moves like 1/100,000th of a percent in a minute or so. So it's just naturally something that exposed this problem of leverage for me, and a market access, because routinely you would enter a trade and you would just instantly be down 10%, because the spread is it's again tens of thousandths of a penny for like a USD pair. But when you multiply that by 1,000, it's very significant. And you're taking a 10% loss on the way in, a 10% loss on the way out, depending on if it's the way the servers are set up and the type of broker you're dealing with. And it's really bad. And also, it's just not a market. It's not a free market. I remember I had this one trade, and I started the position with $300 on Tuesday. And by the time it was Friday, it turned into $16,000. And I was like, okay, this is looking good. It's going my way. I'll set the stop loss. But I'm going to let it keep rolling because it was a really good trade, and you got to let your winners go, man. But you can't trade over the weekend because of this particular broker's access to the systems, and you can't move you can't move your position into a broker that can trade over the weekend. And it was really hard because by the time Monday rolled around, the market had reversed. It had gone straight through my stop losses, but the stop losses don't execute because the access isn't there. It's not a universal system where everyone's on the same page. And that 16 grand, it was 2,000 by Monday, and it was just a sucker punch, right to the gut. And if we're gonna rebuild these financial systems into something that really does work for people, we can't let it be like that. We just can't, because that was my main source of income, and it was just gone because these wins were wiped out in the interests of them not wanting to provide the costlier overnight weekend support. And it's not even costlier, it's just that you don't have access to these if you don't reach a certain capital threshold. And I see that as inevitable if this is sort of done on a profit rent-seeking basis. I remember one last thing, and I have so many examples like this, but I'll limit myself right now to one last one. It was in the early days of trading. I was probably I was 19, and there was this one, there's like people on there's like influencers, so to speak, that sell day trading courses and all these things, and it's like a pretty common thing. And they had an event where they had sort of their own proprietary simulator of the market, and it was like best trader event if you have the highest percent returns off of the simulated portfolio over the course of this couple of days. I think it was 3 days. Then you can have a $50,000 account where we put all the money in and you just trade it for us, and it's a 50-50 split. Super standard proprietary trading kind of thing. And for me, it was awesome because I had done all this work for years learning how to trade, but I didn't have any I had some capital from working a minimum wage job, but I didn't have like a ton of capital. And this was like an obviously extremely cool opportunity to really put the skills to use while having some kind of financial backing that I still had a stake at it, and it was very clear that this would be a great thing. But because of the central rules of this proprietary trading platform, I got in a day trade in the morning, and it went against me it wasn't like horrible against me, and I could tell it would stabilize by the end of the day. You sort of get a feel for these things. I think I was down at the end of the day maybe like 12%, which is really pretty much nothing for a risky day trade on a high volatility stock. There were a lot of people trading that. I imagine there were a lot of people. I remember a good amount of people trading it. A lot of them got out real early when the price was a lot worse, and I knew that it would rebound back to VWAP, and so it was like I just hang on to it till the end of the day. And I didn't really do any other. I did like a couple of trades, but not really, because most of the capital. What I was doing is I was just like, I think it was like a $10,000 simulated account. I was like, I'm gonna go all in on all my trades because I was used to that because of the PDT rule. Because at that point, I was trading my own segregated accounts under my parents, and so I had to abide by the PDT rule at that point. And then when I turned 18, I also had to abide by the PDT rule when I got my own accounts, and that was just horrible. Again, so stupid. I could talk about the PDT rule for 45 minutes, but that's not the question from Altair. But again, who does it serve? What's the purpose here? All it does is serve to restrict the allocation of capital so that only those that are high and mighty in charge with an account over X dollars can decide where funds should go. It's just the dumbest. It's ridiculous. It's so ridiculous. But that's the standard when you want to minimize the complaints that you get from retail investors because your platform has volatile investment options and it serves your business interests. And that's what I saw here with this simulator, is that I waited till the end of the day to close it out, and it was doing a nice little uptick in the last 10 or 15 minutes of trading, which is so arbitrarily defined by these central intermediaries. They just get to pick when you're going to access it, or unless you have like some special way of getting into the market that you go through some special route to go through. It's just ridiculous, because why should they sort of define and organize and operate these special air quotes systems when the rest of us are just stuck on this completely different platform? It's ridiculous, and it's exactly what lobbying is, because we're all stuck just being normal voters, and they get the money and influence and the precedent of relationships with these governors that we elect as representatives, and just get to decide things for us because they're the special elites and we're not. And I wanted a chance at that when I entered this trading competition. I thought it was my shot to showcase my raw skills. But when I went to exit the position at 359, like, the way I got into it was through like 4 limit orders, all around the same price tier. But I've got my support and resistance levels set up properly to make sure I get the best executions at the pivotal levels. And you had to, it wouldn't let you just sell all of the positions at once, which is what I had set up. I put a sell order in for all the shares, and I was ready to click it. I click it at 359.30. Well, market's hitting the highs on the 1 minute candle, and nothing happens. It cancels, it freezes, and it's like you have to do it one at a time. So I have to go through and type like 100, sell, 100, sell, 100, sell like 4 times, and I couldn't get the last couple in before the bell rang. It was just this interfacing challenge. And one of the rules of the competition, which is a very fair rule in the legacy trading market, because you shouldn't hold day trades like that overnight ever. It's like very obvious, like, yeah, 100%, was that if you actually had a position at the end of the day, you were just disqualified. And that was the first day, and I just disqualified. And I went back and forth with them on the support. I was trying to explain, like, this is what happened. It was just nothing. And that's the way that I think a lot of these lobbyists see. I got this impression in the SF Vegas post, because there actually were lobbyists there on panels discussing their lobbying efforts. And it really gave me the sense that maybe if someone in the chat wants to go find the specific section, I'm just gonna talk how I feel about it, but I know it is written and documented in writing. It was like they didn't really care about the public interest, and they couldn't even fathom why you would do a new regulation. It was all cost of business, and how to minimize the impact of the regulations that come down from the hand above, and decide that this is a new public policy objective. And that's not a great, I don't think that's it's just like, why would you do business, like why would you run an organization like that is so deeply intertwined with public policy, especially if you really do want to be a base root. I mean, some of these institutions are like the banks that you would think of when you think of the word bank, and yet here they are telling us how they don't want any new rules, anything else to comply with. They just want to keep making all their money. You should have seen all the crap that they said about the Basel changes over the past few years, because they had a panel on it every single year, and every time it was always just how to keep the profit into the institution in the private sector, and just minimize the compliance burden of making like a sound financial institution that doesn't collapse and require government bailout, because of course they just can. And so I just hate that idea that we would be directly involved in meaningful policy decisions that should be made by the electorate. They should be made by democracy and through the public. And any involvement that we have is just unnatural. And that's a term that I found myself saying so often over the years. Anything that seems unnatural and forced, and that I would have to pay people a lot of money to do, is maybe something that shouldn't be happening, or maybe something that is only established in the central frameworks of traditional corporation. There's nothing wrong with those central frameworks, but what I found over the years is that like, for instance, the GitHub open source is free. I don't pay Microsoft any money to use the platform and to do the things on there. Versus in the early days of the syndicate, we were paying $300 a month to some funnel website maker to do marketing and such. Marketing which was very unprofessional. And I hate to say this, but if you go to the web archive of blocktransfer.io, you can see some of the early sales pages. And I find them quite embarrassing. And it was just a very costly and inefficient system that I've sort of seen over the years, and I think is very well contextualized and showcased in this incredible community we have that's been building over the course of years without a cent. I mean, sure, there was that early advertising campaign, but that was advertising. It's not like people get paid. There's nobody that's been paid to be in this chat right now, and that's something that you can't say about some of these older brokers that have perhaps some sort of say in some of the online conversations about certain securities. And it's just how things should be, because I believe in this system of governance that we have to bring the right solution to the forefront, and to do so naturally on its own. And every single law that I've read that applies to transfer agents makes a whole ton of sense, and especially in the context of a central institution that is valuable to human employees and not on the blockchain. It makes a ton of sense to, for instance, require the retention of records for a certain number of years. Like, it's just obvious stuff that is really well scoped and defined for central organizations. And the thing I'm more excited for than trying to get them to change this or that, for instance, this is where the transition comes in with the SRO discussion on note 16 in section 58 A20 78. Anyway, I'm not gonna bore you with this. What we were talking about earlier, with being a central SRO. Now that I really first of all, the commission and staff have not replied to any of the very large swath of more personal TAD requests that we made in the footnotes and in the contents of the Edgar letter and the OCC letter, which are the only 2 letters that have been sent so far. The only response has been, well, obviously there was a withdrawal of OCC, so that was kind of like, it was good because we won, but it was not so good for me, at least, because we didn't get an actual letter from the SEC addressing all the issues we raised, which would be normally required based on the American congressional rules about administrative procedures, whereby they have to read through and substantially address all of the comments on a rule proposal. Luckily, though, we did get that, and we got it in very deep detail on the Edgar Next letter. And I can't express how thankful I am for the very deep info. I know this was years ago. Well, I guess it came out last year, so it's relevant. They really went into all of the points that we made that related to Edgar Next, but maybe not so much on the TAR side, which is very understandable. And they really talked about and discussed and went into, in writing, in black and white, every single thing that was of material concern related to Edgar Next. And so I trust that process, because that process gave us a very good Edgar Next system. And it over the years, it has done its damnedest to give us a stock market that works with the limitation. Yeah, see you, cats, thanks. Of course, it'll be recorded. With the understanding that it's all transparent, it's all public, and unfortunately, we do still have to deal with these central intermediaries. Central intermediaries, they're for-profit companies. They have conflicts with everyone, practically. And they want to keep it as this gated institution and garden that you have to pay them so much as the prime broker, or give them the custody of the shares as a security lender, just to even play in the game. It's silly, and but that's the problem, right? I don't think the rule makers, I mean, they're trying their best. They're trying their best, and they don't have something that could potentially alleviate all of the previous inadequacies of the public protection of investors through adequate disclosures in the context of a nation state and its citizens. So, trusting in people, smart people. We have smart people. I mean, that's the bottom line, I think. And I just want to let smart people do their thing, whether it's the developers on TAD 3 or the hardworking staff in the commission. I just let them do their thing. They're good, and I'll voice on the comments what I think, but they don't have to just do what I say, and I think that's really cool, and that's why I now prefer that if there was an SRO, which maybe we'll need for international expansion to have legal precedence, I'd much prefer that to be the DUNA, because that's something that you can affirmatively say doesn't have conflicts anymore. Because, for instance, the DTC as an SRO has like ginormous, mammoth, insurmountable conflicts of interest with the everyday investor's needs, because if they make a mistake, like, you're fucked. Like, you can't sue you can't sue the DTC to get the FTD data. It's like everything about it is so horrible, and it's because of this legal immunity that they have, and Trimbath is gone. She has documented ad nauseum the problems with the SRO structure, but we've only seen the SRO structure in terms of a central entity that is generally, it's for profit, right? I mean, maybe FINRA, but FINRA's like, it's different and it's complicated because sure, it's maybe nonprofit, but all of the institutions it represents are for profit, and like, how nonprofit is that really? But we've never seen a decentralized SRO, just like we've never seen a decentralized nonprofit. And so something that I just believe so wholeheartedly answers all of our solutions by giving the sovereignty that's something that's going to sort of become a court system for all stock trading needs. It doesn't need that. It's something like that. Just to have the statutory power for something like that. But then still have the decentralized, nonprofit, community-led decision-making that serves investors, not the interests of so-and-so transfer agent. Which gets back into Chive's question, which is if the private client had any prior transfer agent, and the answer there is no. It was a little bit of work, just helping them organize everything into a solid Excel spreadsheet. This might be a more unique instance, I would say. Not to go too into detail on one particular company, but just at a high level, they didn't have any prior investment contract. It was really just the board deciding to give shares to people that had helped out over the years. The last couple of years they'd been in business. It was a lot more just a person who wanted to be good on their word and give stock to people that had helped out along the lines. And that's how they got to so many investors, because so many people had helped them over the years, rather than formal investment arrangements. Chive says it's a little bit crazy to think that the established and accepted norms of the SROs can be trusted to put health of their charge over profit of their leadership. Yes, humans learn some lessons very slowly, Chive says, and yeah, it's it's something, that's for sure. I'm with you there. And it's like, give me something better, because there hasn't been something better. We've got to remember, when these SROs came into being, in the earliest of early days, it was like when people were traveling. This was before Henry Ford. I mean, there weren't even cars when they had most of the work that led to the Buttonwood Agreement, and so it was such a different world back then that required the central control of SROs, because it was just the only option to do things in any reasonably efficient time frame, and we're sitting here over a century later, and it's just due for a rewrite, to say the least. And after that, Bob asks about traditional underwriting and whether a private company needs underwriting to list on Stellar. And that's the beauty of it, Bob, is that you don't need the underwriter anymore. You could do an underwritten offering. There's ways you could still do it. But the point I always think of is this idea of central organization. A central entity will never be as efficient as a decentralized counterpart. Especially if it actually has funding and has a means of sustaining itself. Man, Windows would be down the drain if millions of developers were paid even a fraction of the salary that you'd get in Bellevue to just work on open source operating systems. It's just an asset allocation thing, right? And so for And so, as I was getting at earlier with the different account substructures, the whole point of it is that the company can just put a sell offer, and that sell offer, it issues those shares into the market, and the market is the one that determines the price. So one example could be, we make it well known that we're doing this offering, we do the SEC filings, we get the shares authorized, put them on chain, and then we let everybody put their bids for how much they'd like to pay, or what they'll pay at different prices. This is just the book building that a traditional underwriter does. But of course, the traditional underwriter does the book building by only interacting with the private markets and the private messaging networks on that opening day, right? Sometimes it could take hours to finish building that book in a central means. So the difference is now, instead of it only being an invitation to those who get special access to IPO day, which is the dumbest shit I've heard in my life. Excuse me. are those that have the privileged ability to buy before the purchase date because they have an insider connection with someone at the company. Instead of that, everybody can just put their bids out without asking for any central arbiter. You put your bids on the order book, and the order book everybody sees. The order book, so the order book builds up this depth, and then you just sell it into the order book. And then, if you want to do a Dutch auction, the idea is that instead of paying what you bid, you pay kind of the price that meets the demand for everything. So obviously some people will bid higher than the price that everybody would get at the same time if they were all to be, if you, instead of selling to the people that bid higher at a higher price, you do sell and you do fill their order, but then you send them the extra shares as if they had bought it at the price that everything was exhausted at. It's just a reverse Dutch auction. And that's an idea, and there's plenty of ideas like that. There are plenty of people just online that have thought about different ways of doing securities underwriting, or not underwriting, but just offerings and book building. And those individuals have no outlet. There is no place to put these things into practice because there's no alternative. Even the direct listing option, it still requires that central book building process where it's only those on the inside that are even able to submit their bids. And that's a power that should be in the hands of investors themselves. See, Tara, thanks. And it's just not. So no, you don't need an underwriter. An underwriter it's a figment of the legacy market where it's this idea of control and them going through the process and them helping you with the filings and them doing their diligence. And it's like, hire a CPA firm, do the paperwork to file an S1, and you can ideally, right, with Edgar Next now, which is awesome. I cannot express how much I love Edgar Next. With Edgar Next, eventually we can build into the issuer's info disclosure platform. You just add the financial statements and it automatically transmits it to the SEC and it creates the shares at the same time. It's like so simple. And then everybody sees it and everyone bids what they think it is, and you don't have to ask. You don't have to call the investment bank that presses F3 so often. You don't have to go through their central bureaucratic processes of, should this be a public company? I don't know. Let me see if we can make money on the deal. Let me see if we can get a green shoe. Let me see if we can get like a 5% stake in this company by the time it's over, if the stock goes up. It's a transfer of wealth. The IPO day is a transfer of wealth of billions of dollars from the public markets to the pockets of these underwriters, because they get a permanent defined price of what they're going to offer the shares at for the company. We're going to give you $20 a share, and if we can sell it for $40 a share, fuck you, we're going to take all that extra money. And excuse me, it's just ridiculous. It's unbelievable the amount of money that doesn't go to issuers because it goes to the underwriter, because there's no real access to the market. And it's horrible and exists exclusively because they control who can get into that first day's order book, because they control the whole exchange system. Thanks for the water. Good. All right. Derissa Cat says, can we get a stagehand to straighten? Yes, I know, the background banner. I've had this thing since 2021. It's like they had this printer at Tech, and so I printed this thing out. I don't know, I don't think you can see it, but it, like, the corners are tearing. This thing has traveled thousands of miles. Every time I move, I always wrap it up and put it in. I always take it everywhere, and it was the only option at the time. I think normally we get a fabric one, but I remember in the very early days, I needed it to not be permanently affixed to the wall. Like, honestly, what I should do now is I should just pin it to the wall, and then it's straight and it's not. It doesn't move. But I remember in the early days, I was just working out in my bedroom, and I didn't have space for like a permanent, I got like an extra bedroom that I've turned into a little office. And so what I would do is I'm not going to do it now because there's a bookshelf here and there's a lot of things that are more permanently stationed, but I would pick this whole thing up and I would move it into the closet so that because it would take up all of the extra space in my bedroom. It was like my bed was here, my desk was here, and I would sit right here and I would squeeze this thing in between the two. And it looked professional, and I interviewed 50 public CFOs doing that. It's definitely something, when I talk about open sourcing the syndicate, a big part of that is open sourcing the Salesforce and making it so that anybody can refer business to the syndicate and be compensated, remunerated for their efforts. And a large part of that is establishing a solid online collective community structure, professionalism, where everyone is informed and can answer their there's a certain set of specific questions that I've found issuers ask about transfer agent operations. A lot of it is intertwined with just general offering compliance. And so there are things like that that's a big part of TAD 3 is publicly documenting a lot of that, although it is more geared towards the exact design semantics and the case law specifically. There's so much case, I got so many physical case law, like text law things that I want to work into that to make sure that we can make informed policies based off of past decisions from the legal system, just so that they're it's not like a completely new form of governance. If we do have this court system, it's not like a completely new pie out of the sky. We need to reestablish everything. Like, we have hundreds of years of past securities cases, and it makes a ton of sense to transfer over some of the 10b5 work. For instance, just the anti-fraud work in general is a more appropriate way to put it. To transfer it over into some of our thinkings on how we rule on, because I'm imagining this future where we've got an investor in Iceland who was scammed, I mean, air quotes, right? That's the whole point of the court, by, I don't want to single out any nation, but just like think of a third world nation, and it's like maybe not the best political environment, and there's maybe a desperate company, and it's not America, right? So we've got to deal with that, on chain, basically, because probably the local court systems won't be able to arbiter that, especially if the issuer's from Sweden, right? And it's like all these different localities that really need to be in the same place if we want any kind of investor protections. Because I remember so deeply being in college and personally getting scammed through like Zelle transactions that there's no accountability for a lot of the financial institutions, and none of that was ever true. And I'm a complete idiot. I've been scammed so many times, especially with crypto too. And there was no remuneration for those bitcoins sent when I was 16 years old, making financial decisions that should not have. It's just, and those are protections that need to be in place for they just need to be in place. And especially for a securities market where the fraud can be so complicated, and there needs to be that assurity that everything's right. Thank you again for DR's community. Yeah, of course, DUNA. Yeah. Oh, thanks, Bob. Yeah, definitely get it. Appreciate it. And awesome questions on your part. I think there is one question that Bob had in the pending agenda. So if Bob is still here, I will pull that up and answer it real quick. It was one of the first questions, so it was top of the agenda over there. Bob says, I know the idea is to eliminate intermediaries and start a clean process. That being said, is there a way to onboard a small public company, possibly even the syndicate? I would buy and hodl. I love that. Appreciate it, Bob. Yeah. So with the syndicate, there are just a lot of things, and I think hopefully I have addressed most of the things there. I know we had a DUNA meeting last week that really dived into why that would just probably not be ideal, and went deeper into the discussion on natural monopoly, a discussion which has been around practically since the start of interacting with the community. I remember very vehemently some of the first conversations being around what I've always seen. It's not even always seen. I mean, I want more people to do this, but it's just years and years and years of building these things out, and there's no comparable. There's no comparative, and the more mature it gets, the more I realize that it's sort of like a winner take all sort of thing. Whether that happens on the front end side is up in the air, but in general, if we're going to have this new financial system, it makes a whole ton of sense for everybody to be on the same standard. And that's why that was one of the reasons, right? Like, the protocol was open sourced and explicitly made clear that this would serve the interests of stakeholders over and above the interests of the corporate that exists today in the syndicate, which is definitely a big point of Affero that, when I was learning about it, it was very clear that was one of the driving missions. There can still be money flowed. Obviously, this is like a real regulated service, but the core technology is really free to become the best that it can be, to dominate, because Affero work kind of makes a lot, like if you look at past coding projects that use Affero, there are names that we would recognize, like Lemmy. And when you get everyone working on an industry standard, it sort of becomes impossible to not impossible, but there are very few instances of widespread distributed Affero work that's at scale that has any meaningful competition, because why would you compete with something that's free and has all the amazing benefits of Affero as being this communal standard? And so that was definitely a big choice in the decision there. But yes, love, I'm with you on eliminating the intermediaries, starting clean. Just giving us a better system. I definitely want to onboard a small public company. I'm completely with you. There are two things that, I was thinking about this before the chat, and I'll just start with what they are. So the first one is just the interface, like I've said a ton of times. Right now, it's kind of a little manual. You have to follow these instructions, and the app experience is not awesome. It's also not super duper great for support. Like, if there are support inquiries, it's very manual. Part of what I want to build and applied to SCF for was a support portal, and that just didn't happen. Although well, maybe not. The support portal is mapped out and documented in the tab 3 site, though, and it's the interface eventually of what I think will become, not to distract from the point. Okay, we've got the app and then also the fiat stablecoins, just to get the answer for you. Those are the two things I really harp on and see as very important if we are going to start with that first small public company. But to go on that tangent for the support portal, I do see that there's probably some role. There's always some central role of the key pairs that we sign from the block transfer stellar accounts. Those are accounts that, by definition, they carry the weight and the authority of the brand, right, as that certificate authority, like I said earlier. And so with that transaction that we approved at the start of the meeting, that was a transaction from one of the block transfer accounts on chain that will carry forever now the association and reputation of the public key that we publicly declare as the organization. And so part of that is very meaningful is ensuring security for signing. So there are just countless examples of DAOs or other blockchain-based organizations that have had their wallets compromised in one way or another. And a core tenet that I've always held so dearly, that was very well pounded into me in college doing research under Jerry Perello, who's the CISO at ICE, was cybersecurity, just extreme cybersecurity, maximum cybersecurity in all regards. Now, luckily, most cybersecurity work, and James would probably be better to comment on this, but most cybersecurity work, it's only really to protect you as a central organization. It's only really so necessary because people inside of your corporate VPN or whatever have privileged access to special information that's not available to the public. And while that is true for MNPI and will always be true for MNPI, it's not true for the blockchain assets. The blockchain assets are very explicitly only on chain. It's only the representation that you see on chain that makes it happen. And that transaction that we approved at the start of this meeting, first of all, that will be public once we submit the transaction to the network, but anybody can copy and paste that transaction. And the only thing that verifies it are the cryptographic signatures. And the cryptographic signatures become public. It's just about having the private keys for the signers on the issuer account. So I think it's 5, but I will give you the exact answer here because it's it's only me right now managing all of this, but of course much of the business continuity documentation which exists internally is actually designed around replacing these key pairs if I die. So we've got 5 signers on the issuer account right now, and they Stellar has I'll share the screen, I guess. Excuse me. Stellar has native multi-sig. It's like really cool, super efficient, awesome. I can't understand why people go for account abstraction when it's so damn easy to change the code on the contract. The base level multi-sig is just bar none. I've never seen anything like it on any other chain. It's awesome. And so it makes sure that, like, to issue a new token, you need a weight of 40, and you can assign the keys with a weight. We've got this one has a weight of 40. I think it used to be 39, but this one's got, this one has a higher weight of 64 to manage the account signers. And the other ones are lower weight because you actually do need a low threshold for some of the KYC info, which surely it's come up in other questions, so we'll touch back on it. But basically, there are operations that need to be signed to manage the fungibility of assets in an account. So, like, if you need to freeze an account for any reason on the central governance side of things, if there's an SEC halt, if there is an FBI investigation, things that like a central entity would need to comply with, especially if it's under the American jurisdiction, which so few. But anyway, those are things that you can do with low threshold signers, and that's the kind of thing that would get worked into. For instance, that would get worked into a support portal. Something else that would get worked in is like onboarding the legacy investors, verifying their data. That's something that I think you just kind of need people to do, and so having an interface where syndicate, whatever we want to call them, team members are able to just remotely log in on their home terminals. And specifically, I envision it just like a hardware wallet would be ideal, but I think a hardware wallet would be ideal. But I've just thought that over the years that the cost would be a little much. So you can just integrate into the mobile app. Because the mobile app's like pretty much as secure, especially if you require 2 or 3 auth signatures for anything. That's always been my thought process there. So you can just have different members independently review the same information, and then if it's all set, then that in the long term is how we'll scale onboarding to have to because you'll have to onboard hundreds of thousands of old investor positions, and you have to kind of manually verify, okay, this is the person, this is the name, this is the address, nothing fishy's happening here. And so with the app, you can scan, you can log in like a Wallet Connect style, and then you can just sign the transactions locally. It's like pretty simple. And super decentralized, because now you don't need one central signer that has the weight of, like this signer could do anything it could like make a new stock tomorrow that's not a real stock, right? And so just, set up the key recovery mechanisms there is really important, because if this if any of these signers, if the multi-sig thresholds don't add up anymore, well, now you can't do the basic business functions that you need in managing the trust lines, which ties right into the KYC. So something that's explicitly internal, but in every regards, it's public. You can see the signers, you can see the transactions, you can go through every transaction, see who signed what, and you can clearly see exactly what's happening. And as much as possible, there are not hardcore API keys between internal services, between like the issuer portal and the app and the issuer link. The support portal. There are some of those set up in AWS, but by and large, I'm trying to pull them out as much as I can with my limited technical ability there, just so that it's set up to only authenticate with the mobile app, because the mobile app really is supposed to be sort of the give all of a cold storage. I remember in the early days, I thought about how this would all work, and I especially did really want it to work, like I said, with hardware wallets. But hardware wallets, first and foremost, are just not economical for billions of people. Billions of people are not going to get hardware wallets to have their $5 of a stock on it. I also thought about giving hardware wallets to people that have like 100,000 in their account. And in particular, the bigger thing for me, because in the app, right, you can just, like, I'm envisioning you can just set your own multi-sig up. You can import your different accounts locally. You can have the secrets. You can add a signer that is a hardware wallet, and you could do that yourself. The bigger thing for me than the hardware, because I also thought about this for the issuers. Okay, how are the issuers going to log in? Are they going to, because, a lot of them, maybe they're not super familiar with non-custodial blockchain wallets, and they've never generated a seed phrase before, and they don't know how to, not yet, right? Not yet. And so one thing I thought of was, well, what if we got, and I researched into this far too much. It was such a big thing for me at the time, and looking back, it just sounds silly. This was 2021, 2022. Like, you can get one of those machines that they used to make credit cards out of metal, where it like stamps it. I guess the metal ones they don't stamp, but you can get one of those machines where it stamps with like bank card numbers onto a card, and you can make like a hard copy of a seed phrase. And my thought process is like, you would open up an account, and then we would make this seed phrase for you, and we would send it to you, and you would input the words into the app. And I was like, wait a minute, that's super duper centralized, and it's the biggest custodial risk I could ever think of, because all you have to do is crack the history. There are physical ones, but at scale you really need digital ones, and the digital ones have like a stack trace of history, so you could pretty trivially extrapolate what all of the seed phrases were for every account if you didn't like routinely clear the memory and then physically secure the facility. And one thing I've tried to do is just remove the need for physical security for anyone that wants to be involved with the syndicate, because I think back of that story I've told the community about my dad's work on some of the early bonds for DTC's New York depository building after 9/11, and it was like so high tech, so secure. You had like iris scans, fingerprints, like 5 levels of security guards going. It's like unbelievable the amount of physical security that you need for like a bank deposit or a physical certificate or all these things. And especially if you centralize them, which is exactly what, in theory, right, it's exactly what the accounts on chain do, because you have a central issuing authority, a certificate authority. Just because I've always thought it would just be easier to manage the key security on having one issuer account instead of having a diverse, spread out base of them. It just, more complexity, more prone to failure, more possible errors was my thought process there. And it's just not necessary to have all that physical security in a digital world where you can have multi-sig with 3 people who are dispersed across the globe, and it's going to be, and they don't release their public location, it's going to be pretty, it's just a lot more secure, right? And if something bad happens, you're going to know. But if someone breaks into a bank vault, well, maybe you won't know, Do we want to put that on the news? Probably not. And all these quandaries. And so, sorry to go off so far, but yeah, for a small public company, the bigger thing is that app, because it is so central to the key security, and the key security is important, just making sure this is a good first experience, because for so many of these investors, especially the elder ones, which are so common in some of the small companies, they're like retirees, and man, I don't want their first experience with blockchain to be poor. I don't want them to have all this confusion and make it so difficult to just to even set the thing up. They've got to like, and some of the interfacing is really, really, really weird. If you use the existing style of wallets, because of how we use some technical things for the Rule 144, it's like not as intuitive interface in a lot of apps. Although it is what exists today, and it is what is in use for this initial client, and if there were new clients, it would be the same thing. It's fairly manual to go and add the addresses, because the app can't communicate with the backend server. You've got to have this manual human interleaving step where they submit this web form, and then you've got to verify the web form, and then you've got to it's a doable thing, but just it's not super ideal. And if it's a small public company with like 5,000 investors, then that would take, I think, like at least 4 full-time employees to do in a reasonable amount of time, because you've got to still abide by the 3-day turnaround rule. And yeah, so I'm gonna run to the bathroom again, and then when I get back, I'll touch on the stablecoin piece. But the stablecoin piece, if you forgot to run, it's a lot of work, and we'll get to it. It's important though, because you want a trading experience that it's better. It's better than the crap that people put up with today, and so we'll dive into that. All right. So, part of the challenge is that to get what I would consider a usable stablecoin on Stellar, which is very well ramped and networked. I mean, it's one of the top 10 cryptos, and yet still, to get those dollars on chain, it is quite the convoluted process. And through talking with some of the more institutional parties that are kind of involved in the work that we do, some of which is like NDA and internal. That's another big thing that will work its way into the more open source organization docs is just not signing NDAs anymore, so that everything can be completely and fully transparent with everyone. It was just, I remember some of them in 2022, and it's like, oh, it's the only way we can get service or make things work or move forward. And in every case, it's just not been a super awesome experience looking back. And it's silly because, again, now you've got to maintain two versions of the truth, the one that's not NDA'd and the one that you can talk with. Like, well, I can't talk with anyone about it because no one else works at the syndicate. And so anyway, on the stablecoin front, it's quite challenging to go from those dollars to the stablecoin. And the largest proponent that would sort of be acceptable for American consumers basically involves opening up an account at Coinbase and then waiting 2 weeks oftentimes or more to have your deposits settle. And then if Coinbase decides that they like you, then they'll let you send some money, but maybe not all the money. I had a horrible experience where my partner lost about 6 figures from this terrible deposit cycle, which I'm working into tar, because it's just a very bad way. And there's like other sort of fintechy things that you can do to get this particular stable coin, but it's very convoluted, very technical, and it's definitely not the sort of thing that I would expect most people to be comfortable with. It's not that experience where you just link a bank account and you add money, which has all of its own plethora of problems, because I've explored implementing that very, very, very deeply with a lot of institutions, and it's a whole lot of work to do that. And then of course, midway through last year, we had our account at this institution terminated permanently after months. Do I say here? 4 months that we spent affirming our use case with their team internally. They even offered to be a follow-on investor in a seed round, and they were very intimately familiar with our business, and just built so many, I can't express this enough, probably half of what's public on the org, the public website at the root domain of block transfer for the AML policies and some of that compliance stuff came straight for, they freaking emailed me what to put for the AML policy, and it was ridiculous. The policies, which by and large were automated by the KYC provider we had then, and then I spent literally months working out this particular page, which was so necessary for their own internal risk keeping, so to speak, of banking standards, to make sure that we were compliant, and very clearly detailing, and this is a big part of it too, is the funds are not FDIC or SIPC, because a transfer agent is not. We're not a big transfer agent right now, as most are, so there's not going to be that federal insurance that people rely on so much there. And obviously we're not going to be a freaking broker, so we're not going to have SIPC either. So it's a more convoluted path where we either need to become a non-bank transfer agent, which is, it's on the roadmap, and that's kind of the idea that I've had for, let's see, well, let me give you the exact one here, because the roadmap is a well-known document that dictates that we should be a Wyoming special purpose depository institution. But the challenge with the SPDI is that you need $5,000 to open an account, and it's only for businesses. I've thought about doing like crypto flash loans, where you can get the 5,000 to open it, and then you immediately repay it back after the account's open. But like, I just think that that completely goes against the spirit of the law, and it's probably not legal anyway. So here's the roadmap as it stands. And it kind of ends with, we're on basically like step 2, okay, because I'm just horrible at front end and we haven't gotten past step 2. And you know, it ends with being an SPDI, and you can get FDIC. It's not required, but you can get it just for like a posterity kind of thing. Yeah, so this is from February of last year, and it's like basically we went to venture with this, and we said, hey, we want to do this. We need I've got the pitch deck. It was 25 or 35 million. I don't think it's a material difference for something of this scale. You know, you need 25 million in deposits, and then it's like compliance work on top of that you need to do. And so I was like, I want to raise this money to be a deposit for a bank, and I'd like tap my whole network for it too, from the February to April period of trying to make the SPDI thing work. So let me move my face. I'm probably covering it. Yes, I am. Okay, cool. You know, I've really for a long time worked quite directly on the trying to do it as our own banking institution and establishment, and I think it's really important because without money, it's like not really a stock market, right? It's just corporate record keeping, and that's like totally okay, sort of, but it's not the kind of thing that I want a public company to do, because it sort of footholds us. I think this is just a thought process I'm now having. It footholds us as just being a compliance tool, which is the problem that I've had personally selling the services or you know, discussions. It footholds us as just a compliance tool, and really it's a whole new way to do the markets. And if you want to get that across, I think it's important that you get it across early on, instead of like if we were the transfer agent for like Fortune 500s, and you know, we're the transfer agent for like a year or two, and then we introduce deposits. I'm not sure that it has the long-standing impact that you would get if there was trading from day one. Because if there's trading from day one and there's money on the line from day one, then it's real news to change transfer agents. It's real news that starts a viral loop, and more importantly, for the first issuer that does it, that's from the public side, it gives you immediately it gives you a secondary market that's not crippled by only having the price discovery of people that are technically adept enough to create some stable coin and to trade it on some market through some foreign app that doesn't even really look good for 95% of investors that have never used Stellar. And so the momentum, it's like a slow fart is the only word I can think of to describe it. And sure, it ramps up over time, and maybe over time you add the trading, but the trading is so central to all of it. The whole point is that there's this second alternative market that is completely outside of the custodial structure. And if there are like 5 shareholders that know how to use particular stable coins, and the app doesn't let you deposit money, it's just going to be impossible to do any real fundraising outside of their structure. And I just don't think it's going to set the right precedent going forward, because I want all offerings to go on Stellar. I want them to file an S1 and put a limit sell order on the order book. And that doesn't happen if you like split the offering between Stellar and the DTC. It doesn't happen if the custodial structure still gets their hands on any of these shares to perpetuate their horrendous monopoly. And so I think the stable coins matter, and the user experience is just me personally having dealt with early versions of Robinhood that, like, I know I've said this before, but I'll get it on record here. You know, I certainly, when I'm thinking of this, think about the experience that I had when I put in a day trade on Robinhood, and because I was trying to get around the PDT rule, I had all these different brokerage accounts, and it's like, oh, free trading, oh, this is great. And I buy the stock at like 9:35, and at 9:45 I want to sell the stock, and the system just freezes. It doesn't let me sell out. It gives me all these errors, and so I email support, and it takes them like 3 days to figure out what's going on, and over the course of this time, first of all, I tried to sell all day, every day, the first day, and it just won't sell. There's some system error. The system error, which I later learned, was that it was freaking Apex. Okay, it was it, it was the wholesaler that had a problem, because it was back in 2019 before they internalized the routing. And this is fully documented. I've got this in writing publicly. Maybe I'll pull it out, but anyway. Static sources. Yeah, here it is. Bam. Voila. So here's the email exchange, and it's all I can get. I haven't deployed my own sites onto like a front end yet, because I'm just horrible at front end. But it is on GitHub, and it is on a raw IPFS hash, but I'm not going to drop a raw IPFS hash into the chat. I just don't think that's appropriate. And days to get back. You freaking can't sell the stock. It's 15 minutes after the open, and it just doesn't work. And God, I remember that experience so vividly, seeing the stock in its first overnight day lose 20% of its value. And it's just a failure that shouldn't happen. And it's a failure that only happens when there's a reliance on centralization to make things get to market faster so we can have more customers, which is exactly what I see the argument being for doing the stable coins off of the current banking infrastructure. It's just not good. But luckily there's light. There's light. The stable coin bills are going through Congress, and they are good. They let people make stable coins. It works for everyone. It's awesome. And these the worst part is, after like days of this, I lose. It was like a couple of $100, but man, the principle of it was just horrible. They take it so seriously, and then at the end of it, they just decide that they're not going to offer any remuneration. It was just oh my god. And that's a taste that'll never wash out. Just like the sneeze will never wash out for a lot of people. And it's not a taste that it's not something that I want to happen with the syndicate, because it's just not necessary. And we're dealing with people's savings and retirements here, and I think that should come before the potential harm of $1 million regulatory fines, in the sense that this particular intermediary would happily pay $1 million regulatory fines, and has happily paid $1 million regulatory fines to make these problems go away. And I don't think that's an appropriate business practice, and I don't think that it solves the very material adverse effects it has on people. You can't, I don't think it's very difficult to quantify, some long-term investor having some slip up, and their account custody gets messed up, and then their shares gets transferred or sold at the wrong time in the wrong place for the wrong currency. You've got to retroactively undo that by freezing different accounts, and it gets really deep into the governance mechanisms, and now there are potential tax consequences for that, for the investor, that are just impossible to make whole, because it's just, if you have any fraud on chain, it's like it happens quickly, so you need the automated systems in place. And I'm decently into making automated systems, but all of the work is public for the trade oversight. And it's just not there yet for public markets, because we need real people to work on them. Real people like everyone that's listening in, everyone that's joining the community on GitHub, everyone that's building out the infrastructure that will fund and build and deploy for all these future capital markets. Also relevantly, the BlockFi story comes to mind. I remember back when I was running the Friends and Family Fund, it was like mostly Bitcoin, right? On the crypto side, which was most of it. And deposited nearly 2 Bitcoins into BlockFi. And first of all, I will caveat that I had experience with, it's a long story. Give me a sec. So it was 2017, and a lot of this is wiped. I haven't seen like a whole ton of documentation on this. Basically, everyone remembers, if you were in the ICO craze, there were all these Ponzi sites. And everyone, Bitcoin is all the things, and that's the most I'm ever gonna do that. Don't ask me to do that again. And there was BitConnect was such an obvious scam. It was like hard to predict what was gonna happen there, but. There was another one called laser.online, and it was a Ponzi like all the rest. I think it was 15% daily returns, if my memory serves me right. It was 14% daily. It was like crazy. It was like obvious. Maybe it was weekly. 14% weekly returns. Something that's just an obvious scam. But I sort of learned about it through just online public research a little bit earlier on in the scam cycle, and did an analysis personally of kind of what I thought would be the exit point where they just stole all the money, which is exactly what happened. They stole like $110 million, if I remember correctly. But of course, that's like the nominal value of the top end of what they say is on the platform, which is of course just a made up number. So I think they only got away with like a couple dozen million. It was a bad scam. It was a scam that was not protected from the investing public, and it was just like BitConnect, people pouring their money into it, touting it, all the things that you would expect. I was more of like a passive observer and watcher throughout the whole experience, and I just learned about it a little bit early on. They only had like 6 million in at that point, and so I'd put some crypto assets in there and let it run. I did some early withdrawals to make sure that the withdrawal infrastructure was actually there, and then just sort of personally timed it to the point where I thought it would collapse. And also, right, it collapses when the market collapses. So it was like not a month after the crash of December and January that everything is sort of wrapped down there. And so I withdrew all of the funds like 2 or 3 months before it collapsed, just to be a little bit safer, because it's like, okay, this is it's at the 86 million mark, and it's pretty obviously going to go off the rails. So all this to say that I have some experience in time, because that was about 4 months. I have some experience in timing the collapse of unsustainable financial infrastructure. One such example being BlockFi, which lends out Bitcoin, lended out, and thankfully, I am very thankful for this. The BlockFi bankruptcy has been really superbly executed, and people are getting back like pretty good portions of their money. Definitely more than the Mt. Gox events. It's like I've been happy with how the bankruptcy court has handled BlockFi. Unfortunately, the bankruptcy court in that different jurisdiction for that other exchange Yeah, it just didn't have the. That's just another example of why the legal precedent matters so much, and the governance of the secondary trading matters so much. Because secondary trading is like, the complexity and the importance of courts. It kind of ends. The most important thing is like, okay, bankruptcy. Yeah, you got to enforce in terms of decentralizing capitalism. Kind of the most important thing is what happens in bankruptcy, and that's the locality. But just below that, I think, are the primary offerings and the secondary trading. And the primary offerings aren't standardized across countries, and the secondary trading isn't even standardized across states in some instances for regional offerings in America, with the state level sanctions that are horrible. There was a petition recently that I think it's going live before WhatCan's petition, which is crazy. It was a petition on the 3A10 exemption, which is being abused by local courts for doing intrastate securities offerings, and they're just dumping the shares on the market, and it's like really bad. And I can tell you 10 more examples of local judges kind of messing up intrastate securities offerings because it's just such a specialized and nuanced part of the law that isn't broadly understood by just regional people that get voted in for a local county board seat, and they're expected to decide if this guy's an insider and the use of the funds and the proceeds, and it's all very, very challenging to do, especially because a very large swath of the transfer agents, like CMKM's transfer agent in 2001, is documented in where's this book? I forgot it. Here it is. Great book. It's not on LibGen. Freaking documenting scam. Okay, see, that's the whole point, right? It's financial fraud that really touches people very deeply. And I remember there's a passage in there that talks about how the transfer agent was shredding all of the corporate records and all the stock transfer histories, like literally a day before, There were things shredded, but the story here is that the author here actually went and reviewed those records a day before the FBI seized them, and then they were no longer available to anyone. And then, unfortunately, there's a lot of transfer agents that will just blindly rubber stamp a 144 approval without really setting up the infrastructure to make sure that these shares should be traded publicly on the market, which is something that is extremely. Yeah, I'm glad Chives has read it. It's an old one. It's a goodie. Love Mark. And so there's a very deep responsibility that ties in with the certificate authority thing, of making sure that the right things are happening, or at least the right things are happening to the best knowledge that everybody can collectively contribute to it. Not a central guy who just ticks off a compliance checklist and tries to minimize the ongoing costs by saying that it does this, this, and this, because that's where, in that particular petition, a lot of the problems came in with the agent just going through the checklist, which is so common, and basically normally you just get a legal opinion for a couple grand, and that is the basis of everything. And then there are complaints about the lawyers being corrupted in small law firms that don't have as much oversight as to the work that happens on, for instance, the 144 releases. So not only is it just this massive cost, and it takes weeks, and it has paperwork and everything, but it's not even reliable. Because there's no standard or bar of some of the rules that we're actively working to, like the 144 insiders on the Section E no action letter is like core to all of this, and it's something that's been on the back of my mind since we had that conversation with staff in 2022. It's over 2 years ago. It's like so clear that is central to the whole design of the system, and it's something that no other transfer agent's gotten right. Excuse me. The way that I see the market today, it looks a whole lot like the early days of public electric utilities, in the sense, in the sense that there is really just not a standard in place. And it's like everyone having their own little transfer agent. This is a picture of New York in oh, I've got to think that this is 1917. But it's a well-known picture. I'm sure I could search it and it would pop up with the exact date. Um, of DC electric transmission wires in New York, and you can see that the sky is just littered with power cables. And that's because electric generation was only done through these little tiny dinky regional DC plants where you can only transmit that energy for a mile. And so there has to be a ton of different providers for every different person. And I can't overstate this enough, it is extremely inefficient. If you compare this versus modern generation at an omnibus plant, and this also gets into the natural monopoly perspective, you can generate orders of magnitude more efficient at a central location and transmit over AC, so there's only like one power line, which is statutorily codified into American laws today, in that the power companies have to share this one central power line because it's a natural monopoly and it's this transmission venue with a high upfront cost that makes it so much simpler. And this is how I see the transfer agent market today, because everyone is doing the same bad thing, being local DC distribution of power generated very close by. And like the parallel to that would be a CSV spreadsheet, and it's orders of magnitude less efficient than a blockchain solution. But of course, there's no blockchain solution. There is no central power plant in this picture. This is before Insol. This is before the innovations that came from Nikola Tesla that was modernized and commercialized by Insol. And so we just need a system and a standard that works for everyone, and that's exactly why TAD3 is an open source free protocol. Because I just want this thing to work. I just want the market to work. It's always been the goal, is to just have a system that actually functions, which we just don't have today. We just don't have it. It's bizarre. It's just bizarre. It's unbelievable. I mean, you go through decades of people complaining about how this whole thing is horrible, and no one does anything. It's like, guys, and understandably, they didn't have blockchain, and it's just, I understand why, but, so I hope that answers that one. All right. Chive says, never once thought about the logistics of moving. Yeah. Well, I didn't do a perfect job. You can't see some of the corners that are ripped, and honestly, if I turn this thing around, you would see a very material amount of duct tape. So this is not perfect. I am proud though of I don't know how much you can see it, but this is the if you look at the adventure video from all the way at the start, that was the panel that was on the front of that little prop that was laser etched with the logo from the woodworking studio. Just another example, I think, of giving people the tools to go and do and make their own work with the resources that they need, and how they'll do innovative things on their own without central direction. I remember spending hours on that, and also I've got a clock that I cut out of a piece of scrap wood and laser etched with the same machine and added a little clock face to it. It took way too long, but it's like, these are the kinds of things that they just don't have any place in the central capital allocation system, because you have to prune it explicitly toward the immediate self-interest of the investors instead of the potential long-term vision of a company itself. And so on the small business, on the capital formation side, that's a big part of what I saw. It's just something that not only was it not met, but it was actively disincentivized, because there's so many innovators I've talked to that are literally on the verge of bankruptcy because they can't get a last grant application from the only innovators that actually connect with them. And it's just I mean, it's the reason why that we have 500 companies that receive all new investment capital from retirees, practically, at least in the American context. So it's just a complete, total gross mismanagement of capital, and you see it reflected in skyrocketing PEs that just only exist because it's the only options that a lot of people have. You just can't access an actual diversified array of real, tangible, long-term investments. And that's exactly what I saw day trading, is that the smaller and smaller the capital allocation was, the higher the percent returns, and the bigger and bigger you get, the more slothy, lethargic, and challenging it becomes to actually have outstanding returns. And that's why some of the best hedge funds in the world limit contributions to existing employees or their family, and they don't take on, and they often take on almost no new capital, because strategies stop working at a certain point. And that's completely okay if there are a billion people that are available and open to the system and they're allowed to trade. But the way that central asset management works is that's just not the story. You need to have the backdoor deal to raise the $100 million round, to deal with the $4 million compliance cost, to even open up a prime brokerage account, to actually be able to trade at the full system and set of tools that the large players have. Because you and I just don't have access to name any ATS. Name any of them. Any. Maybe with the exception of U-Stock Trade, which I think was shut down, right? Because they had that massive SEC fraud where they kept operating underneath the capital requirements. I remember conversing with the founder thereof quite some years ago when they were in the midst of that investigation, and the gusto and they're just not good people. Chive's comments some more on transparency, and I super appreciate the sentiment on a universal transparent system, which does retain the respect for the NDAs. Luckily, it's very minimal, the existing NDAs, and it will be no more. One of the larger questions that'll require a little bit more work this year is the LPA, which was implicated in some of the earlier discussions about, I think this was actually on Discord, but basically the amount of work that we want to force DTC into in terms of just managing their own custodial wallets versus us doing it for them for free, which is the existing system. It's like ridiculous. It's unbelievably stupid. Chai says capital requirements. What's that? So alternative trading systems are broker-dealers, right? Broker-dealer owns, runs, controls it. So the broker has capital requirements with the commission and with FINRA. I don't want to badmouth this guy, but I will look it up just to give you the exact number on this particular intermediary. Let's see. Yes, so they fell below the $250,000 minimum requirement, which is a pretty standard set for brokerage capitalization, and had to pay $85,000 in civil penalties. Yeah, because they were running their dark pool, and I guess they just didn't make enough money from the $2, $1 trading fee that they were charging retail investors to access it, and so they just, I guess, lost money because it's like such a central business that requires these fees to stay alive, because that's the only source of income for an ATS, and they just didn't have those subscription fees and revenues, and I guess their clearing balances. There's a 13-page report. It's the exact findings from the commission. But I do remember more extensively looking at it back then, but the conversation or the discourse back and forth with the particular defendant who was named in it's an enforcement action, right? Yeah. But I guess the SEC got a jury trial for it. Anyway, it was just a whole mess, and it's a whole mess that only exists because a company exists as the exchange, which is just so problematic and so systemically flawed in so many ways. It's the reason why the SDEX matters so much, because you need a decentralized nonprofit protocol that operates as a public utility because the exchange is the most important part. It's the most important part. Who has access and control and everything about the exchange. And there's 4 dozen, on the low end, if you want the off exchange venues, it's more like 100. I mean, there's so many of these businesses that only exist by selling exchanging services that used to make a difference when a NASDAQ or when a NYSE trade cost like 1 or 2%. It made sense that this $400 a trade business would exist, but it doesn't make sense anymore because we have free exchange. We have free markets that can by themselves determine the price and the settlement of securities with atomic swaps. It's just so trivial. So Bob asks another question about the clawback of securities already issued to DTCC. Excuse me. Would the issuer need to buy back the shares and then reissue the tokens? So no. So the transition from the old transfer agent to block transfer, it's really just getting that a spreadsheet of the old holders. Publicly, you'd know that as the stockholder list with name and address next to the shareholdings. But privately, right, they have like socials and they have the private info and all the PII. So that gets moved from the old agent to the new agent. And they're pretty standardized processes for that by stamp. Or, excuse me, by the STA. It's getting a little late. Not going to comment on them now. Don't see a need for that because it's not in the question. So once you get that new ledger, obviously CD is going to be, they're going to have 99% of the stock. And so the issuer, it all gets put on chain. The way that it's implemented, you can see this with Laylor very clearly. Because their chief executive, who has like 2/3 of the I guess it's not public information, but also it's an insider, so it's supposed to be public information. Gotta calm myself down. Basically, there's a very large proportion of that asset that's held in one omnibus account on chain. The nomenclature in Stellar is that there's an account that issues the asset. And when you issue it, it's best practice to just issue all of it at once into a distributor account. So if a company gets onboarded and they have 100 million shares, 100 million gets issued at once to that distributor account. And then that account, which is controlled by the syndicate, distributes the shares to all the old holders. And it's all the issued shares outstanding, just sitting there in a pool until people claim it on chain. Or of course it gets sent to CD. So we've always had a separate account resolution scheme for CD just because it does hold so many of the shares. And it's just an on-chain account that's a vanity address for them as CD that states quite explicitly, you send the shares there and then those are the shares in CD. And at the original onset years and years and years ago, the thought process was that you would sort of be a member of Fast DWAC, and then they would send you their legacy IP address specified computer instructions on a central database server, which are horribly insecure, but you can read the LPA agreement and you can figure out why they require you to have a blanket banker's bond for tens of millions of dollars for their own liability, which only exists because of the flaws and inadequacies and COBOL code built so deeply into their own systems for the FAST program. But aside from that, however it's set up, there's some way that at the agent and on chain that DTC is identified with its own address. If you were treating DTC like every other shareholder, they would have to create their own account and deal with their own custody structure, and that's sort of the way that I lean because they're just one shareholder on that list. Set up under the hood, Chive says, is interesting to hear about, and in some ways, maybe it was a test run for other omnibus applications, which would be expected over time. Part of the thought process there, Chives, is that anytime that you do hold an aggregate as a pool like that on chain, you're sort of considered a custodian in the legacy infrastructure, and if you facilitate any business, you're basically immediately considered a broker-dealer. And there are some real nuances on some of the primary and secondary offering sides where a broker can't submit an order to the SDEX on behalf of their client unless there's like a very high level of assurance given to the agent. I don't have the mental bandwidth to go into the specifics there tonight, but it is a lot more complicated if a broker tries to operate on TAD3 and they're not using non-custodial wallets, if they're using custodial wallets, because the rules as they exist today all assume that the broker is part of a clearing firm, which does not apply when it's on Stellar. And so if they try to centralize the custody, as CD does, as a clearing firm, and basically it forces them to route through an ATS, and there's no ATSs that are built on Stellar or will ever be built on Stellar, God, willing. So yeah, things being custodied in mass is like a really bad thing that requisites central regulation of the central entity that is centrally custodying everything in one place. And it's just a whole lot. It's all the problems that we know of today that shouldn't exist. You should just have a non-custodial account and you have the shares in your wallet. It just makes everything so easy. It's so much better. And yeah, when I think about some of the front-end design interfaces, which we'll get into in the later questions, that's top of mind for me, because now you've got this Stellar order book that looks a lot like a routing option that you would expect in a firm like Apex, which is a horrible entity that should not exist. And the problem there is now you've got different trading venues. And unless you have a unified global order book, there's always arbitrage between those venues that creates transaction volumes that do not serve any meaningful purpose. They are not there for capital formation. They're only there to exploit the subset of investors that are not able to participate in the true market. And this is exactly what we see today with the fragmentation amongst dark pools. And it is core to a research paper that I've been wanting to write for 8 months about liquidity being its own incentive. And I suppose it's not going to happen because, well, it's not going to happen in the way that I envisioned it, because the academic conference that I would need to submit it to is like the deadline's in a week. And honestly, the paper submission deadline was last Friday, and I haven't even really started it. But this is something that I've certainly seen so deeply, which is that anytime you try to incentivize liquidity, it just makes so many problems. Today on my personal Stellar account, I removed a trust line from a DAO that attempts to do this, and I've watched them and interacted with them doing this for literally years, and it's all on chain, and you can see all that. And it's just fallen victim to the same quandaries that we see at DTC, where those that just by nature, by gaming the system, that get a little bit more control of the central infrastructure, and that control compounds into, incentivizing liquidity as being a discussion about paying people money to do the things that you want them to do, and that is centralization. And so it's like impossible to have a decentralized stock market that also has people getting paid to, like the market maker exemptions, these special carve outs or rewards for liquidity mining outside of exclusively an AMM that's it's for everyone. Um, it's okay to stay mid-level, says Chais. The analog makes sense. I appreciate that. I've got this hunch, and I would love to prove it academically. But in the long term, the liquidity incentives are just horrible. And then they promote the fragmentation, right? So now you've got all these different markets, which originally sprouted into existence to undercut the exchange fees. But that's not an item anymore, as we've established. And so you can just have a free market that everybody uses. And you don't need all this routing crap. You don't need the exemptions. Put everyone on the same field. Um, and that's part of the thought process that makes it challenging, because if we say no to the DTCC LPA, then that's a court case. That's an important court case that challenges their monopoly. It's a court case that we win if FINRA wins. It's a court case that gets more technical if, well, I don't even want to imagine that. I'm sorry, not FINRA, Alpine. Alpine needs to win this case. It's so important. There is no reason. Here we are 100 years. This entity, this control, it's so wrong in so many ways that they're supposed to be this government regulator of the markets, and yet to participate, you have to pay dues to this private entity. It's that's not how governments are supposed to work, and it's not accountable to the people, which is the whole point of decentralization. But anyway, the issuer doesn't have to buy anything, so to speak, when there's the new transfer agent assignment. The shares just stay in CD, and then if people want to withdraw their shares, right, they just withdraw how they would normally withdraw. Maybe they have to add like their account number to get the public key, but also they don't have to add their account number because DTC can send it to the distributor account omnibus, and then you can onboard with the identity that they send over, and then also that helps us because we have to track the basis. So they're supposed to send over the basis when they send over your position, and the basis is all on chain, as we've established. You can look at some of the on-chain transactions in the code, and you can see how that is done with legacy transactions. Legacy holdings, that are not issuances. There's that record keeping of the basis that's associated with the distribution transaction, which gets remapped internally on the Amazon code as its own database, separate from the PII database, like its transactional distribution database. And there's there's a whole ton of infrastructure built around that. To make sure, because once it's on chain, oh my god, it's all so easy. You know the basis because the trade is on the DEX. But before then, you've got to kind of foothold it in there. Has nothing to do with the issuer buying back shares, because again, it doesn't need to happen because the tokens are the shares. But came to mind. Okay. Now we're on to Chive's questions on, okay, great. So, what is the vision for the future growth of Syndicate in terms of private and public issuers as clients? Really want to focus on private issuers until we have that. We saw it earlier. Until we have the app, and really I'd like to complete that initial roadmap. The initial roadmap might not end on SPDI, but it definitely, I'll pull it up. It requires a lot of things that are on that roadmap to in my mind, have public clients that works well. Paramount to that effort, because once you have the stable coins, once you have the stable coins, the very immediate next step is doing offerings on chain XDTC. And there we go. I will put myself over here. Yeah, so forget the SPDI. Let me just go over here. Maybe cut myself out a little bit. Maybe this will help. Oh, that didn't help. There we go. Now you can see things. That's good. Okay. Yeah, looks good. Oh yeah, you can see everything. Look at that. Beautiful. So the Edgar stuff is awesome because it basically does most of the work here in 3, and we just have to implement. This is why I wanted the federal login. Login.gov doesn't have an API for the authentication of users, and that's what I was really trying to get at in the Edgar Next comment, and it just didn't happen. So it'll need to be like a the technical thing is a Selenium interface to the public login website, and then you can like interface it back and forth between the users, so it's just a little bit more automated, and they're not doing a ton of work on the authentication. And then the DEX trading requires SEP8. So SEP8 is something that I've done SCF things for, and I just haven't gotten the funding for it or the incentive for it. But it's really important because it automates a lot of the compliance work that I'm doing right now for the tokens trust. It's like very in the weeds kind of thing. But basically, I'm still manually doing a lot of the KYC transaction management on chain, and SEP8 automates that. You can see some of the early implementations of SEP8 in the Syndicate API because that is where it will be implemented. There it is. But it's still pretty early stage, and it has some things taken care of, but it's not finished. Like 80% of it doesn't work, and it's just right now set up to do. It's set up to do the when you add transactions, or excuse me, when you add assets. But it's not set up for trading, and that's kind of the more intricate and important part that interleaves with the issuer link platform depending on the offering types that we talked about earlier. So that's a decent amount of work that is quite material before anything can happen with public clients, because there is a very different bar than 144 that you need to enforce for the different types of offerings that they'd have. Even a CF offering would fall under that need for step 4. And then all that ties into, it's just kind of like a bow wrapping it together, is getting issuers.info upgraded to mimic, well, I wouldn't say mimic, but you know, there's a messaging protocol that goes on behind the scenes at DTC for corporate actions, and that sort of system needs to be implemented for a registered offering to make sure that all the information is public and available to everyone at the same time. And for that level of scale, we need a little bit more of DAX caching is what it says here, and it's the technical implementation. Basically, just need to have higher levels of throughput for some of the central AWS services that, unfortunately, like the Syndicate needs to run these central APIs, I think, right now at least, and probably in the long term, because there is all of this data that happens off of Stellar that will not be in Horizon, that is proprietary. Not proprietary because it's all in TAD3, but it is customized for TAD3, which is why it is sort of a level above, a level above what we have just at the base Stellar layer for the base accounting. There's more that's built onto that, which needs to be more properly documented, that is very, very meaningful in terms of making sure that a public offering goes off without a hitch. And Yeah, so offerings. The offerings need to have their own disclosure platform built around them because the offerings are where all of the regulation hits the issuer, and it is materially different than the issuer disclosures required for secondary transactions under 144, which is really the only offering thing you're going to be dealing with outside of Reg CF and Reg A, but no one really does Reg A. Because we're just dealing with these private clients that are doing Reg D, and it's just Reg D is just so much easier on the origination side because it's very clear whether or not you're up to par or not. Whereas with more complex public offerings, there's a lot more work to do to ensure that everyone's on the same page, and it will be an industry first piece of technology when it does come out, because right now all of this in step 5 and pretty much all of 6 is gate kept and proprietary, and it's only on an interbroker system where they have the special privileged access to it, whereas this will actually be made public and it'll have the infrastructure in place to scale to all market participants regardless of their entity type, where they live. I mean, it's public. It's taking something that's presently in the hands of like a dozen people, and just maybe a couple dozen. I'll give them that, and putting it in the hands of millions, billions, all that. The 7th thing is just transactional emails for onboarding. We're going to need to scale up KYC, and then that's going to require the support portal integrations to scale up KYC, so we can, instead of it taking me like half of a day to process 5 investor applications, it'll take a day to process 10,000, and just the fundamentals, because as soon as you have one public company, now the next public company wants it, and the next public company wants it, and if you're not fast enough, then some competitor pops up, which is like maybe it's proprietary, and I don't want the bottleneck to be our onboarding rate of KYC, because there's no reason that needs to happen, and there's certainly no reason that we need to have 10 KYC checks on the same investor, which is why it's important that it's associated with their investor count. Because that's what could happen if we're just not fast enough at when people start wanting to scale things. And I wouldn't want to do that manually, as I discussed earlier, because you're not going to have the same hardware security of those signers. Because again, the KYC implicates the public signature of trust. It's a technical thing, but the trust lines for the assets for the accounts, and that's how everything complies, right? That's how the KYC is done on chain. That's how the trading regulations are done on chain. That's how you can restrict accounts that are insiders. It's very important, and it all builds off of the assets on chain, while the transfer agent has that private information. And speaking of private information, that gets us to step 8, which is something that I also tried to address in Edgar Next. But the SEC is not going to solve this problem for me. I'm going to need to solve this problem with the IRS. Basically, there's this automated reporting system that for years I've been working towards access and programmatic access to. And it's all been good. I've gotten all the paperwork in for 3 years now. And it's like the 1099-B that you would expect when you get interest payments, when you get capital gains. That is going to have to happen from every single issuer for dividend payments. And it's the way that I'm thinking of implementing the trade reporting is by sending them unsolicited 8949s, which is an industry first. This is why none of the crypto brokers are actually reporting to the IRS, because the infrastructure, at least from up to last year, is just not in place for the high-frequency submission of transactions, and more significantly, you don't have a tracking of the transactions. I don't remember if this is in TAD, if it's on the dev site or not. But it implicates the way that the app needs to identify orders in the transaction memo on chain, and it's not here, but it is public, because basically the reason that also that an app is so important is that you need to specify automatically when you're closing a position which position you're closing for tax purposes, because FIFO is like, it's not good for taxes, and it makes you pay more than you should pay. And I remember the first time I traded position-based order routing logic versus FIFO, it was like night and day. It's like, oh my gosh, I don't have to pay so much in these taxes, and I can actually understand what it is that I'm doing. I can actually pay proper estimated taxes. There are so many benefits to having position-specific tax logic, where when you click sell, you know that you're selling the stock that you bought at 20, and you don't, instead of clicking sell and it just goes from the pool of all the shares that you've ever had and that have ever been bought by you, and so you don't really know the price that you're selling the basis at. You don't know the tax liability until you get that letter at the end of the year, and then the letter at the end of the year isn't even your real tax liability, because you can do position-specific tax logic. I hate the taxes. I think there's real big problems there, but in terms of complying with the tax system, you need position-specific logic here to... Okay, so this is why it's not, because this is not the tax version of it. This is the wash sale logic. The wash sale logic that's implemented in the automated reporting systems for the 8949 that gets deeply integrated into what we send, once we can send these more programmatically to the IRS, because the IRS is only set up to receive information from brokers, and we're not a broker. So this is public, you can kind of look more at it, but the important part is the differentiation here on the tax side between FIFO for wash sales versus position-specific logic on wash sales. Now, the reason that wash sales do not use semi-honest position-specific logic, which is what taxes are. Taxes are semi-honest. You're telling them that this is the truth, and you promise, pinky promise. The reason that it's not position-specific for the wash sales is because it would just be a complete user interface nightmare every single time that you made a trade on the same stock to pick where it is that you want to allocate your wash sale things to. It just, like, this is like a high level of it, but it's just like super duper complicated the way that wash sales work. If you want to, I just don't think that there's any reason it makes sense to have position specific wash sales versus FIFO, which is what's in place for wash sale analysis on the existing tax stocks. And also, just because you can't specify it, right? The memo here is being used, right? Here we have using memo for position-specific logic. And what we want to use the memo for is identifying your tax basis, because that's an actually, like, important and useful thing for the memo, because you're dictating your taxes, whereas this is, like, it's really minimal. Like, you're not going to have... It's a very rare edge case that the ordering of your transactions for wash sales makes a difference, even though it does affect what's submitted to the IRS. But it's so much more common that determining your basis is actually what matters. So the way it's designed is that you use the memo to identify the offer ID of the transaction originating the basis, which means that you can reference the buy order to the SDEX on chain in your sell order, and you'll know that that sell order is closing out that buy order. The buy order will be 100, the sell order will be 100. It all matches up. It's all super simple when it comes to tax season, and you know exactly what you're getting into. You can sell shares you bought at 10, or you can sell your shares you bought at 100. If you need a tax loss, you can sell the ones you have a loss on. If you need a tax gain, you can sell the ones you have a gain on. It's just so much better in so many ways, and it really makes a difference for advisors that do tax loss harvesting. It's just very important, and it's something that I expect the IRS to understand exactly zero of when it comes to the implementation that exists today for how this is reconciled and calculated and all these things that relate to the app, because it's all automatic on the back end. So yeah, gonna have to deal with that once we scale the onboarding, because I don't want it it's just like, imagine, because we already know that crypto traders are fed up with sending their own 8949s, and it's just complete nightmare come tax season when you're trying to report anything that you trade on any decentralized exchange, and that's a horrible experience that will amount to literally dozens of hours of work for even a moderately active investor. And that's just not something that needs to happen. It's just, why would we do that if you can just automate it and make it seamless like the broker experience? That's something that's really important. I don't want people to think that, oh, this new system it has all these benefits, but it takes you 500 hours. It's, that tax part is stupid, and it should not be a deterrent for using the DRS. And unfortunately, it does kind of become a deterrent if you don't automate this particular part, which is very meaningful for American investors, which is the target audience when we're starting off with the private issuers in America. Just because I'm most familiar with that regulation, as I've said before, and it's important to get it right here before we expand, because of course we have the most advanced, developed, and liquid capital market, and of course the most relevant precedent. I mean, honestly, other countries, they reference our securities laws in their own work, and so I can't over express how meaningful the compliance here is in America, because once you get it right here, it just works everywhere, and it's awesome, and it's great. High level, that's optimistic, I suppose, but that is my perspective on it, because it's the most stringent here, and I want to get it right so that it works for everyone, because that's the whole point, is that it works for everyone. And it only works for everyone if you start with the hardest place, which nobody else seems to want to do in the crypto sector, at least. Very few at least. Oh my God, some of the recent Coinbase filings lamenting at their choice to stay on shore. It's like, and I can't. I will go off a train if I start talking about the securities laws applied to them. All right, so Chav says, what are the key roadblocks? It's really just, we want to organize the development so that it's decentralized, right? I think that's kind of been established at this point. And it takes longer to organize decentralized labor to build an app. Like, an app is like a lot of work, apparently, I suppose. And so, setting up the decentralized incentive system that we're using for the bounties for the DUNA is a massive first step. Because really what we need to create here, in my mind, is a system of permissionless work where anybody can make their open source contributions and be retroactively rewarded. Which is like the only market-based way to incentivize and compensate people. Versus like some of this early bounty work with the DUNA is a more proactive, and this is probably maybe what the syndicate will work into. Like the syndicate can maybe have these more proactive grants that are more explicit and directive, whereas perhaps the parent of the DUNA can do that actual retroactive, real. The DUNA can have that more retroactive rewards of open source contribution, just because the way it's structured and the values and the principles it has. Part of the idea that I've had over the years and that I've worked on formalizing, I've got a lot of physical notes, and these last couple of days I've been working to get my physical notes digitized, is this idea that maybe the syndicate is sort of like a tenure for people that have well proven themselves to the community as someone that should be rewarded for their efforts and is continually aligned with the mission, kind of like a university, but maybe a little less bureaucratic. And with that privilege, you get like a salary of $50,000 a year is the number I've had in my head, but people can pick their numbers. Just something that is basic enough to live on in a reasonable cost of living area in a first world country. And that can just be the same for everyone that is tenured as an employee of the syndicate. And everyone just so that the living expenses are paid for, and there's that security of work, knowing that the lights will stay on, that the rent will be paid, whatever it is. A level of security that it doesn't exist for so many contributors and so many in the community who have to work that traditional legacy career, which is like understandable. So the thought process, well, we give them a little bit of security there to just be able to express themselves and to do their good work. And then at the end, maybe quarterly is like I think we've chatted about time frames before, but like quarterly, maybe end of year, we can go, and since everything's on GitHub, and I wanna clarify, this is just for like the very explicit open source development work. I'm still up in the air on what we're gonna do about support staff and the sales. Not the sales, because the sales I think is easy to open source with commissions, but there is like back and forth that needs to go on. That exists today with the MNPI that we have today in our emails with the issuers. But I think, and I'm betting, that if you can get the issuer disclosure platform at a sufficient level of competency, then the issuer never has to interact with a staff person at the syndicate. And they can just upload the documents directly to, it would still be a central cloud, a central open source cloud. They can upload it directly to there, and in a perfect world, again, like I said, it's on IPFS, so it's not a central cloud, it's just IPFS. But there's still probably, in my mind, there's still an API for the authentication at least that exists on the central server route. And so there's maybe still some like administerial maintenance of any central services that need to be employed by the syndicate, which should go down over time. Because I've had the quote-unquote job application form on the website for a little over a year now, if my memory serves me right, and we've had no submissions to that. It's not like anybody wants to work at the syndicate, and I don't want to go out and have to hire people to work at the syndicate because it's not efficient. I don't know how to express this enough, but like the central labor organizations of yesteryear, where you just kind of shout at large about what it is you're offering, and then you let people apply, and they only work if they're paid. And like, yes, people need to get paid, but it's very permissioned, because now the only ones that are able to do the work are the ones who pass through job after job interviews, right? And it's a central funnel of applicants and participants and people, versus a more distributed, centralized, self-electing organization where people just decide that they want to work on that because they think it's intrinsically cool. Or maybe they think it's because of the remunerative financial rewards. But the point of an equivalent and relatively modest base salary is that people do it for more than money. And then ideally, right, like the excess proceeds from the margin over cost goes into the DUNA. And then there's like some capital at play to retroactively reward people to get them closer to or above, or far beyond what you would consider a market-based salary for the work that they do. But it's all based on the work, it's all based on the merit, and the decision making for that excess consideration does not sit in the board of the syndicate. It sits in the community itself, the investors and the issuers, who are best adept to understand what it is that they're working on and properly reward them, versus some flat organization systems that just stick it in the hands of like the two guys at the top. So yeah. All right. So I've mentioned in public spaces that idea of operating costs. Yeah, at costs. Okay, so this is what we just talked about. To facilitate adoption, I've also mentioned the idea that with a dedicated sales staff, we could be doing good business in the private sector. Is expanding on that client base, like through bringing in a salesperson, a key focus for the coming year? Well, the first of all, I think, so I published the financial statements. The financial statements, I guess, ended last year. So I will give you an updated number for this annual meeting. But since the closure of the Circle account, I've basically been foothold with the actual banking of the syndicate, because it used to be super easy to go back and forth between crypto, and crypto's like the ideal way to pay people and do all these things, and it's super transparent. You can see who is a tenured member. You can see the market-based incentive reward that comes from the DAO. Like, everything about the system is just way better. Here I am having to log into a central banking institution with a verification code that's sent by SMS, which is so commonly hijacked for the theft of crypto funds from exchanges, because of course it is a horrible way to authenticate that the person you're talking to is the person you're talking to. And it's just the standard for banking, and it's terrible. And everything about blockchain rewards using stable coins or using L1 native tokens, it just makes so much more sense than the existing centralized system, which is that we have this bank account and it has $282.22 in it. So I can't afford to hire someone directorially in the traditional sense. I tried going about and hiring salespeople in the early days, 2022, start of 2022 in particular, and just trying to hire commission-only salespeople, which we've had some discussion about in the community. It's like a very specific kind of role that is quite challenging. I mean, I've done commission-only sales while I was in college, and it's brutal. It's just horrible. I mean, I don't know how to put this. Like, I've always thought that commission salespeople for the syndicate would not be like a super duper cool thing, because there's sort of a misalignment of incentives where you want the issuer to conduct the most expensive and extensive securities offering possible, when in reality a private placement might suit them just fine. Like, you don't need to IPO to raise $5 million. And I remember I chatted with some venture guys that wanted to invest in such early on, and I told them this thought being that there's a conflict of interest between investor protection and capital allocation. There's a real conflict of interest between what's best for the company in terms of making money, which you would kind of prioritize through financial incentives, ties to deal size, and all of that. Having percentage based, having commissioned pay. And just acting as a public utility, like a public service. Like, if you call a electric company today, the person that picks up, as I understand it, right, the person that picks up the phone isn't paid a commission of your utility bill. Whereas maybe that is the case for some internet providers. I don't know, just things off the top of my head. And I personally noticed that the experience is so different across salespeople that charge commissions and generally are very forward, and I've seen this myself going through this, being very forward and incentivized to only do one thing, and it's sell as much as possible, and it's just not a fan of how I've seen that, versus just serving in a more tenured role, something that is more stable. This gets into the question of whether or not they need syndicate employees or not. Because, for instance, SMTP, right? Email doesn't have a salesperson. There is nobody telling you that you need to use that protocol. It's just the default standard. And it's the same with every other open source technology. And so in a perfect world, right, like, there's no DTC salesperson. There's maybe like account representatives and people that deal with the onboarding of new issues. But when it's the only system there is, you don't have to waste. It's not waste the money, but it's also misalign the incentives, because a lot of times, like, you reward salespeople based on sales, and sales might just not be the best way to express a transfer agent's business, because now you've got this conflict where the transfer agent salespeople want the entity to get as large as possible and charge as much as possible, so they get the highest possible commissions, because their pay comes directly from the income of the entity, and so to increase their income, they increase the selling pressure. And then now you're adding new products to the offering. New custodial products in particular are very common amongst different transfer agents, and it's just like a bad path to go down. And so when I was talking with people that were doing commission-only sales, they weren't doing commission-only sales because only broke college kids do commission-only sales, and they all want base salaries, which makes sense. And then they want commission on top of that, which is all the externalities. And of course, I cannot pay base salaries because I do not have anything even remotely close to a living wage in the bank. So it's something that I really hope will clear itself up as the snowball starts rolling. And I'm happy, personally to do get 20% of the first year's fees to an issuer when you refer business, and that can be like a public thing and anyone can do it. And if the syndicate does it, it probably needs to get IRS personal information. You probably just need an account so that you can get the tax info. But I think the more interesting part is what happens when the DUNA does retroactive retribution, consideration, compensation of work, because that gets interesting. The DUNA's members don't need to have their personal information on file. You can have pseudonymous addresses, and that's what gets me exciting, because I think a whole lot about payroll, because payroll is deeply implicated with incentive stock options. And from the early days, it was very clear to me that to have equity-based consideration, which is quite common amongst public companies, and another thing that you would need to build to service a good amount of public companies, the employees getting stock in addition to their paycheck. All of that requires integration with the payroll company, and which is traditionally only done by companies. But of course, payroll does not have to be done by companies, just like trading does not have to be done by companies. When you have a distributed stablecoin that works on a ledger, all of a sudden, you can have open source code that is payroll software, and it's just a whole lot more efficient. I see we have another chat message here. Questions? Yes, okay. So this is on YouTube. Okay, yeah. I do appreciate. I know we've had prior discussions. Just getting back to some of the communication on Discord. I do appreciate when you make video timestamps. In particular, this Chives. It's like really helpful because I do not go in here and make the chapters. I used to do it. It's just not in my bandwidth anymore. Yes. Okay. So. Here you are already. Segmenting this, which is awesome because I do not do that. I used to listen to all the videos over and over again, especially when they were very highly produced. But I've just found that it's just not worth looking back anymore, and I just need to keep focusing on going forward. And part of that is the payroll is absolutely horrible. I can't express how bad it is. It is the worst thing. It's so horrible. It's just terrible. There's not a reason on this planet that I should pay, that a business owner should pay $100 a month per employee to a central financial institution to frickin' send money on ACH twice a month. It's just horrible. It's terrible. I really don't like payroll companies, and they're bad. So, one of the things with that is all of these payroll systems are proprietary software. They're just not good, and they just don't work. You are all good. Don't you worry about it. I will get right back on track. One thing I have learned is to take mental notes on where I'm at because of the interesting conversation that can happen when you have a full disclosure like this of thought processes. And I just had the questions up here, so I saw it real quick. Imagine a world where the tax compliance is actually automated for payroll taxes, which are a legacy part of the old infrastructure. Like, payroll taxes are just going to be so cool and non-existent when everybody is working across borders like this, and there's like a more cohesive world labor force. It's going to be so awesome. Because right now, The process for remitting state payroll taxes and unemployment benefits is horrendous, and I've seen it for like 8 years. It's just terrible. It's really bad. You have to like manually go into all these systems, and the only people that have automated access to them are the big companies that make the big software packages, which are sold at such mind-boggling rates to public companies, for instance. And basically the way it normally works today is that the transfer agent builds technology that interweaves with the proprietary payroll systems, and it kind of interacts with it. It reads the data from it. You can set it so it holds back some money to buy shares, or you can set it so that the length of employment is associated with the tenure of an option. And these are all things that are like super trivial to do on blockchain, and then the data is all public at that point. It's super easy to access. You don't have 10 different proprietary interfaces, some of which don't even exist programmatically. Like I've talked to people, their whole job is just doing this accounting manually in an Excel spreadsheet, and Excel spreadsheets are where mistakes get made. I've had investors tell me that they've had safe contracts that were given millions of dollars of the wrong amount of stock for years because of Excel errors, and it's not a good way to do payroll, specifically payroll linked to incentive stock options, which are another big piece that I would like to have in place. Right now, the incentive stock options is a little bit more complicated, and it requires a little bit more work on the document generation, which we're doing for the IRS work, and that work is not done yet. They're all public, like to-dos. You can see in the code what needs to happen. I think that it's really important that we get the stock option comp right on the mature end of the private market. Like we start with private markets, and then we get the stock consideration for raw equity, and then we get the stock consideration for options, because all three, that progression right there, I think, is what gets us ready for going to public companies, because those are important things to get right for every company. And they're specifically seen very clearly on the private side, even though they have excellent parallels for a shelf offering on the public side, or an S7 for an employee benefit plan, things that need to get their kinks worked out, because it's really important, especially like on the stock options side, that everything there with the IRS works flawlessly. I would really, really like to be able to do 34B elections through a crypto digital thing, instead of having to send in a piece of paper for every single stock option that you get to the IRS. It's so bad. But in the worst case scenario, I at least want to automate that so that the syndicate does it. That's another very large part of the back end stack that you just don't see, but there's a pretty decent amount of work that's already gone into. It's on the GitHub, it's on TAD3. There's a pretty decent amount of work that's gone into mail, especially for annual reports, and minimizing the amount of physical letter mail that you have to send. Specifically, there's an integration that's public for reconciling the information from issuers.inf, the disclosure platform. The disclosure platform, which also envisioning will do the meeting platform, and then you pull the info from there programmatically, and then there's a company, you can just like send them an API request with your data in it, and they'll print out like postcards with the information set up to your templates, which are all set up on a proprietary system. And so there's a whole lot of work on physical mail distribution that's traditionally needed for some of the legacy rules, like this old IRS submission requirement. And that is all done and has been thoroughly tested to minimize the amount of paperwork that investors do. For instance, you can return the postcard to sender, and you can kind of ink in your email address if you haven't onboarded an account yet, and then that becomes the new e-delivery notification. So it's a whole lot better. you're using the postcard in general instead of the full stack delivery, which is so common amongst certain transfer agents or brokerage intermediaries, which use full stack delivery for all of their clients, delivering pieces of paper this thick, hiring entire printing firms to do massive production runs of their SEC filings, quite largely solely for the purpose of extracting greater fees from the issuer, because they can make more money the more that they print, and then 90% of it gets thrown away, and it's just this complete horrible waste that happens with one of the rules that says that an intermediary custodian can request practically unlimited records from the issuer if they just decide to do so. So that's another piece of the law. I don't have the exact statute, but I could definitely find it within 2 minutes. And that's another piece of the custodial structure which is horrible, and you know, we can rework it now with it all being on a blockchain ledger. I think it's going to be a whole lot easier to get people comfortable with paperless delivery as the de facto, especially for materials that are first and foremost available online and searchable on the web in a much more accessible form. So next is, you mentioned in public spaces that scaling to advertise to public companies will require front-end development work. That much is entirely true. I walked through some of the main pieces there that I think really do need to be done before it's done to scale. Pieces that so much work has gone into over the years to set the framework and the groundwork right. And the only time that I've ever stopped working on these things is when it's very, very clear that, like, I cannot make an app. Okay, I bought an entire Apple like laptop to try to get the code compiled and submitted into the store, and like I'm just not front end. I cannot make an app. I've tried every avenue to build something like that into reality, and I'm just horrible at it. So when I become just horrible at something that needs to happen, that's when I go on to work on the next thing, because there's no capital to hire people to work on it. And there's a very large chunk of front end work that I will never be able to do. I have built the Figma. I built the Figmas for all of this. They're on the public repositories. Anybody can see the Figmas for the app that took months to design. Anyone can see the Figmas for the issuer portal that implicates all of the compliance items. They're all in the repositories. But it's just, you know, mocking it up is a much different technical challenge than actually coding it. And I have tried every single no-code tool that I could find to make it happen. I had one VC tell me, oh, just send them Excel ledgers and use this no-code tool so that they have it on their local machine and they upload it and it displays it like an Excel spreadsheet. And it just, I can't express, like, the compliance implications of something like that for PII are horrible. There is, and then there's so much that just doesn't happen on the back end without automating some of the offering custody structures of wallet generation, which doesn't exist without front ends, even though the key mechanisms are already in place. Excuse me, it just needs to work into the disclosure platform. A platform which is bare bones raw HTML text that I got from GPT, because I remember in high school trying to learn HTML because I just thought it would be like a useful thing, and spending weeks pounding my face into a computer trying to get it done right, and just I went through so many courses to try to get HTML coding right. I was just horrible. Never was able to do it. And my thesis back then was, I'll just make enough money trading to hire people to do it. And it's not what happened, but I just never learned that skill set. And just, like, I can give you back-end code in Python that does the job. It gets the transactions to the network, but I just cannot do a public-facing interface. And that's the biggest, it's the biggest thing. It's not regulatory at all, because the transfer agents regulations are built for paper stock certificates. There is zero expectation that any transfer agent will offer a trading interface or a mobile app or a crypto wallet. There's nothing, because the transfer agent depository concept was never really put up to the test. It was all just hand waved away, and everyone just said, "Well, give it to DTC to do the right thing," and they didn't do the right thing. But here we are with laws that still require transfer agents to prepare for Y2K. So it's just, this is why the tar work matters so much, because I really get also the regulatory. I mean, obviously, over the years, I've read every securities law in America, and the regulatory work is like, it's very clear to me that is super, like, this is what needs to change. Like, I can do that easy. I can write, man. I wrote a book, and I can write, and I can foment the ideas for the regulatory work. I just cannot code on it for the life of me. So my original thesis from about a year and a half ago was, I'll just wait for the AI to take over, and it can make an app at the whisk of clicking buttons and telling it what to do. And I've seen people that have, like, sort of done things like that, and I've tried to do things like that very extensively, and I just don't even have the technical skills to, like, plug in their code with the working code. I can't even make these things compile oftentimes, and it's just completely out of my wheelhouse. So yeah, I mean, it's not required from a regulatory perspective. But then again, like, nothing we're doing is required from a regulatory perspective. All that basis tracking I just talked about, the wash sale logic, the key, self custody key management, just to name a couple examples. None of that has ever been done before at the transfer agent level, and all of the regulations exist for the intermediary broker dealers, which is where much of the inspiration for the regulatory needs comes from, is by understanding very deeply the broker dealer regulation, which implements some of the investor protections that we need at the transfer agent level now, because it's just, so it's just a coherent working product. I want to give the world a coherent working product, and and that takes front end work that doesn't exist today. I really thought we could go further with Lobster, but unfortunately, like, we had some very material, fundamental market sentiment disagreements with some individuals related to that project at the end of last year, which it kind of, what's the word? It snowballed into the action I mentioned at the start of the call, where I disposed of an asset that misaligned with my liquidity perspective. And it's the same organization, group of people that built that are also the ones that built this other wallet that we're presently using. And, I love the guys. They've done awesome stuff. But just from a transparency perspective, they are, it's like, it's quandrous there. And I can't build a securities infrastructure without complete transparency as to what's happening, which exists on the source code. It exists in Stellar, it exists in the foundation, by and large. But there are some parts of the Stellar community where, it's just, it's a perspective that not a lot of people have. It takes a lot to get there, and it's faster to make it in a centralized and private and secure manner. It's faster to hire people to build these things, but I just know it's not good for the long term, unfortunately. All right, can I explain the differences between tokenization and the syndicate's offerings when maintaining an issuer ledger on chain? Yes, I can. So tokenization, as most people know it, on the normal front, and this actually has been done on Stellar. There was this company called DStock that got a grant from the foundation that tried to do this. They used a Liechtenstein custodian, and what they did is they bought all the shares on the American exchanges, and then they basically said, go buy it off of this custodian, we'll issue this one-to-one representation, and they were well regulated under the EU framework, and selling their services as like an API to access the stock market, and it was all traded on chain. It was like pretty freaking cool, but it was kind of I don't want to dive too much. They did a good implementation, but unfortunately they went bankrupt. Largely, I understand it from compliance costs. And that's the challenge with the custodian model, a model that we saw with FTX when they were like theoretically backing one-to-one shares of certain securities, and that is getting a little bit more predominant among retail investor apps. The business model is basically either you have to sell the data or you have to charge massive spreads. And that's what I saw in the BlockFi instance, because while I was, had the good fortune of withdrawing all of those deposits that were generating interest a very good amount of time. It was around when I closed the fund, which was after the, I guess I've got to look at the price action to give you exact time frames, but it was definitely completely wrapped up by the date on my LinkedIn, which I think is April of that. Yeah, it was April of 2020. Well, I'm not looking at LinkedIn, but I'm just remembering now. April of 2021 was kind of when I really walked away from trading and asset management just to focus on this. That was when Adventure was, and that's when I, over the preceding months, there was a lot of preparation for that made me realize I had to kind of pick one or the other. And there was just that great run up that happened, and so it was an easy disposition. And the way that I disposed of it was through BlockFi. So BlockFi, I think it was like a contract with Gemini as the central exchange. And what they would do is that you could put a sell order in, and they would give you a spread of 4%. It was unbelievable. It was the number might be. It was like I remember very intimately paying thousands of dollars to execute sell transactions when the prices peaked off of an ABCD setup. Because I didn't want to wait. I should have waited, but I didn't want to wait a couple of weeks for the market to, first of all, crash. Okay, so I just want to get this across. When I sold those custodial wealth holding things, it was okay. I'll pull up the price and I'll walk you through it. I'm just tired, but I don't think I've disclosed this before, so I would like to get the full documentation on what happened here. So, what we got? I guess you don't need this. 21 right here. And let me do a weekly. Weekly might not show it. Oh, weekly shows it. Okay, cool. So I had limit sells right around 42, right here. And it was right here at the turn of the year. I wrapped up the fund later in the year, but I had sort of started understanding that I needed to make a choice after the hackathon in 2020. I was like, okay, well maybe I want to work on this and not do the asset management. And not to get too technical, but if you do an ABCD off of that, then it basically gives you like the 37s or the 40s. And then getting to 42 was pretty... Oh, I don't know where it went, but I'll do it again. I mean, obviously it was a little bit more accurate. I'm just clicking on the chart as fast as I can. But anyway, if you do an ABCD setup here, wooten.link/ABCD, it's a pretty freaking easy trade. Like, this is a B, this is a C. I mean, it was a textbook ABCD. And so I didn't think that there was going to be that that continuation from the 45s into the 60s, about the 60s. Because I know this is where I did the short that is at wooten.link/Bitcoin. But there was this movement that I was not expecting off of the ABCD, and I learned a little bit about momentum trading then when social cues and such, they affect, it can keep going, right? An ABCD can keep going. It doesn't have to be perfect. And honestly, like, if I wasn't going to close the fund down, probably would have sold like half, and then I could have sold the rest here, because this was an obvious top, and I tried to short this, and I didn't have the brokerage systems in place, and I couldn't transfer the money fast enough, which is what happened with BlockFi. I figured that I could show you this on the daily chart, and it would be a little clearer, but basically we were right here, okay? We were on this January weekly candle, and we were right here, and I was like, this thing is about to fall. It was so obvious, it was so clear. Shit, I can pull up the trade history if I could find it again, but I know it's on chain too, like the withdrawals and the addresses. Anyway, so I sold right here, and it was a great decision for about 3 weeks until they had this awesome hammer candle. Like, if I was really trading, I would have bought back here because this is a gorgeous hammer and an easy stop loss and a just like awesome trade. So everybody was really happy with me until this happened, and then that green candle made everybody not so happy with me. And because I knew it would take 3 days, right? It was like the end of the week when this happened. And so it would take 3 days to get it off the exchange. And since it would take so long to get it off of BlockFi and into like my own custody in a central exchange, I knew I only had a very limited time frame. I think I did it off of the ABCD, not the hammer candle here. But even if it was the hammer candle here, it was an easy out at 41.3. Like if I waited those 3 days, I thought this thing was done. I thought this was it. This is it. It's over. This is the top. And so the next candle confirms it. The next candle, I had sold by the next candle. The next candle confirms it, and you have to get out. You can't keep holding that with a decent risk reward ratio. It's just bad. And so you see the next day that thing tanked. I cannot express how big that move was and how massive the confirmation was. You lost 16% in a day if you didn't make the right trade there. So paying a 3 or 4% brokerage fee was nothing. And so I sold through the BlockFi interface, and look at that. Look at I had to sell immediately. I couldn't wait 3 days for the withdrawal to process, or I would lose 26% of the trade, and it was $100,000. Which is just unacceptable from risk reward, because you can get right back in here, and it's like you literally save. Anyway, yeah, that was the trade, and this is where I paid that massive custodial fee. And I complained, and I complained to their support. They never did it again. But I mean, it was the right trade to make if you look at what the asset did. But God, it felt like shit paying so much money to a broker. I hated it. Oh, it was horrible. It was literally, I think what I paid in commissions and fees there was about half of all the 2 and 20 split that I ever made off that fund. It was in that one trade. It's like horrible. Not 2 and 20, just 20. Management fees are like kind of silly for a lot of reasons. Okay. Cool. And so it's really important for me that it's a coherent working product, because it's meaningful. It's meaningful in a way that the regulators and the regulation is designed to be punitive. Okay, it's designed to protect you retroactively after the damage has happened, and to slap a fine on them. Whether it's a wrist slap or not is irrelevant. The whole structural design of the legacy regulation enforcement is all based on this idea that we have officers that are elected into public office, and they do the work, and then they enforce the law, right? Congress passes the law, and then the executive branch enforces the law. And that's just too slow for markets, I think. I just don't think it's good for markets. I don't like anything about how that works, because it's fundamentally designed to sort of protect the investor, but it's only done under the understanding that the enterprise itself, which underlies the industry, will not on its own protect the investor. And that's unacceptable for building a global financial system. So yeah, and we see it in the block trades of today and the capital allocation of yesteryear to you mean look at any capital allocation after 71, and it's just so I'm glad I had the early experiences and was able to get a little lucky on some trades perhaps, but whew, man, a lot of work and a lot of very 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 diligent man, you stare at those charts long enough and all right. So I think that answers that one. Next question is, do I intend for front-end development to be open source like the back-end development so far? Yeah, that's exactly the intent. The reason the front-end right now do not have an open source license is because I did not understand software licensing when I was doing that. It was the capstone for tech, which we won, which is awesome. But I don't think I've ever shared this publicly, but I feel like it's relevant enough. So I'll pull up the award picture. It was a great experience. Loved college. Excuse me. Jeez, it's late. I can't believe I just said that. But that particular part was nice. I think I've said this before, but they had to completely change the entire structure of that class because what we did had nothing to do with electrical and computer engineering, and it risked not being properly accredited by the organization that accredits central colleges, and they were really not happy that we just did what we did instead of building some kind of silly robot thing. So unfortunately, it was an awesome time, everyone working together, but just did not. These are kind of the more coding developers on this side, and they were great people, awesome to work with, and I've even got public LinkedIn reviews on a lot of them. It was a great experience, but I didn't understand the software licensing at that point. I had no clue, and I have created issues in all of the front end repositories that they worked on trying to get that code to have an open source license, but I didn't have any understanding of that at the time, and I didn't have any formal contractual arrangements with any of these individuals. It was just working on this thing for the class largely, and then everybody got split. They split it 5 ways, and it took 6 months personally to receive the consideration of this award split. Which was just crazy, but that is the world that we live in when it comes to remuneration by certain central bureaucracies, and I've seen that over the years selling. That's another reason why the sales is so nightmarish for me and something I don't want to touch, because I've been on the end of all these grants that we did when we were starting and kind of applying to all these grant opportunities. We made 10 grand in grants, and the taxes show that, but it was like a nightmare dragging out the accounts payable process. And with this particular grant, it literally took 2 months to get the ACH info verified by the payment processing company. It was unbelievable. I wanted to see how fast I could make it happen so I could tell this story about how long it took. And I was literally calling the representatives every single day for weeks, trying to make this thing happen as fast as humanly possible to see how lethargic it could be. And I feel like I have a personal relationship with the guy that does the grant distributions from the fund here, because originally I just left it to their own devices, and I said for about 4 months, I said, here's my info, please send it to me, and they did nothing for 4 months. And so I had to go through oh man, it's just horrible. And I've seen it on so many grants that we did, that we got. The old payment system is just absolute trash. Yeah, it is bad. But yeah, I want it to all be open source. like I said earlier with the stories about what could potentially happen if the back end was open source, but then someone made a proprietary front end. I sort of got over that because how are you going to fund the development of a proprietary front end if not charging trading fees? Because the asset management is largely separate in its own thing, and it has I have a lot of very long-term plans for the asset management piece. So the only thing you would get from that is the trading fees, and the market right now is everybody wants zero trading fees. So where are you going to make any money if you're not going to be able to do the securities lending clusterfuck of the income off of that, which it doesn't give you a business model, so you can't really fund that without a bunch of people that really don't want this stuff to succeed. So yeah, the front end needs to be open source for all the same reasons the back end needs to be open source. And it's not that there can't be different, like there are different front ends for GNU Linux that are different open source projects, and that's completely fine. Like, I don't care as long as people follow the TAD3 backend specification, everything works. And if we want to have a different version for somebody that's in Spanish speaking country that's a little bit more tailored to their own desires, if you want to have a localized version, I don't care. I'd prefer all of that be open source. I think it's just best that way, because if it's not open source, and this is the quandary I have with the regulation, because a lot of the compliance intricacies of TAD3 very, very deeply work their way into the interfaces that the users and the issuers go through. And you can sort of fudge a lot of compliance work without it showing up on the blockchain, because only a small subset of the compliance work in TAD3 shows up on the blockchain. If you look at those demo asset transactions, you're going to see like 20 transactions maybe, but the amount of back-end compliance work that needed to happen for those transactions was enormous. And it's the same thing with Layla, like the offerings, and like there's a difference, and then I'll make this fragmentation. There's a transfer agent that's running all of this and using the TAD3 as the backend. And then there's a group and a community that decides they want to build a different front end to the TAD3, and they're just building it as code. The quandary I see is that basically if it's open source and it's just the community building their own localized version of it, it's awesome. It's great. And it works because the syndicate or some other transfer agent using TAD3 is on the back end making sure that all the compliance items get taken care of, and the user interface front end is a nothing. Okay, it doesn't matter as long as because Stellar handles so elegantly the KYC API, the management, the trust line. It's all incredible because you can take care of it from the issuing account on chain, and you don't have to worry what the interfaces look like because it doesn't really matter. Like, you can maybe mess up some of the tax reporting, but again, that's part of the core TAD3 backend. And so like, and that's not even like a huge deal. That's not a securities law violation. That's just a local taxation thing, which should be automated and all the things that we talked about. But like, just a group of people building their own front end interface for TAD3, it makes no difference in my life. Or it does make a difference is if it's a different transfer agent, because there's a lot of work that needs to happen at the transfer agent level for TAD3 to be TAD3. It's not TAD3 just on Stellar. There is so much compliance that has to happen, and particularly the governance of the secondary transactions is very, very important. And so if there is some private TA that goes and does all this, the first question for me is, where does their money come from? And it's only going to be from charging more than the syndicate charges, or having a better interface. And how do they fund a better interface? It's by charging more than the syndicate charges. So, maybe down the line we can reward, we will reward, right? Well, the shares get donated, and then you can have retro contribution on open source work for the TAD3 app, which could be pretty simple to globalize. I've got it built into the Figma. There's a little drop down for language when you first start setting it up. And I want to build not just that, but like in the long term, we need a trading interface that's equivalent to Thinkorswim, that's free and open source software, and that will take a very large amount of money to build, but it will be so useful for so many people, for something very meaningful in decentralizing capitalism. And like, if that's built on a secret proprietary system, then the question is, where's the money come from to build that? And then are they really up to par on the compliance work? And that's why the SRO seemed early on to be a very meaningful and useful tool in our arsenal, because we're introducing this technology that lets transfer agents replace the entire custodial structure. And if the governance and the regulations are not in place, because they're not in place today, and I don't think they'll ever be in the same level, because you can't force transfer agents to have the same compliance standards that exist in broker dealers. But that's what we need for a TAD. We need the transfer agent to be held to the same scrutiny as the custodial structure. And so, like, what I've posited to the commission in the Edgar Next letter is that they change the definition of a transfer agent filer to allow us to adequately differentiate ourselves from the regulatory scope that they have. But of course, this requires the commission and every other government on the planet to completely and totally create an entirely new set of regulations only for a transfer agent depository. And that is like not a reasonable ask. And that's why the governance matters so much. Because if you can get it so that to use TAD3, you have to be a member of the SRO. And the SRO can do the thing that everyone does today, where there's punitive it's not active, but you can penalize bad behavior. Like, that's something that I can get a little bit more comfortable with in terms of sharing between different private businesses that are transfer agents that want to make money. I don't care. I would prefer that it's just, as long as it's on TAD3, but there needs to be some claw, and I'm not super duper convinced that all of the different international regulators are prepared to have an entire new division of their securities oversight councils, which in some countries just doesn't exist. An entire division just for the transfer agent depository concept, and then having the fragmented enforcement across different jurisdictions. It's just not, I just don't see a world where that works. And so having, it's not just the front end, but like having an alternative is like, it's probably not super awesome for the issuers, for the regulators, because there's so much work that is in place to happen once we get everything scaling for the reporting mechanisms of private information to the governing bodies that exist today, and the investors. If we want to best serve the companies, it's like that example that we had early on of all those different power lines from independent suppliers. That's just not the most efficient system we can build here. We need a standardized, unified infrastructure, and that's why the technical execution matters so much, because we want to give this one option that does it, that solves it, the DTC on the chain, because the custodial structure will not do it, and it is our responsibility as the first mover here to really make something that respects the natural monopoly that was established by the consolidation of clearing firms, and so many other swaths of very complex and technical regulatory work that has to be applied on a decentralized basis here, and that can only happen the way that I see it in open source projects, when there's that uniform, central, decentralized protocol that applies to all of the transactions and that protects all the users. And if you're making everything under Affero, then it solves all of this, because you can't have a secret implementation of it, and if you, the nuance of can I control a different company is something that I've grappled with, and I did a decision on a while back. I've grappled with this for so long, because the goal is always to have competition. But it's really challenging to have competition while having consistent regulatory enforcement. Here it is for the decision to do an interagent standard. And there's so much that goes into that. But I decided that it would make sense to be an open standard that anybody, like, the code is public, any transfer agent can use it. But the question for me is any transfer agent ready for the governance burden that this needs to have associated with it to protect the secondary transactions? And I don't see anyone even remotely close. I can't really see, but gotta move my face here. So one of the things I think most about is, and I hope that we can, make work with the DUNA, with the services that the syndicate's offering versus the traditional tokenized custodial structure, it really is just that the shares on the blockchain are the shares in the company, and so you can't mess it up. You have to get it right, because what happens on chain is what happens on the issuer's ledger and the corporate books. All right, I'm gonna run to the bathroom again. Good. Yep. Great. Awesome. All right. So next is maybe time to focus on the remainder questions and then call it, says Chives. You've been an all-star filibuster. Thank you. I did promise to get through everyone's stuff. I might not. I tried to respond to Shrumi's comments explicitly in writing, and I do not see any explicit questions from them. But I think we've definitely set up the background to answer most of the questions relatively smoothly. So the next one is, it is understood that the syndicate has private issuers as client. Please detail what would happen when a public company switches to the syndicate. So I think we kind of covered this. The shares get minted on chain, which is different in the sense of just the accounting versus the traditional issuance of shares, where it's just like it's a spreadsheet and a central book of the ownership records. What happens to the Excel sheet the old TA was using, and anything else relevant? Yeah, you take the Excel, and that's sort of the basis of the support portal for the investors claiming their shares, because you issue all the shares at once to the distributor account, and then you have to verify the KYC info with the old records that you have. So it's not ideal, because like the old transfer agent probably, they might not have great records, and you might only have a name and an address, and then it becomes more work to not only verify them, but also if they don't set up an account, now you've got the legacy transfer agent rules for tracking address changes that come into play, and that we've seen firsthand, and it's quite the process to do all that that we've gone through, and it's just, in general, I'd say at a high level, a lot more challenging when you don't have long-standing public keys that you can generally refer to as your account, whether or not it's abstracted away in its account IDs or not. It's just so much easier to do it all on chain, instead of having this like website you log into and they mail you a verification form, and your record of ownership is a piece of paper they send every year. Like, it's just night and day versus blockchain. So next is, please talk about stellar fail-safes, ensuring the syndicate follows KYC, and limiting settlement to personally information verified accounts. Yeah, it's really good. I've said trust lines a lot probably this meeting, and it's just hard to overstate how exceptional Stellar is for regulated assets. This is like a feature that is quite often built into other it's built into smart contracts a lot of the time to do what the Stellar core does in C code, and it's just night and day. I've got to think there's a trust. Yeah, here's a better thing that talks a little. It's just it's so nice in so many ways, and it just completely makes everything work so easily. Like, you can't make a trade if you don't have the right authorization from the issuer as the transfer agent. You can't make a transfer if you don't have the right authorization of the issuer as a transfer agent. And these are things you can opt into and set up as the issuer. That's not like blanket across everyone, but it is blanket for your assets. And so it makes it so easy to do the compliance work and to have the governance of the secondary transactions. Here I am showing a developer documentation site, but it really is so useful and so deeply built into everything, especially when you have non-custodial direct ownership in your own wallet. You don't have to worry about transactions happening when there are SEC claims to halt trading because of central financial record keeping fraud. It just doesn't need to happen because you can just, and this is what a lot of the TAD3 code is built around. You can look at any of the investor management code on the TAD3 repo, and 90% chance you're going to see something about trust lines, whether it's stock splits, which were so foundational to all of the work and managing the trades there for the account balances. You kind of have to freeze. There's this whole process you have to go through to effectuate a stock split without, first of all, with proper notice, and that's part of the corporate messaging filing system. But also technically, right? You have to go through a very specific process to make sure things work right, and then as the agent, you have to do like the rounding error share buybacks as record differences. So you have to adjust that based on the existing regulations if you want to round up instead of rounding down with 7 decimal points, and not giving people partial purchases, right? Sending them a check in the mail for their partial shares. I think that's like a lazy and silly way to do it. I say round up and buy the difference, and the difference is like minuscule when you have such precision. it is not material at all to have the agent itself just do a buyback in, which is well defined and standardized for if they make if they make an accounting error in the legacy system, like the freezing the assets, the executing the verification it's all like the flags. I'm looking through every little bit of the code here, and all the code is so deeply based in the regulations, and needs to interact with them, and it works so well. There's a whole function for trust line helper, because it's so integral to everything. It just works so well. It's so efficient. Even that transaction we approved at the beginning of this meeting, it was a transaction with a sandwich trust line authorization, insider deauthorization, which makes it so the insider can hold the shares, but they can't trade the shares without going through the SEP8 server. And it's so important for so many things, and why the responsibility of the agent themselves comes into play if you have a central deployment of the APIs. Because that's how SEP8, that's how all the SEPs work. It's all the communication standards between wallets. It's so great. It's incredible. And happy to dive more into that on a more technical talk. But it's like, if you just even read a couple paragraphs about the trust lines, I think it's very, at least for me, is very apparently clear that this does everything that you could ever want from a decentralized stock market. It's just great. All right, next question is TAD3 a concept tied to Stellar? And the answer is yes. When it was released as TAD3, it was kind of around the era of the GPT-3, GPT-4 transition. GPT-4 being first of all, GPT-3 was groundbreaking, right? It was years of research and donations to a nonprofit that then materialized itself in this model that completely changed the world. The world's not been the same since GPT-3 and its release to the public en masse. And because it became, over time, OpenAI became a central for-profit. I mean, there's so much to that, and we've chatted about it, so I don't want to particularly unravel that company. I mean, even saying company, but it was supposed to be a nonprofit foundation is all I want to put in there, and it just wasn't, because it wasn't released as a free and open source system, because they wanted to keep iterating on it and making the best versions and that's fine, okay? And for physical infrastructure, groundbreaking new things, I understand why you would do that. But this is not a groundbreaking new thing. Having a proper accounting for stocks is something that we've needed for hundreds of years. And it's not a new idea to do it on blockchain. People have talked about this for nearly DTC themselves have talked about this as of 2014 in a public forum. And and it just hasn't happened. So when the question is TAD3 tied to Stellar, it's just like GPT-3 is very deeply tied to its training data, which is not public. Yes, there is a very deep connection there. TAD3, all of the code, it only works on Stellar, because that's just how it's built. That's how the transactions are submitted. That's how the underlying assumptions are made on throughput. And it's how the DEX, which is so crucial to the secondary markets, is built. And if you look through the code, every bit of the code is designed exclusively around Stellar functions and transactions and all these incredible things that the network has built into its native operations without requiring any smart contracting. If it was built on an L2 of some other network that supported a general smart contracting functionality, then it could be generalized. That's what TAD2 is, a wooten.link /alpha. It's this system that could theoretically work across different blockchains, and that's the approach that other agents have done because they don't want to deal with the base scalability challenges or the DEX side. They just want it all in an ATS and their own custodial structure, which is fine if you're a for-profit business trying to maximize shareholder returns, but it's not fine if you want to build the new financial system, which I see Stellar as. I've always seen Stellar as that. I remember buying them in 2017 and it being like this pivotal and central point of my whole investment portfolio. Is like half my long-term holdings, and I stopped swing trading and I eventually had that crypto scam at wooten.link /scam, and it's just always been so apparent that this is the best system for a financial world that actually works for everyone. And so yeah, all of TAD3 is built on Stellar. There's nothing that could ever change that. It would need to be TAD4 or TAD5 if you ever did anything different, because every single piece of it is just built on top of Stellar from the first commit. And the whole repository itself was originally named Stellar Interface for the first 3 years, because it was just an interface to Stellar from the transfer agent, and it was just always that forever, and it'll always be that. Second, what are qualities that led Stellar to being the best option? Yes. So this is more thoroughly disclosed on the blog in the introducing the transfer agent deposit, introducing TAD3 post. The introducing TAD3 post talks about the three main factors that were considered in the very early days by myself. Although I will preface by saying that I kind of always knew it would be Stellar. And when we wrote wooten.link /thesis, it was very, very apparent to me that Stellar was the only option that had it sufficiently. It was like a real DEX. Okay, there was no other real DEX. And so you'll see the written disclosure of this in the Adventure video's description. But basically, there's that other person that was part of the thesis for that school class that was the paper, and they wrote just that one section on section 6, right? On the different trading options, and they themselves independently researched DEXs without me saying any potential network at all. And you can see that Stellar is mentioned in none of the preceding sections. It was and I only wrote the succeeding sections after they wrote section 6. And so it was them themselves as someone else that brought that up versus OX, which was pretty good at the time. It was operating more like a protocol. It was before a lot of the venture investment in OX, and it was actually a real decision to go with one or the other. Now it's night and day. It's so clear that this is a central institution that would be very easily classified as an ATS, and it would not work at all. But I was never really leaning towards OX because of so many challenges with the protocol it's built on. Yeah, so I just always knew intuitively, firstly, that Stellar was the best option. But the three factors that I put into the post was cost, speed, and largely impact. I mean, if the cost and the speed didn't get me, the impact is what really hooked me on. I just couldn't leave Stellar because there's just no other project like it in terms of actually having a real world impact. I wrote 2 lines here on cost because it is unbelievably cheap and efficient. I wrote 3 lines here on speed because it is unbelievably fast and it's just the best thing ever. But the impact in 3 is like, it's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 lines. Like all of the main reasonings for me were on impact. So much more than the speed and the cost, because you can get speed and cost on L2s, and at some point it's going to need to use a DAG-based infrastructure for the secondary trades. It's like very obvious that the scaling limitations exist. But there's no other project that does everything so well and has that very stout and direct. I guess I could share the screen. Why not? That has that undying focus on making something that actually works for everyone. And that's always just been so. I remember like the second blockchain book I ever reviewed on the YouTube book reviews playlist was a book about the potential impact here of blockchain itself, and just something that seems so clearly worth prioritizing in the development space. And so you do need the cost to be there, you do need the speed to be there, but the impact was really the thing that got me through some of the hard times working on this day and night, in a soulless, not a soulless, but like a repository that had zero attention from anyone, except the people that I paid to pay attention to it. So yeah, the KYC protections are literally bar none. There is no comparison. It would take, and I remember some conversations with some of the individuals working on like some of the NFTs for certain public companies, and there were discussions where it was tens of thousands of dollars to deploy in gas on particular chains, because that is the world that unfortunately a lot of blockchain lives on, just to be in the one place where all the existing users are. But of course there's like what, a couple million people that use crypto today, a couple dozen million, and there are 7 billion people that need access to the financial system. So it's just silly to build on anything that is not up to the technical par of efficiencies required and long-term values necessary in a financial system. And yeah, the DEX was, again, it was like there really wasn't an option, honestly, because what other DEX is there? There's just not. A limit order book that is so central to capital formation and efficient markets. What other limit order book exists on a blockchain to bar none? Don't even talk about implementation. It doesn't exist anywhere else in a real decentralized system, and that is so important. It's like the whole thesis was decentralized order books, which is decentralized limit order books. All right, now we're on our way to 6 days questions. He adds some cool ones. Can you explain the difference between Block Transfer's core services compared to the services offered by T0? Yes, I should have expected this question. It's just so different, and something that I could much better explain earlier in the day. Now, the central question, one that Mark, I think, really has been harping on for so long, I know 6 days has been harping on this too, is who has custody of the shares and where does that exchange happen? Because it doesn't happen on a decentralized exchange, and you don't have self-custody on the platform of the latter. And unfortunately, indeed, because of the technical design decisions on chain throughput and going towards the chains that are more popular, there is a very large custodial risk in place. Maybe I'm thinking of other intermediaries, but the multi-sig, like I said earlier, for the account abstraction model is just extremely inefficient compared to the implementation on Stellar, and one that is required for any of the representative tokens that are offered by some intermediaries like them, that are supposed to represent the stock, but of course it's all still in their proprietary gate-kept central system, and the exchange happens with the permission of their 1% trading fee. It's just wrong in so many ways, and it's unfortunate. It's got good people and a great story behind it from some of the ones in the space that are very well known, but I think it's important to recognize that those names that might be associated with certain platforms are not the ones that built it, not the ones that develop it, and they're just not the engineers, because that's the story of Stellar. The story of Stellar is engineers fragmenting from business people. It is the people that built Ripple saying that they don't like how the project is going business-wise. It's too centralized. It's serving the interests of yesteryear's wealthy and providing exclusive functionality for central banks without the decentralization needed in a financial system. And so the engineers freaking quit and went out and built their own thing that actually worked. And that's a story that I've seen so commonly in discussing the existing central bureaucracies of yesterday's corporations and the decentralized potential of individuals collectively organizing to build really cool things that exist today. And you can see it very clearly in modern blockchain systems. And that decentralization, it's a focus on engineering talent and not how well you can sell yourself to the general public. It's a ideology, and I talked to so many startups that are like this, where they just don't have the marketing people. I never had the marketing people. The person on the right of the image was the holy grail for doing the marketing people from the tech grant, and of course, they reasonably wanted equity in the company to keep working on it, and I don't think that I just couldn't give that equity, because that equity had to go to the nonprofit in the long term, and it's just something that's like, it's just not worth the early boost that you get on having a central direction versus a more decentralized system that we get to build out this year. I wouldn't be doing this. I would have quit years ago if anyone was even remotely close to what's happening here. And the fact of the matter is that there are poor incentives for every alternative, if you would even call it an alternative, because it's completely it's just the same custodial structure. And it's a horrible structure that needs to change. So statutorily and regulation-wise, they're just completely different and classified as an entity that exists only to extract trading fees. And I man, I think we covered trading fees well enough, but I really do want to give that dissertation on the quandaries of introducing any impotence to free market liquidity, which we have here with Stellar, with the only cost being this incredibly efficient spam deterrent, which is requisite of any blockchain network. It's so good, and the infrastructure, not only is it in place to operate at practically no cost, but it's also in place to have the transfer agent, issuer, on-chain sponsor the account transactions of investors. It's perfect in every way, and was thought of and designed to be the best banking system the world's ever seen. It's so good. It's so good. And maybe the trust line level authorization limits, we could have left that one on XRP, but there's just nothing even really close. Because SCP is like magic. It's unbelievable. And I'm so glad that we have Neuroquorum now based on the principles of Stellar's consensus that allows for the governance that we need to do the DUNA as the oversight structure. There's so much work there that is just first of its kind ever, just like so much of Stellar was back literally over a decade ago. It's so far ahead. I don't know, but it was built by the one person who built the first Bitcoin exchange. I can't think of a better technical expert who understands the meaningful importance of order books than the founding team of this project. and it's where the vast majority of all my net worth is. So I mean, I put my money where my mouth is, and you can see all these things publicly, and it's still, it's comparatively nothing, but I don't know how to express this. Just not even a single alternative in my mind, because the people around us and the community and the goals and the value, it's just bar none. It's just it's got its course, but there's nothing else. Give me something else. There's just nothing else it's even remotely close. And so part of this, which kind of gets to the next question, is: are you looking for business partners or investors? Part of the point of the whole community ownership and making it all open source and centralized for everyone is that I want it to be more permissionless investing. Because that's the whole point of block transfer, right? Is anybody can come in, and it's really the lowest possible bar to participate in the financial system. Well, with Lumens, which is the native currency of the Stellar network, it's really interesting, and I like the decentralization here, because anybody that thinks that block transfer is doing a good job, and this is not like investment advice at all. This is just the fact of the matter. Like, when block transfer, assuming TAD3 operates at scale at some point in the future, there will be a very pressing need for the syndicate to attain the gas fees, the account sponsorship fees, to acquire lumens to fund operations at a very large rate. And so, tokenomics, right? I don't think I'm doing anything super groundbreaking here. This is all very public information. All of the code shows exactly how all of this works. And you can just kind of look at the design of the network. And so part of it, myself, like I said, I've all my money in lumens, practically. I have drained, I think, I've got like a couple $100 in a bank account. It's really not good. It's really not good. It's bad. But you do have here the financial statement of the syndicate for the end of last year, showing the balance sheet with all of the assets in lumens. Again, it's very transparent. And I do my taxes, they're all public. I don't do financial statements yet because ideally, right, if you have a working, transparent financial system, then you can just look at my public key and that will disclose all of my holdings. And so, like, partners and investors just gets back to that point of being a central entity and hiring people, which is the path you go down there, to build this central product or service. It's getting late, excuse me. And that's just, it's a path that has been available practically, not since day one. The thesis I consider day one, but it was definitely the path that we were going down when it came to that first hackathon. Ended in a pitch competition, and so was InVenture. And I was all gung-ho for it, and that was all based on the old technology that is more centralized. But what I saw working through an initial public client, which is, I hate to say it, but it's on GitHub what client this was that the implementation was just far too centralized. It really was not a good long-standing solution. And I knew that from day one when I did that hackathon. I knew that this was ass, and it wouldn't, it would not scale. But I was just kind of building it to get the idea out there and start working on it because I just had so much pain. That was on the tail end of trading Forex and seeing how horrible the fees were on the secondary market for leveraged derivatives. And that just needs to be on chain. It just all needs to be on chain, and it needs to be on Stellar. And so people that are interested on a decentralized and permissionless basis in participating in that future can sort of self-opt-in to acquire lumens, and you can self-opt-in because it's a commodity. It's a top 10 crypto. I'm not breaking any ground here. Like if you think that the things will do well, then this is the tokenomics of every other project and every other blockchain. And I just picked my horse, right? I picked the one that I see is the most efficient. And I think it's kind of cool that community members can sort of opt in to have a stake at the table without me knowing. I don't know if anybody in the community has Lumens. No one's disclosed it, and no one has to disclose it. You can have an address. It's a pseudonymous address. It's an asset that doesn't require, is the same as any other permissionless crypto, right? And that's completely doable in Stellar without the oversight features that I was talking that everything's built on. It's all the oversight features, but you don't have to have the oversight features from the native asset or issuers on chain or on the contracting side. And that's kind of cool, I think. I think it's kind of cool. It gives you that degree of pseudonymity that a lot of people care about in crypto, while still having a commodity that's shared between everyone. So how much capital / resources do you need to grow the business compared to what you have from 6 days? I think we answered it earlier. I'm just like, I have no experience managing people, hiring people. I've tried and I'm horrible at it. So I might be overinflating, but I think it's about $3 or $4 million to get the app set up. And the basic interfaces that just take on private clients and start getting recurring revenue therefrom. And I just don't want that money to come from a seed investor that's going to cripple the long-term impact. All right, next question. And I saw this one early on, and I wanted to pull up a spreadsheet and work through it precisely, but I think it's pretty late, so maybe we won't go into the exact semantics there. 6 days asks, how many years / hours have you dedicated to getting the syndicate to where it is now? And I think the second part of the question is a lot more interesting. But just to answer this, it was 5 years ago that, and I was working pretty much to get the thesis together. It was every day. It's I've always been working on this since I was 16. I had this goal to decentralize capitalism, to build an online broker that combines traditional equity, bond, and cryptocurrency markets in a decentralized system that rewards independent money managers, allows everyone to easily invest, opens active trading to the world, and helps replace existing banking systems in a system that really gives masses of people real savings and retirements. And I can't describe how perfectly, because I made that goal before I knew what Stellar was. I made that goal when I had just after I'd learned of Ethereum. And I can't describe how flawlessly Stellar does that. It does that perfectly. And all I have to do is come in and make the equities work. And everything else falls into place. And it's just perfect in so many ways for everything that I want. And it is awesome. So, I don't know, I was 16, and now I'm 23, almost 24, so, I don't know, how many hours that is, but it's definitely been, all I've worked on ever when I don't have to go through these stupid classes that don't teach me anything I want to do. Or when I wasn't trading. I was trading for a long time before I closed the fund because I wanted to build up the capital to do it in a centralized manner. And the handicaps I was trading with, I felt like a person running a marathon with crutches. Because the retail, you don't actually get access to the markets if you aren't one of those select few prime brokerage clients. It's horrible. It's just terrible. Oh my gosh. I mean, I would have kept at it. If I didn't have to pay a third of my profits to the broker, I would have just kept making money until I had that $3 or $4 million I was talking about, and then I would just start hiring people. But I cannot imagine myself making $4 million and a third of that going to the broker. I just can't live with myself if I do that. It's I hate them so much. They're just terrible. And the second part of the question is, were some of the biggest hurdles I had to overcome. It was really a quite the dark time before I found the community. It was it was really tough for a lot of reasons, but just one of the big things that I learned in the startup accelerator program at Tech was, just chatting with people that are actually going to use what it is you're building, customer identification, or there's like the standard startup lingo around talking with clients and such, which led directly to the interactions with the public companies. And it worked really well because apparently it's super easy to cold email people from an academic institution.edu. It gets you past a lot of gatekeepers apparently, or it makes you stand out, so to speak. I had a lot of CFOs. They thought I was like a professor or something, and I was like, no, I'm an undergrad, and it was just an awesome experience, chatting with them, and they helped me identify the 144 problem, which I cannot overstate. Again, just how big a problem that is, and I had no clue. Until I talked to public CFOs how absolutely horrible the 144 transactions are, for so many reasons that we discussed. And so it was definitely like awesome to do that. But from day one, I've always just been building this for myself because I want a market that is decentralized. And so because of that, it was always just me that was the quote-unquote real customer, because the customer here, the client here isn't really supposed to be the issuer. Like, the issuer just pays for it, but the client here is really the market. I mean, it's the investing public. It's the system that allocates capital. That's what's really at stake here. That allocates the world's capital. That's so flawed in so many ways, and so I was kind of knew from the start that I was sort of building something for myself as I screamed out into the void about how horrible how horrible trading was. And I didn't realize how structurally horrible it was. I just realized early on that the capital allocation wasn't working. I mean, there are billions of people that live on $1 or $2 a day, and yet there are these markets that create trillionaires, a trillion-dollar company. It's just like a billion, whatever, however you want to frame it, okay? There are vast social injustices which are very deeply perpetuated by the structure of capital markets. And that was just always really apparent to me. I don't know why it was so apparent to me, but it just was. From, I guess, I don't know, I was working a minimum wage job the year before, so how I got to that conclusion is marginally beyond me, but I've had that exact same goal since I was 16. And it was just, it made a whole ton of sense to see what was possible here. And so the biggest challenge for me was just before discovering the community, the code had all matured like we talked about, and nobody cared at all. I went back and emailed back with some of the original issuers, the CFOs that were on the early stages, and I had just completely blown all of my technical competence to them, and nobody wanted to do anything with it. Excuse me. And I didn't want to go back into marketing it again because I had developed this deep disdain for central marketing through online social media platforms in the years of work that I did trying to sell financial education through 9 to Noon and the courses that are now public on YouTube. And I just hated everything about the sales cycle there. For mass media marketing things, and I didn't have any connections, so to speak. I didn't have like any inside scoops of companies that were about to go public, so it's not like I could just whip one out of my fingers and say through my relationship, because my uncle is the CFO of a public company, and like when I learned this, it was a couple years into it, and all I did was ask him about how the administration of the employee stock plans works for like 3 weeks, and then he's just stopped talking to me. And he's a great guy, but I can't talk business with him because I just people don't want me to do. Um, so and they don't, and it's a big risk, because it's like, oh, it's a startup and they're doing this thing, and so um, it was just such a hard sell, and it was a hard sell I could have made, but it was like there's so much compliance burden that comes with any client on the public company side. Uh, and there's so much compliance burden too for the private company. It's just a lot of work. It's work that normally you need a decent amount of people working on to do, because there's just a lot to do. And so it's always been just a whole lot of work to actualize it myself, because I just had like the starting capital that I used to hire a couple of people, and all that works on GitHub. It's like literally 2 issues of people that before the Gitcoin, they ended their bounties program, and so there was no longer a pool of developers that I could incentivize, which I did horrible at doing. I was just terrible at incentivizing. I was like completely wrong scope of project, had no clue what it would take to do things. And I had gone through in the past with the financial education, like manually going to the freelance sites and selecting people from applications of their prior work and their wage and what they say on a central hiring process. And it was just, I just knew it was like really bad. And I had that relationship with the editing team that just, it wasn't financially sustainable for myself, and I didn't like the dynamics. I didn't like that the creativity and the output was limited by my own ability to either pay more for the better talent, or to dictate exactly what I wanted, because I'm not going to know the best solution for some of these intricacies that are just nowhere near my specialization, and I didn't have the money to pay for the talent. So it was either work for 40 years and get the money for the talent and do it in a centralized way, or raise capital. I could raise capital, or just work on it until people cared, and nobody cared for years. And I was in a really, really difficult place before discovering the community. But man, when I found the community and I saw that everyone cared, and I literally didn't know anything about GameStop before that, and I was like, wow, wait, this is actually like a ton of people that really care. I mean, that was the thing that brought it through for me, and it was, because I was really struggling to justify not taking like a central job where I get paid money, and maybe like 10 years down the road I can finally have the money to do this. But because it was kind of the first time that year was the first time I was ever paying like rent, right? Like, oh, $1,200 just keeps coming out of my bank account, and there's nothing going into it. It's like, oh, wait a minute, this is how you get homeless, right? Is you don't have real work, or you don't have work that pays you, and so yeah, it was just, it was making it work, but I still haven't made it work because I still have practically no income. Thanks for guys for listening, for the sponsorship, and I appreciate getting to use that capital to kind of invest in the ways that I can into the technology, because it doesn't cover my utilities. So I just figure, I'll just invest it in anything that I might ancillarily need every month to keep things going. And this is personal income, it doesn't go to the syndicate account. And yeah, it's just a representation of the solution that the community was for me in validating. They talk about market validation, and I knew that the CFOs would pay me ungodly amounts of money to just fix Rule 144, but fixing Rule 144, it requisites so much governance work. It's unbelievable how much is at stake here. in that one epitome. It's like a, it's the tipping point of an iceberg of problems in the existing capital structure across so many countries, because it's all based on the same ethos of preventing unwarranted trading with issuers, underwriters, and man, what's the third prong of Section 2AB? It's the the custodians, the brokers. Yes, the brokers. Because all of the regulations based on brokers, and you have to rebuild it all from scratch if you want to do it in a non-custodial system. And so I always knew there had to be that DAO, like I said. And then the DUNA structure came out. It was like a godsend. But I wasn't even really intimately familiar with that until we found the community, because the community is the first step to having the DUNA, which is so key to all of this. And so it was definitely close before then, but man, you give me the DRS community and I'll be working this until it happens. There's not like a question in my mind anymore, thankfully. It's like, it's very clear that this will happen. This is how it's going to happen, and I will be here. My partner makes enough that I can get the roof over my head and the utility bills, and it's never going to stop until this is the system that the world uses for asset management. Alrighty. Yeah, Kayla's put in some work. Looks like after that we have some ancillary items. Really appreciate 6 Day Sentiments here, trying to, say, how can I help sign your first public company as a client? And, if signing the first public company was the objective and the bottleneck here, then I would be all over that every day. But there's a good book called The Goal. It's on management philosophy, and the central story in all of it is that they're like a Boy Scout troop, is the story part of it. And the leader of the group manages some, manufacturing plant, and it gets into, JIT and all these supply chain things. But the story in it is that there's this one fat kid who's really slow, and he's always at the back of the line and not doing very, he slows everyone down because everyone can only go the speed of the bottleneck, of the slowest point in the system. No matter how big the group is, you've always got to wait for that, whatever the slowest point is. And I can say that because I was the fat kid growing up, so it's like, it's okay. And the solution there was that you actually put that child in the front of the line, and so they have the motivation of everyone cheering them on and shouting them forward and supporting them, so that the slowest point gets across the finish line as fast as possible. Because when you're tailing around at the end and you're just sitting there alone, you're just gonna just slow down, right? And so that was the point, is making sure that all of the focus is on the bottleneck. And the same thing is true, and then they show the same thing is true in manufacturing factories. Like, you need to have the slowest point of the line. You always have to have that at maximum operating efficiency, because any minute that bottleneck is down on a production line, or any minute that the fat kid stops walking, is a minute that everything stops. And so that's the core focus, is just minimizing the bottleneck and putting the bottleneck forefront. And so the bottleneck right now is not getting the first public company as a client. It's this front end work, and it's been like that for years now, really. And so that's like a lot of community members have asked me how they can help, and the response is always, do you know front end developers? Because that's what needs to happen here. And I really appreciate the work that the 6 Day, I really appreciate all of the marketing efforts on social media, to get the name and the brand and try to get new clients in. But the bottleneck is not marketing, it's front end. So yeah, that's the answer there. And really, again, I can't express enough 6 days has been helping on that more PR side for quite some time without having any formal arrangement with the syndicate or with myself or anything, just doing it on their own. And that's the whole point of all this is just making things work so that anybody can participate in it, and that's the ideal end goal, because it's all on GitHub. That's the whole point, and anybody can go in and do whatever they think is the best use of their time to contribute to the efforts. And that's exactly what we're building with the DUNA too. It's all very connected, right? And so if we can get it right with the DUNA, then we can get it right with the syndicate, and then you kind of have a base of people interested. It's like probably a good thing. So I'm excited for the regulatory work that I can do, because the regulatory work deeply involves the community, which is directly applicable to growing a decentralized organization. That's good. I'll just put that there. All right. So next question from Chives. I am the sole holder of the syndicate shares, and it's not plans to dilute the shares to generate funds for growth, as I've said publicly. Why do I have this mindset towards private capital? So I really hope that I've been able to adequately express it here. It's something that it's just so deeply ingrained into all of this. It's a question of control, right? Because the private capital leads directly to control, in the sense of the infrastructure here, and it's just not something that once you relinquish that control. I think this is why Insol had what Insol did with the state level regulation of a monopoly as a central service provider is unbelievable, but it also kind of systemically made it so that it would be very challenging to have a global energy market, which maybe is arguably possible with nuclear developments in very remote areas and the common transmission lines, but there's still sort of that profit motive that keeps these utilities burning coal, for instance, when maybe it's just not entirely needed. And I can't. The public utilities, right? Like, the government doesn't need to be for profit. Certain transportation systems don't need to be for profit, and when you introduce the profit mechanism, it's like there's only three people here, right? There's the issuer, the investor, and whatever's in between. And if we say that TAD 3 and the syndicate are in between, then where do they get money if not from the issuer or the investor? And it can't be the investor. It really should not be the investor. So it's just higher fees for the issuer. And this is the exact problem that led to fragmentation of the exchange market, because the rates were so high from that central intermediary that it introduces competition to have a better rate. And competition for different forms of the financial system is not something that can happen. There is no competition to ACH, and there should not be every country should have the same payment infrastructure, and it just doesn't. And it doesn't because of the intermediation and the fees that are charged by the gatekeepers that control this infrastructure. And so for building the infrastructure new, you've got to relinquish and release all control and ability to gatekeep central fees beyond a regulated monopoly. Maybe it charges a fixed margin, something like that, which is kind of like the normal operating mechanism of any nonprofit. They want to have a little bit of extra capital in the bank the next year, so they raise more money than they need, and that just gives them security, because if you want to build the whole financial system on something, it should have fiscal security to the extent that it's needed for central operations that require payment. And this is what all the CCP regulations do, right? It's just that fiscal responsibility. And so ideally you can get rid of all of that, but the first step to getting rid of all of that is to not having a profit motive in the first place, which is how the custodial regimes work, just because the intermediaries are by and large member owned, and then the members are for profit, and that makes all the problems that we have today. So it's a really long argument as to why this is structurally very, very bad. But I hope that I've gotten the main points across tonight, and in conjunction with the chat that we had personally, because I know 6 days wasn't there that last DUNA meeting, but hopefully that'll kind of cover most of the bases there. As to that mindset, I just think it's a really important thing that we need to get right, and I don't. Can you get it right with a profit incentive? I'm not entirely convinced, and again, like I said, it might take decades, but if we're going to build something for centuries, then you can't have it not work in a couple of decades, and that's just the path that it could feasibly take if you have persistent needs to satisfy. Shareholders, not stakeholders, right? This is a meeting of the stakeholders, and it's for any kind of public good thing, it might just be necessary, and that's what the DUNA structure lets us do for the first time ever. And so I say let's treat this innovative regulatory policy with an equally innovative fiscal apparatus policy for something that it will be so important in the world around us. Okay, so next question is, in other public meetings and appearances, I've mentioned the possibility and the intention of donating all or some of the syndicate stock to a charitable nonprofit. Could I describe my thought process around this concept and how it might affect future growth and developments of the syndicate as a for-profit entity? And then there's one example of OpenAI, which has quite the convoluted, ownership structure with the nonprofit component, which acts as the governing body for the for-profit component, which is legally bound to pursue the mission of the nonprofit. I don't know if that's entirely true. There was that weekend in November, right, where basically the entire for-profit entity threatened to quit if the nonprofit didn't go along with the CEO spokesperson, right? So that's pretty centralized. It's not so much about profit for me, it's about centralization, right? Because I want a decentralized capitalist system here, and that requires, by definition, not being centralized on the capital front, which is just the long-term inevitability of a for-profit enterprise that aims to make number go up so much. One thing that comes to mind, I got this ring when I graduated. It's an engineer's ring, and it's a commitment to do what's right and make the best quality product, and there's an oath you say with it to actually serve people and not monolithic corporations. And I take that very seriously every day with all the work that I do, because it's not the standard for a very large swath of entities and their leadership. Like OpenAI's, respectfully, their whole leadership is Sam Altman, and who is more centralized than the one who taught and then kind of led a central startup accelerator for a decade off of running a startup that got funding and did some things. And I don't want to comment on their particular background, but it wasn't super duper successful if it weren't for the exit opportunity provided by a central allocator of capital deciding it was a worthwhile acquisition. So it's not profit that I care about, it's centralization. And that centralization only exists when you have the leadership that determines where all the funds go. whether or not there is a board of directors, which is a central board of a select few people that decide whether or not XYZ is okay. That's more the conversation of central regulation that we touched on, where it's only retroactive. Like, you can't fix things proactively. You can only penalize bad behavior. And when the board of directors tried to penalize the present leadership of OpenAI for doing very bad things on a nonprofit point of view, again, Microsoft just said they would hire everybody, and the board just caved and resigned. And can you imagine if the banking system or the stock market was in the hands of Microsoft or any other very behemoth public corporation? Like, that's dystopia, if you ask me. That's dystopia. Okay, so I think we covered most of the agenda items there, and I see we have maybe a just not in the file. Don't see any other questions on YouTube. I do appreciate everybody sending their questions and getting the conversation going, because it is so much easier than preparing a PowerPoint. I'm just horrible at presentations and would do very, very poorly if this were a meeting of shareholders where I had to describe our financial results, because they're very, very bad. Let me make sure that I got through some of the preliminary items from the original PowerPoint. There was this early question of kind of that interaction with the DUNA of how meetings will work, and I've always kind of had this idea of how meetings will work in a flat organization before I went to a decentralized organization, because a flat organization still has a board of directors. A flat organization still functions according to that board of directors dictate. And I think that's part of the big point of a decentralized organization, is that once the shares are donated and the governance systems are in place, it doesn't really matter what I say. I can't control the decisions that are made on the governance side. I can only influence them, and that's the difference. I can only influence what it is that happens by voicing my opinion publicly. I cannot control, by the definition of owning all the shares, that exactly what happens. And that's something that is built into the design around the DEX in the first place on Stellar, because nobody controls the rules of the DEX, and that's what makes it not an ATS. You can only influence it by contributing to the protocol development, and that's like completely different from the idea of the central servers that exist on today's exchanges. And it's just the whole point of decentralization, because decentralization is decentralizing control. It's decentralizing the ownership, and ownership is control. And so just a whole lot better with a more comprehensive cohesion between the community and stakeholders, and overall ongoing operations of operating through a transparent entity. I'll need to formalize that in some new bylaws once we do transfer the shares. And I would love to ratify that today, but I just haven't gotten around to writing the things there, because it is a lot of work to get the governance right. And I don't want to make everyone do a DUNA vote just because I didn't set things up properly the first time. Although it wouldn't be the end of the world. I want to get a good starting point, and I really haven't even cracked into rewriting those based off of conversations I've had over the years with some experts on the traditional corporate side. Meetings like this, they should be online. It's really cool. Yeah, part of the governance is like whether or not we want to be a security manual, which is like a blue sky thing on the states side, but it also has applications in other countries, versus superseding it as uh, an overarching framework, which is more the idea here. If it was centralized, it would probably need to exist through a more like legal directive authority point of view, and kind of the point of the decentralization work, right, is that you just don't need that anymore, and the technology can work for everyone equally just because it is built to work that way, and not built by the dictate of a board of directors that decides on what it is needs to happen, because anybody can participate, anybody can be rewarded over time, and everything is very transparent as to what's happening because you only pay people on chain unless they have to be centralized, which is just never ideal, and you're always kind of working away from that. It's funny, I've got a point on here of offering uh, consultation services to businesses in a central geographical location that I thought I would move to. When I originally made this PowerPoint, I guess a year and a half ago, and of course I did not end up moving there because my Kayla didn't get a job there, and so it was like me trying to force this edict and directive of where she needed to work, just to satisfy some weird part of me that said that it would be better for the company if I lived in this area. But wait a minute, all I do is work online, and it makes no difference. It makes no difference unless the model relies on backroom deals and knowing people and being at the right physical events, and that's just not the way that. That's just everything I hate about how existing capital allocation works. Gosh, I remember so vividly hearing the stories of these large asset managers that have absolutely horrible returns. It's just pathetic, the returns. But their entire model is based on just being in the right rooms at the right parties with the right people who have nothing to do but try to get excess alpha on their assets, which would otherwise sit in treasuries. And like, that's just such a terrible allocation challenge that really only gets solved when you have more of a transparent financial system. Transparency that just doesn't exist in the present definitions of some of these broker programs, and it's not going to be set through SEC filings, because the filings are they're for central orgs, and we need a decentralized org here, because you need decentralization to facilitate the growth of the DEX, which cannot be owned by anyone. You just can't own the trading mechanism, because there's always this in history there has always been, out of hundreds of years of markets, an unquenchable desire to extract revenue from that mechanism that is just unacceptable for a free market. Okay, touched on that. Yes. Yeah, I always thought of kind of wrap it up. Let's see. Now it's done. Good. Covered everything here. Yeah, all good. I've just covered them all. I really appreciate the community for having me tonight, and for chatting so long at such depth on such material challenges. I always thought that this would need to be a DAO and a nonprofit that I established later on, like years and years into the syndicate affecting change, and I would always have to personally custody all of the shares as a central arbiter of everything that happened, and sort of define exactly what it would be, because there wasn't a distributed base of people that really understood what they were talking about to control it. And it's such a weight off of my shoulders. Even though it's a lot of work to get it set up, it's so much easier now to envision and to see the path forward here, where there is not that rent extraction, and the users are actually part of that structure, and it's a structure that really sustainably incentivizes the ongoing work that will happen without a central dictate. Moving from flat to decentralized, it's so easy now, knowing that the community's here, and it's not something that I need to bootstrap again in another decade when the technology matures. Just can't appreciate enough your efforts, you, the viewer, everything that you do, and everything that the community does. Everyone is just incredible. I really, I just couldn't believe the fortune that we all have to find each other and to all care about this thing. And I can't wait to see where it all leads. So thank you so much for being part of this movement, and let's make it happen. Hope everyone has an awesome